Good morning. Welcome back to Forex Focus here on tastylive. I'm Glenn, joined by my good friend, Mr. Mike Henley. As our good friend Beth always says, Thursday night on a college campus, nothing like it. What do you got? What do you got planned this weekend, Mike?
Probably looking at everything that's happened this week. This was a massive week for data.
Oh, come on.
Massive week for earnings and in general.
Are you at least doing that in the sun? It's supposed to be 75 and sunny.
Yeah, we'll get out on the golf course hopefully. I mean, we got 2 months left of summer. Maybe we'll see how September is.
What about Lollapalooza? Kicks off today.
No, I'm
Not going?
far too old. Kind of a geezer now, too old for Lollapalooza. Are you going?
No, but that's just because, no one I'm particularly a fan of. And the Sabrina Carpenter tickets were too expensive, so not this year. Not even any after shows. Usually I like going to a couple of the after shows are better and better priced than going into Grant Park with all that mayhem. But we'll see, probably not. But yeah, before that, we have an action-packed week here across asset classes in the Forex space in particular. Yesterday, Fed announcement. What were your thoughts on that?
That was as expected, nothing really new.
Purple Tie Powell.
Another one of those, we're waiting for the data. Keeping Fed funds as is, not really too much craziness, and on half of the press conferences asking him his opinion on what he thinks of all the attacks from Trump. And then this morning I log in, first thing I see on the Twitter feed on our platform is him calling him too late Powell again, and then saying that he's too political to be the Fed chair, even though a Fed chair has never been attacked by in this manner. Even when you go back to the tension between Reagan and Volcker, it was never like that, and that was always behind closed doors. They
didn't
still,
have Twitter.
We're indoor. That's true. Maybe that's the difference.
They had Twitter. Reagan would have been. They had Truth Social. Reagan would have been all over him.
I mean, it's interesting to see. As us in our 20s, right? This is all we've known. So, since 2016, we were 15, 16 years old, right, with Trump in his first term. Then we got the 4 years of the craziness with Biden and these next 4 years. I don't know, does it ever calm down a little bit in 2030, 2028, or does it just keep escalating from here?
Do you want it to calm down?
I mean, as a trader, it's a great thing, right? But maybe at a certain point, you're like, hang on, guys, let's try to be friends, or at least try to communicate in a little bit more of a productive manner that moves the economy and everything forward.
We had two dissenters.
Yeah.
Are they trying to be the next Fed chairs?
Well, Waller is shooting a shot every day. Every time he hops on the mic, wants to cut. And then he just keeps descending over and over. So, I mean, yeah, there's that political aspect right now. But a lot of the other governors are standing behind Powell. And there was only two, right? I don't think there was too many.
No, just two. And I think they were pretty expected. But here, if we want to jump into this CME FedWatch tool, this is what we're looking at when we are looking closely at rate decisions. Now, no cut for the July meeting, now looking to September, so nothing in August. We have about more than a month and a half until this September meeting. And if you look at the probabilities here from futures traders, what they're expecting, difference from 1 day yesterday, big difference from 1 week yesterday, where we were only looking at a 40% chance of no cut in September. Now traders are pricing that in as the likely outcome at 60%. Does this surprise you given the kind of muted rhetoric, or is this, we saw a 5% pop. I was looking at this with Mike and Nick later yesterday morning. Saw about a 5% pop in this probability off of the GDP number alone. So not a ton of movement from the meeting, just reiterating that stance. We have PC inflation this morning, non-farm payrolls tomorrow morning. Do you see either of those events changing the narrative here for the rate picture looking at September?
I don't know if it changes the narrative, but I think maybe it reinforces it depending on what it comes in. I mean, the economy, we're sitting at full employment. Inflation's all right for the most part. I mean, it's still above target, and that's probably the main reason why they're not cutting, right? Because when you're sitting at the Fed has mandates, right? They don't care about all this political stuff going on. They care about
I don't know. Too
employment.
political Powell might be caring.
They manage the money supply, and it just to me is the economy is running hot right now, and then you want to cut rates on top of it. I mean, as a trader, if that ever happens, right, the opportunities are going to be absolutely be there in the market. For us in our 20s, trying to buy a house or anything in general, I don't know how that will affect it. It's my background in real estate, right? Like the first thing you learn, and there's so much historical data to back it up, is when you lower rates, then the price of a house goes up, right? Especially they keep saying there's all this suppressed demand. Won't that just shoot up the prices of housing even more? Where it's like you can look at new construction right now, and it's arguably almost a better deal in certain spots in the country to just build your own house rather than buying your neighbor's, which is just crazy that we've gotten to that point. So, I mean, when you look at the housing side of things, it's pretty terrible and bleak right now. Stocks don't care about it, I guess,
Not at the moment.
which is interesting because historically that has mattered, right? Will it ever matter at a certain point? Who knows? But yeah, that's really the only area I see weakness is like housing and construction jobs for the most part, and then like the trucking you see. I want to say around like 20% or so of trucking is transportation of housing materials. So when people look at this trucking data and they're like, oh my God, it's cratering, that's not the biggest thing because we see that in the housing. So proportionally, probably the dudes that move the materials around the country, right? They're going to be bad as well. That's how I look at that. But certain the other parts of our economy don't care, and they're running hot.
So no rate cuts for now, keeping the target rate well above 4% at 4.25 to 4.5. But let's get into a couple slides real fast before hopping into the platform and getting to the day's price action. But just wanted to check in this morning on daily FX movement expectations. We monitor daily. We monitor the Forex space daily. Look at these prices a lot, you and me, Mike, but for people that aren't looking at it a ton, I think the couple of numbers we've put together today can kind of contextualize, give some good expectations for checking in perhaps periodically to FX markets and what to expect over a daily time horizon in terms of price movement. First, just want to cover real fast what volatility is in Forex trading. A very, generic answer here with just explaining that volatility is the variance of prices. Here we're going to look at daily ranges, but can be over any time frame. And all high volatility means is that you have the opportunity or a baked-in expectation of wider distribution of prices. So that can mean more opportunities for trade entry, more prices for trade exit, larger ranges if you're scalping intraday or over whatever time horizon. And here in the summer months, we tend to see volatility dip. But in this action-packed week we have here, with all of the economic events on the calendar, we've been seeing a slightly more volatile than expected for perhaps the last week of July. And we're going to be looking at standard deviation. So we pulled up a little bell curve here. We calculated the daily standard deviation of daily price changes. And so what that'll tell you is it gives you a pip target, a number of pips of what to expect roughly 68% of the time, the range that these pair by pairs movement can be expected on a rolling basis. So this can tell you when you see a move greater than this. That's not the most ridiculous thing, because it happens not 68% of the time, but the other, 22, 32, 32% of the time. And so that can give you just a little more context for, is this one of those 32% times where we see a range that is wider than what we'd expect, or is this an opportunity for a contrarian play? You see a move wider than that intraday. Is this an opportunity to speculate on this will be one of those 68% occurrences, and this will come in a chance to play the contrarian play? So depending on your opinion, opportunity both ways, but important context to know where we're coming from. So here I've put together a little heat map of popular US dollar pairs, the daily price changes, 1 standard deviation moves in pips. We're looking at euro dollar, pound dollar, dollar yen, dollar Canadian dollar, Aussie, Swiss franc, and New Zealand dollar. I put together 3 time horizons here. So looking at 1 month, 3 month, and 6 months. The trade-off here being the less time you put in, the less observations. So the less robust this statistic is possibly, but also the more sensitive it is to the current environment. So maybe you're thinking 1 month, we are still in a summer month, maybe that plays into volatility, or you look more to the 6 months where you're saying, okay, we need more data in here, looking over a 6-month time horizon. This is what I can expect. And 3 months, perhaps a little Goldilocks action there, right there in the middle, not too sensitive, not too outdated. What are your thoughts here looking at this heat map, Mike?
USD JPY, that's not a really unsurprising thing just from watching the price all the time with how much news that has happened. The carry trade unwind last year in August. Just seeing the massive volatility in USD JPY every day. So that's not surprising. Kiwi surprises me a little bit. NZD USD. Very much a tighter range than I expected on that. Aussie is not too surprising there. Euro is the fact that Euro is higher than Aussie is interesting to me. Yeah, as expected, except for those Australasian pairs. I would expect those to be much bigger, especially like more than the quid or the euro.
Yeah, then you have to factor in, the actual exchange rate at the moment on a percentage basis. Perhaps don't have the numbers right in front of me, but 30 pips in an Australian dollar pair, I'd speculate is equal and maybe even greater than 50 pips in pound dollar, because the pound dollar trading at 132, $1.32 right now, and that Australian dollar back under 65 cents. On a percentage basis, some of these things start to even out, but you're absolutely right. Dollar yen, the biggest mover, but still across the board, volatility coming in from that 6-month time horizon to the 1 month. 6 month, definitely includes some of that April tariff volatility. 3 months, I think we're out of the woods there with July, June, and May. So no April shakeups in that data. But it's nice to see. We ran these numbers, I want to say last fall, and we got a print of in the 30 handle for the euro. So we've seen this be a lot tighter. And so it's nice to see that there is still, a scalpable range out there, getting some movement in a lot of these pairs. But yeah, it's surprising to me that Swiss franc moving more than the Aussie dollar and New Zealand dollar. Historically, dollar Swiss franc, a less volatile pair than some of those commodity currencies. So, but that one also coming off of historic price extremes. So, and moving a ton with the euro dollar more than I'd say it had in recent years. And then checking in on non-US dollar pairs, pulling up the most popularly traded non-dollar crosses. Anything stick out here? We've got, I mean, a big change in that Euro Aussie over the time horizons, but looks like that's leveling out. That 6 month is perhaps a little extreme. Anything else call out to you here?
Aussie was the biggest expectation, I would say, that I see from there. Not too surprising or anything like that, but GBP, JPY, you just look at the price of what that pair is in general. So the amount per pip,
Right.
that's not surprising to me at all there. Would say it's really interesting. I would expect Aussie JPY to be higher than Euro Aussie or something like that, or at least closer to it. But the Euro Aussie is pretty surprising that that's such a big difference there compared to those other ones.
Yeah, I mean, euro pound to me, that kind of validates, highly correlated pairs or highly correlated currencies. Not a lot of volatility there. What is surprising to me is kind of how muted euro yen is. Perhaps if you're looking for a less volatile yen pair to trade, that euro yen is, probably has similar dynamics to dollar yen, and yet lower per pip movement. But yeah, so some interesting numbers just to try and contextualize a little bit. And just wanted to finish up with some key considerations, because when you're looking at just per pip movement, it's easy to say, oh, I want to trade that one because it has the highest pip movement. But a lot of other variables that have to be accounted for when actually trading these pairs, such as the margin requirement, price action, the actual exchange rate into US dollars, because as US traders, all of this will shake out to US dollars. And so a lot of variables there, but a short little example here using the 3-month daily standard deviations. Looking at if you had $5,000 of margin available, you were trading Aussie dollar and dollar yen, two different pairs on the standard deviation spectrum, yen being one of the largest, Aussie being one of the lowest. But when you look at the margin requirement, Australian dollar only commanding 3% of buying power versus that 5% in the yen. That means that your maximum trade size can be almost 2.6 lots of Australian dollar, as opposed to just one lot of dollar yen with $5,000. Your dollar per pip movement is a lot bigger with the Australian dollar pair. And so when you plug in what you can expect in a day, that 28 pips versus that 78 pips, you actually still come out ahead in terms of maximum profit or loss if you were to capture a whole one standard deviation move. And so just a lot of things to consider when you're looking for which market to trade. Anything else there, Mike?
No, that makes sense, right? Because margin requirements based on contract size of the first currency, and Aussie is worth less than $1, right? One Australian dollar is worth less than one US dollar. But the thing is, when you look at USD JPY, right, base currency is USD for that. So that's what's taking that. It's 100,000 US dollars at 5%, right? So you're getting 20x leverage with USD JPY, and then 33.3 repeating X leverage with Aussie there.
Yeah. So there you go. That'll do it for our slides today, covering daily FX movement expectations. So now let's check into the platform and see what we're looking at early this morning, coming off the heels of a Fed announcement right before we get, come on, calendar, right before we get some personal income and core PCE inflation, the Fed's preferred inflation gauge. Fed just spoke. We won't hear from them for a while, but We're getting some good data this morning here in 39 minutes. And overnight we had a Bank of Japan interest rate decision after hours. We had some Australian data points come in. Nothing much to dissect from this Bank of Japan rate decision.
Yeah, nothing too crazy there. I was watching it last night and started to strengthen running up into the rate decision, and then looks like sold off. Dollar got stronger once that rate decision actually happened. Nothing really too crazy on that meeting. They just said we're going to maintain rates. We're expecting growth and inflation to tick up, but it's within our models. Nothing crazy. So we'll see if the nothing crazy part is actually true, or if it does get crazy, which would be interesting there. Yeah, USD JPY.
Crossing 150 early this morning.
Well, every time we pull it up, 142 or 150 back and forth there every week. But I think what are we back? Yeah, right at the top of the range. Actually broke out of that top of the range and got rejected, retested, and then back to 149. Do we get a break off 150 here, and then we're back to 160? Maybe touch 170 or
170?
Or is it? Nope, we're going back to 142. So it should be interesting there.
Definitely a key psychological inflection point through recent highs. Now back to March price levels. So very interesting that the yen coming out as an underperformer as a result of their interest rate decision. Look no further than when we look at these all FX pairs checking in here, looking at the percent change column to see what's moving the most. What sticks out to me is not this dollar yen, but this euro yen. Big bid here, looking at the daily candle. Euro falling off a cliff this week. On the heels of, I suppose, the trade announcement, the U.S.-EU trade announcement that spurred such robust euro weakness, not only against the dollar, but here looking at the Japanese yen as well. We're up almost a percent already today, this euro yen bouncing back. So if you're looking to take the U.S. dollar out of the equation, don't want the event risk of some PCE numbers, some non-farm payroll numbers this week, this euro yen giving you a very different range, a very different chart from a price action perspective. Any speculation here? I mean, we've developed a nice range here. Where do you say we close out the week at 171 right now?
It should be interesting, right? Because I want to say, like, in the BOJ schedule, they still plan to hike more. They did pause for now, right? But maybe at a certain point they hike. And then Euro's kind of in that we're pausing for now, wait and see. Same bucket as the US. Inflation's nothing crazy compared to like 2021, 2022 levels. In the US, Euro, it's a little bit hot. UK, it's a little bit hot, right? But maybe there is some opportunity in this pair. I know I follow some Europeans, and they were quite upset on that trade deal on Sunday that happened. Thing with all these trade deals is none of them I don't even think are signed. Like that, this isn't like the word of law yet.
What?
And then I see it come out like the BOJ and the EU have made promises that when you look at their GDP or how much energy they use and the numbers, where do these like massive hundreds of $billions of investment come from? Is there even demand for that in the first place? Or is it just all talk for crazy headlines? I like things that are like absolute coming from government officials.
That's a big ask, Michael.
Because that's their job, is to do these things in the first place. And then two, you're really speculating, right? And you're taking a major risk that people chicken out on things or something else happens in the meantime that reverses it, right? But when something becomes law, we've seen bureaucracy, right? It's really hard to overturn all that stuff there. So I think maybe other traders do consider that as well. But That's just how I look at it for the most part. I'd rather, I don't really listen to what people say because people say a lot of things. It's more, let me see what the law is and what they're actually doing in the underlying, not just the words that they speak.
Yeah, I think Chris Vecchio was telling me the other day that whatever energy amount we promised, or the EU promised to take from the U.S. would require all of our energy, and us not to give it to anyone else.
That's what I mean. It's just unrealistic.
But yeah,
some of these things.
We've got some consolidation here in this euro-dollar market after a busy week. After opening the week above 117.5, now looking under 114.5, a giant 2.5% move lower, but now consolidating here. So if you were looking at our daily ranges, from yesterday's synthetic close price of 142.3, then depending on the direction, you could say on an inside day we have maybe upwards of 50 pips in either direction to go if you're looking to speculate on further U.S. dollar strength or a euro comeback like we've seen against the yen in that euro-yen pair. You can kind of start to get a little more context around what profit expectations would be for a day. You're looking at still near 115 is in play, and still under 114 is in play. So haven't been here in more than a month in this euro-dollar pair, and now trading through lows of mid-June, and haven't been here since a big move upwards, coming on the way from 112 to 114 here. We'll see where this one settles. Other than that, that's our biggest mover of the day in dollar pairs, but we're seeing some dollar weakness after a pretty strong first half of the week. What do you think? Could this PCE inflation number reverse any of this?
Yeah, maybe, right. If it comes in really hot, then the Fed might want to even stay for longer, higher for longer for rates. But if it comes in super cold, then the question is, does that give them room to cut, which could possibly spark a euro rally against the dollar? Should be interesting to see what happens. I never try to guess any of these numbers. One, because it's them surveying random people sometimes. And then two, I think when they can't get the data as well, then they just use historical averages or estimates just to input it in there. So should be interesting. I really think in this environment, anything can happen at any time because we're seeing things that have never happened before. So opportunity, I think, is there.
There you have it. Dollar moving early this morning. We've got some economic data coming up in about 30 minutes here. But before then, we've got Tom, Tony, and Vanetta up next on Tasty Live. So stay tuned after this break.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. It's an estrogen takeover with my girl Julia Spina holding it down. I'm Vanetta Logan, and the ogre over there is Tom.
Trying to get my hat together, get my act together.
It was looking a little weird.
Is it a new hat? Because it doesn't look broken in. I don't know how you unbreak in a hat, but
Perfect.
Is your head getting bigger in it swells in the summer?
Yes.
a little bit. The hat notices. So
A
do
little
we.
bit.
No, Julia fed me food this morning, and she got my head all
No, whoa, hey. Whoa.
sugar buzz right now.
Nope. Yes, Julia brought in, would you bring in the Italian cookies?
Italian cookies, yeah. It's a Friday. It's estrogen party time. Market's down. Time to clown. Best kind of Friday, yeah.
Yeah, all all of our cycles synced up.
My favorite
Especially
Italian.
Tom.
My favorite.
He's finicky.
What is your favorite Italian cookie?
Well, they're the Italian cookies from D'Amato's, and that's where
I know, but of the variety of Italian cookie, like, do you like the ones with the little
when
raspberry or the apricot or with the chocolate or with the sprinkles or the...
When I order the cookies there, because they have a million different cookies.
Right.
I say just give me everything with chocolate.
Oh.
That is exactly what I asked for, with a little sprinkling of the
Oh, they
fruit
gave you a
stuff.
couple of like fruity ones.
I wanted a little, because I'm
But
like,
they
what
give
if
you.
you know.
I asked for everything with chocolate. That's my whole thing.
Yeah, you like it with chocolate.
Sandwich cookies and the dipped.
I got to go back out there. I only had one, but when I get my coffee, when I get off the show, I'm going to have some.
Problem with that place is, okay, I go in for the cookies. I
And then you see
I end up with so
everything.
much crap, and it's like I'll take that pizza bread. I'll take that piece of pizza.
Don't they have like a viral chicken Caesar sandwich at
They've
D'Amato's?
got a million of them.
they got everything. They got
Yeah, I
Holy-
see it on TikTok.
Ever since she went on
Holy-
TikTok, she's blown the place up.
That's great though. Good for
Good for them, yeah.
Yeah, good for small
no.
The
business. Yeah.
Chicago staple. Yeah, I love that place.
No, I know, but I'm saying it never was like as crazy crowded as it is now. Now it's insane.
Someone was filming in there when I was trying to grab cookies, and they were like filming all the stuff.
Yeah, because she's made a big TikTok star of herself.
I don't know. I just think it's cool because like when I was like a little girl growing up in like rural Indiana, like you'd read like books, you know, about people who got to like live in big cities.
Looks Sherry?
No, you read books about like people that like live in big cities and they're like, oh yeah, I like to go to this Italian place, D'Amato's. But now I live in a city that has an Italian place called D'Amato's. And it's real. It's just fun. I don't know.
The Italians can be very on the nose.
I get confused by that place because I like Bari, which is next door.
Yeah.
And I'm like, I like the subs at Bari better.
Yeah.
And I like,
Well, their bread is good. I like
and I like
Bari's
the
bread.
butcher I like the butcher at Bari, and then I go back and forth.
These are not real
No, I
problems.
know. I have probably gone up and down those stairs into both places like 100 times.
Yeah.
That's a
My
pretty good
flower
problem.
guy's across the street the other way.
I was gonna say.
So I got
also
like,
passed
I
by
do
the
all my
flower-
shopping right there.
Isn't Who's Your Mama on that street too?
It's the other way.
Oh, the other way. Okay.
No, but Steve's the flower guy. It's right there.
Okay.
So I got all my stores like within a block of each other.
That's pretty good. Julia, how have you been?
Oh, I've been surviving. How have you been?
How's your summer been? How's your Black Cat summer?
Black Hat Summer is.
Julia's been off of gallivanting through Europe.
I have. Yeah.
Well, that's what I'm trying to ask her
Yeah, I
about
just-
her
I
adventures.
just got back from Portugal.
Wow.
So much fun. It
I
was
want to go. Were you Porto, Lisbon, all of it?
all of it. Yeah, Porto, Lisbon, Cascais, I think is how you say it.
Okay.
Kind of a beachy town.
What was
vibe.
your favorite?
Kosh.
That's what they say, but I think it's Cascais. Someone corrected me
It's
on
pronounced Oshkosh, and it's in
that.
Wisconsin.
Gosh, my gosh.
No, just kidding.
Yes, but no, it was great. I don't know if I have a favorite. Just the seafood. Like I love.
Oh, the fresh, yeah, like the
It's so
Spanish
good.
seafood, yeah.
I will say, like the sun. I usually don't have a problem with sun. I get the base tan and I'm usually fine. Sun there, very intense.
Yeah.
And when I got there, I tried to find like linen clothes because I
Sure.
was worn like athletic wear, and I'm like, this is not going to work. I tried to find linen clothes, and they just don't
Sold
sell
you tried to
black.
find linen
They don't sell
clothes.
any black in that country.
Well, of course they don't sell black, lady.
It's like white and beige linen at pretty much every store, and I'm like, I'd rather have like a heat rash than wear white. So
Julia, oh, we were so close to this.
that was
like,
the closest
fashion
I've ever
break.
gotten. Yeah,
Oh.
closest I've ever gotten. Yeah. But
Just walked into like a nice surf shop and said, "Excuse me, do you have any black gowns?"
Do you have any funeral
Full
shrouds?
Like, what do people wear here for a funeral?
Yeah.
it cannot be overstated how many stores I went into, and I'm like, oh, this is the one, because you want something loose, breathable, like
You should consider your next vacation maybe to like, I don't know, Afghanistan or something.
And now I've actually always wanted to go.
No,
Maybe not now, but-
Transylvania. Like a Transylvania.
So yeah, no, the shopping was a little. I mean, the antiquing was fun, but yeah, buying the clothes didn't have a lot of luck there. But everything else, like the seafood was amazing. The people were super nice. We walked so much.
Sure.
We hit like 30,000 steps the second day. Like
That's the beauty of the European vacation. Like,
yeah.
all the food is so fresh.
Yep.
You walk everywhere. You come back. You lose weight, and
Not
then
me.
you're like, You didn't lose weight when you went to Europe. Everyone loses weight when they go to Europe.
What?
Yeah.
I lost weight.
I lost weight.
In Europe?
I'm down
Yeah.
4 pounds just
Yeah.
getting back.
Really?
Yeah.
Yeah, because you're walking
You're
every
walking
day.
everywhere.
You're eating
but you-
fresh, unprocessed American food.
You eat every meal out.
We climbed 85 flights of stairs on one day, which is not that much, I guess. Like,
85.
Yeah, if you're going up into a church tower, bell tower.
well, it's also there's a lot of hills and like especially Porto. We walked around a bunch. It was like 85 flights of stairs throughout the day, basically,
Bonkers.
equivalently, right?
Yeah.
Which is awesome.
Hit
My
quads.
that's my annual stare.
It's
85 a year.
85.
85 flights of stairs a year? That's a lot.
Yep. Oh, you might appreciate this. Okay, so I went with a friend of mine. It was a Portugal's trip,
Love it.
which was super fun.
Instantly, I want shirts.
I mean, we kind of wanted to get shirts. This was her first time out of the country, so we're like, let's make it a whole girls' trip.
Oh, that's
Stayed in
wonderful.
Palaces. It was so much fun, and every day we had Portugals. So
Portugals. Hashtag Portugals.
Tom's already checked.
I love everything about this.
I think our Portugals, one of our Portugals was to eat at 7 restaurants in a day. Like just get like 7, like go to 7 restaurants and get like 7 small things just so that we could eat throughout the entire day, which is I think a pretty good Portugal. We failed because every time we got to a restaurant, we just wanted to order too much food.
Oh, yeah.
But we tried.
You tried.
Portugals every day. Yeah.
Oh, I love that.
It was fun.
See, that sounds fun with the girls just having a good time.
Great country for a girls' trip.
Yeah.
Floral, lots of, it's very, yeah.
Yeah, it's kind of like Eat, Pray, Love vibes.
Yeah, which was fun.
Oh, I love that for you. This is it, Tom. Lock in, because we're gonna do this for
Too
3
much.
more hours.
Too much chick chat, too much girl stuff for me.
Girls,
Oh,
chat.
no, that sounds awesome. But did you have any paella or do you get like
A lot of
more
sardines.
seafood?
A
Oh,
lot of sardines. I had seafood for like pretty much every meal. So
Yeah.
I had like chorizo mussels, like Spanish mussels.
Yeah.
I had a lot of cod, a lot of sardines. They were,
I like grilled sardines.
dude, they were really good.
Yeah, because they're the big giant ones.
Yeah, they're big and they're
Yeah.
grilled and like
Yeah.
sometimes they're like almost marinated, like marinated for a couple
Well,
hours.
it's a lot of olive oil, different kind. Yeah,
Which
whatever.
is super good.
That's like my favorite, like appetizer.
Yeah, it's a really good. So this was my first time having like the big sardines. So that was fun. A lot of
Whoa.
oysters.
yeah.
So I don't know, a lot of mercury. I'll let you know how my blood tests go next.
I think you're gonna be fine.
Maybe, probably,
You're
right?
you're gonna be fine. It's all good.
Yeah.
So
that was the vibe.
wonderful.
It was super fun.
All right. Well, good for you. All right. So what did you get up to,
Yeah.
crotchety Tom?
What did I get up to last night?
Yeah.
Well, I didn't go to Portugal. That's a good question. I don't know. I didn't really do anything because I have to go out tonight and
Ooh, where are you going out tonight?
going to a French restaurant.
Ooh, France.
Yes, a French bistro. And then I got plans tomorrow and then Sunday. So it's gonna be a nice weekend.
It is going to be a nice weekend, but we have the worst air quality in the world.
Yeah.
Why is that?
Canadian wildfires.
Canada
So,
poisoning us.
yeah. I mean, to be fair, we
Is that
kind of
what-
deserve it.
I'm not arguing that.
They're not mad. They're not. They're not sorry.
Yeah. But my best friend from Indiana, she took her 2 daughters to night 1 of Lollapalooza last night. So I was texting her because her daughters, I think they're like 15 and 13, and they really wanted to see Tyler, the creator. And so she went with another mom
Oh,
from
Lollapalooza started last night. I thought it was today.
Lala started last night, so they drove over and but you can watch on Hulu. So you can it streams live on
cool.
Hulu. Yeah, so I watched a little bit, and she named all the acts that they had seen that day, and I was like, I have never heard of any of these bands.
I don't know.
People showed up in like gas masks.
Really?
Because the air, it was. I felt it yesterday.
I felt it too. Like I just had to walk not even that far, and I was like,
I felt it. Yeah. I like walked, like around the office yesterday, right, picking up the cookies and such. And I was gonna go work out afterwards. I'm like, oh yeah, I get to hit the gym. It's been like 2 weeks, and I want to go do it. And then I just I couldn't. I'm like,
Yeah.
I feel it, and yeah. So I would show up to Lala in a gas mask. I think that's also a stylish choice.
yeah, kind
Especially
of
for
like.
Tyler the Creator show.
Yeah, there you
sounds
go.
Perfect. Yeah.
Yeah. It's just kind of Mad Max punk rock vibes there. I don't know. Are you mad at the Cubs because they didn't really do anything by the trade deadline? Some
I'm not
people,
mad at
sports
the-
radio, are mad. I don't know. I don't really care.
Well, of course, sports radio's mad because the Cubs are one game out of first place, and you want
Right, and then they're saying they could really be making a run, for the world. And then
Well,
there
you
were
only
things
get-
that they could have done to amp up their roster, but
you only
they
get
didn't.
so many chances to win a World Series. And if
Yeah.
you think you have a good enough team, you have to go for it. But they didn't want to part with their number one prospect.
Oh, well, then that makes sense.
It depends. If you're a fan,
Yeah.
you don't care about prospects. You care about winning.
Okay.
And if you're not a fan, then I shouldn't say that. If you're a fan, you want to win now.
Sure.
And if you're the team, you care about 2, 3, 4 years from now. So it's a tough situation. But that's why sports radio is up in arms.
Ah.
But
I see.
sports radio is always up in arms because if they weren't, they'd have nothing to talk about.
Then there would be nothing.
They're
Right.
up in arms about everything every
Right.
day. It's the end of the world as we know it on sports radio every day.
Are you going to go to a Cubs game? Another one this season?
Oh,
or-
yeah. I'm looking at a week from Sunday.
Oh, who do they play?
I think the Pirates, but I'm not sure.
You don't know.
Yarg.
Arr.
Yarg, matey.
Yeah. No, I'm not sure, but I'm getting tickets.
Okay, hey, speaking of getting tickets, if you are going to come to the At Work by 11 show here in Chicago and subsequently visit us here in the office, we have some rules. It is not just going to be a free-for-all. Look at me. It's not going to be a free-for-all.
I like free-for-alls.
You need to sign up for this, okay? Or you're not going to be allowed into the building, and Tori will personally escort you out, and none of you wants that. So here's how it goes. So Thursday from 12 to 1, go to support@tastylive.com, and then you'll get a form to fill out. Again, it's all free, but for safety reasons, because we're not unlike our other building, we're not the only tenants in this building. So there's just some rules and regulations we have to about making sure people get the clearance they need to come to the building. But we are happy to have you, but you just got to do it the right way.
Yeah, it's a limited number, but we'll accommodate as many people as we can for
Right.
on Thursday, August.
And again, the time is from 12 to 1. That doesn't mean at 6 a.m. when I get here that you're also here. No, it means that
Oh
at
my
noon
God.
that you were here at noon. And that means it's at 1 o'clock, then it's over. It doesn't mean you're here till 7 p.m. So 12 to 1, you got to sign up, and then we'll be cool.
You'll be hiding anyway.
I can't hide in this office.
You'll find a way.
I will find a way.
The dress does make it a little difficult, which I love, by the way. But yeah.
Sleeves, thank you very much. Anyway, hey, well, we're going to get this show on the road. Bat is on vacation today. Do you know did he go to Florida, or is he just taking his son to another lake house?
He's with his people.
He's with his sister. I think it's his sister.
No, I think he's traveling today.
Oh, okay. Wasn't sure where he is. But yes, Tom is stuck with the ladies, and then later he will be joined by TP.
I have Julia till 9.
Yes.
And then TP till 10.
So I said later you'll be joined by TP.
Yeah.
Okay.
I'm just putting it out there.
Okay.
Julia only has an hour and 20 max of me, and then she has to move on.
I got like a 15-minute max.
I just got back to the country. I don't want to get charged with anything. I'm trying to play it safe. Ease back in.
Well, we got a great show for you today on this fantastic Friday. At the top of the 8 o'clock hour, we got Jamal. He's also back from his adventures, and he's going to recap the weekend stocks. We had some Fed minutes. We had a ton of big Magnificent Seven earnings. Some GDP, I don't know. Jamal's going to recap it all. Steady as she goes is what he has titled his segment for 8 o'clock. And then 8:40, Fast Market. Tom and Julia are going to do viewer-submitted trades. Viewers write in with their trade ideas, and we're going to see what we can do. Kind of a weird volatility environment for trying to put on trades that aren't smack dab in the middle of, earnings. But our viewers are very insightful and creative, so hopefully they will come up with some good trade ideas. And then 9 o'clock, our market measures, intraday scalping zones. What is the best time intraday to do a little scoopy?
Little scalpy.
Yeah, no, it's a good piece. It's something different.
Cool.
Okay. That's good.
People ask all the time about scalping zones, and this will be a fun piece. And we may even bring in the young kid.
Thomas.
Yes, who wrote this piece. It's his second piece. He's a really smart kid.
Oh.
And What? What do you want to say?
No, I think that'd be fun.
And
Bring back to the research
he's very excited about this one.
Do you know that yesterday was National Intern Day?
Did not know that.
Why in the world would he know that?
Because I run our socials and I'm full of weird calendar
Does that mean they each have to pay me $10 or something?
No, well, we made a social post celebrating all the Tasty, because we have a wonderful intern program here at Tasty between Tasty Trade and Tasty Live, and we have a good group of kids this year.
Amazing how good kids you can get with just free lunch. Great.
No, we pay our interns.
Oh.
That's very effective on me, so I can't. I can't talk shit.
But Thomas might come in then for our 9 o'clock market measures on intraday scalping zones, and then big boy Scott Sheridan counting down all the top trending tickers over at Tasty Trade. And I believe are you taking questions, Scott?
It depends. I think we've got a lot to talk about.
With you, Scott TP, or you just have stuff to talk about? Okay.
I'm not sure. We'll see.
All right. Well, TBD then for that. But that is our run of show for today. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news,
Across
the wire, leading story, top story, just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. Today is Rabbit. It's a fantastic Friday, August the 1st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
So ready for the news.
It's a Swiftie holiday, because Taylor has a song called August, and we're like obsessed with it. And so happy August for those who are living for the hope of it all. To all my Swifties out. Anyway, okay, that's fine. I'm trying to keep you cool, trying to keep you hip.
Oh my.
That today's a Swiftie holiday. That's it.
That does not make you hip in this world. Just so you know.
Kind of. I mean, I wouldn't want that smoke from Swifties.
It would make me into you.
Okay, well, honey, you wish. Hey, we're going to get our July jobs report in about 11 minutes. And the report is expected to show hiring slowed while the unemployment rate ticked higher. The Bureau of Labor Statistics is going to come out today. And economists expect non-farm payrolls to have risen by 105,000. What's the expected move for the market today?
Was about 50.
Okay, what's it doing already pre-market?
Down 60.
Oh no. Uh-oh. What do you do? What are you adjusting? What are you looking at? And what does this mean for the number that's going to come out in 11 minutes?
It probably doesn't bode too well. It probably means it's going to be a little bit of a dark opening. And NASDAQ down 250, S&P's down 60. It's a pretty ugly like pre-market.
Sure.
But I have been nibbling on the bonds this morning. So we did buy some bonds, did buy some notes, and I'm a buyer lower.
Okay.
So if they get down around 113, I'll buy more.
How about you, Julie? I know you're not a big bond slinger.
I'm not a slinger. I'm not a slinger of bonds.
Slinger.
I've been scorned too many times.
Sure, yeah.
Like today.
Yeah.
Home of the slinger. You know what that is?
What?
Home of the slinger.
No.
Home of a.
Oh, it's a diner on the north side of Chicago.
Oh, okay.
I should know.
They have a hamburger called the Slinger.
Okay. I will add that to my file. Go ahead.
Files and such. No, but the indices are looking a little attractive this morning. On a down day like today, when we're down 1%.
Yeah.
Market, I know how much you hate percentages, but that's a big move, relatively speaking.
It is.
I mean, it's
Overnight
a big move pre-market, but you got a bunch of stocks that had really bad earnings last.
All right, I'm going to get to it. Give me 2 seconds. Hold on. 2 seconds. Hold on.
Ruin this.
Hey, real fast in commodities, the EU is considering pooling demand from companies to buy more U.S. gas. The European Commission could pool demand from European companies to buy more U.S. liquefied natty gas as part of their efforts to reach a pledge to buy $250 billion in U.S. energy per year. Let's talk natty gas.
It's in the crapper.
Okay.
$3. It hasn't had an uptick in about what feels like a year.
What are you doing in there?
We're short premium.
Okay.
But we're a little bit long delta.
How about you?
I was saying, I feel like natural gas is like tequila. You either love it or hate it, depending on how college went. So I've had very good experiences with natural gas and very bad ones.
Okay.
But again, on a day like today, when it's like down 1%, and vol is spiking, especially with like not always the most volatility across like the indices, with the VIX still being relatively low. Like that can be very attractive, especially for futures options with
Sure.
margining.
Right.
So on a day like today, I'd maybe consider doing like very tiny little position on natty gas.
Okay.
Yeah.
That could offer some opportunities, like you said.
Mm-hmm.
Hey, the SEC debuted Project Crypto yesterday, an initiative to modernize securities regulations to allow for crypto-based trading. The announcement comes amid a surge of interest in tokenization. Are you excited about the financial markets being on the chain, not off the chain? I'm sorry.
Yeah, I think that's a little bit of. Yes, I think I am excited about that.
What are digital assets doing to round out
They're
the week?
kind of on their butts for.
They're on their butts.
Yeah, Bitcoin's down to 115 and change. It's down 1,700 this morning.
All
And
right.
1700, but still seeing it at the levels that it is currently at, like never ceases to blow my mind. It's at
Sure.
like 115, 735. Like, so that's like, I mean, yeah, it's had quite the rally, but the last couple weeks it's been on its butt.
Let's get to some of the earnings from overnight. Apple reported their biggest revenue growth since December 2021. iPhone sales grew 13%. Apple announced they've sold over 3 billion iPhones. That's bananas. Apple CEO Tim Cook said Apple would significantly grow their AI investments and that they are open to M&A that accelerates their roadmap. Apple's revenue came in at $94 billion, blowing away expectations of $89 billion. Great earnings for Apple. I think it buys Cook some time because Apple has been underperforming the rest of the tech stocks, Magnificent Seven, whatever. They're a laggard in the AI thing, whatever. It's just and. But these were the numbers that they needed. What did you guys do in Apple?
We're short premium in SEP, not really anything in August. So we're going to be fine. Stock's up $4. The expected move was like 8, let's say.
Okay. Oh, great.
Yeah. It was a kind of a really small expected move.
Okay.
Not like Apple.
You don't really trade earnings, right?
I don't trade earnings. Sometimes I'll do like a diluted earnings trade, which is like trading maybe like the NASDAQ or something that's
Okay.
more tech heavy, for
Yeah.
example, leading up to major tech earnings. I didn't have any kind of like diluted earnings plays on either, but I mean, Apple just like needed a win. 'Cause
It did.
they boofed the Vision Pro,
Yeah.
Apple Intelligence. So like, which is like weird for them to miss the mark that bad for that long.
Agreed.
I think like in the past year, they're down about 5%, just like overall. So like good for them. I'm like about time. So yeah.
But also, too, sort of like the magic behind these numbers is like, okay, are people buying iPhones because they're trying to front run tariffs, or are people buying Apple stuff because they're like, oh, we like Apple? Do you know what I'm saying?
For
Like,
sure, yeah. I think
like-
a lot of these like stronger performances, especially across like some more consumer-facing companies, it's still obfuscated whether or not like that's just because people are loading up on products for
Right.
their tariffs and that's driving more
Right.
revenue, but or if it's actually like kind of more consumer interest. So no clue. I have no idea when we're going to be out of the tariff woods.
Yeah, we will see what happens, but good job, Apple. Up next, Amazon. Amazon reported their second quarter results, and they exceeded expectations, but the company offered a profit guidance for the current quarter that was lighter than Wall Street's forecast, and that guidance spooked investors. Stock down around, I think, $20.
Yeah.
What's going on in Amazon?
Amazon, a little uglier this morning. It's down $20. And, I mean, who cares? It's down $20.
Amazon's revenue came in at $167.7 billion versus 162. Ooh, that's bonkers.
Bonkers.
I mean, there was a lot of focus on the wedding this summer, so they didn't really get to focus on the business.
Okay.
Or
Bezos doesn't run Amazon anymore.
Oh, okay. You tell that to Amazon.
Okay.
For a post-earnings play, though, this is something I'm going to be watching when the market opens.
Okay.
Absolutely.
They'll have no vol in their post earnings. They've been absolutely annihilating. Like, you're going to be lucky.
$20?
$20. $20 is the first day. It'll be down 10 more tomorrow.
I'd put money on it.
Tomorrow
I
is
didn't know.
Saturday.
One day, whatever.
Well, in other earnings, Reddit shares jumped as much as 20% on their second quarter sales and in guidance beat. Reddit reported revenue grew 78% year over year and was 17% above consensus estimates. Reddit offered, again, good guidance for the current quarter. Reddit brought in $500 million in revenue versus 426. What did you do in Reddit?
We're short some strangles in Reddit as well. That one's not going to be a winner. It's going to be right here.
It moved too fast, too furious?
It depends where it opens. If
Okay.
it opens here, it'll be fine. If it goes much higher, it won't be. It really just depends.
Okay.
We're on the max right here.
Favorite subreddit?
Is it in poor taste to say Wall Street bets? Because I'm on that like every day.
Really?
Yeah, actually.
That's fine. I was just curious because you're more into it than I am. Like sometimes when I like search for stuff on Google.
What do you
I'll
like
go to
about
Reddit.
Wall Street bets?
I can't promo someone else's content on this blessed show.
I know what you're saying, but why?
the degen aspect
so
of it?
bad. I don't get it.
Okay, so for example, I like their
Yeah.
pre-market experience. So they have a bunch of they actually calculate percentages pre-market,
Oh my
such that
God.
Amazon was down 8% pre-market. And they
I know,
can-
but that's brain dead crap. You can get it off anything.
it's just a fast thing that I like to check every day. It's like I don't want to spend time
I'm
doing,
just
you
saying,
know.
but the content on there is so freaking bad.
It's first of all, the memes are some of them are top tier.
Okay,
Top tier. S tier memery.
S-tier memery.
S tier memery. And
I'm going straight for memes only. Okay, fine.
it's also like vicarious degeneracy. Like I'm not gonna be making these stupid fucking trades, but seeing other people do it is like, well,
I do like to watch people YOLO themselves and just into like obliterating their accounts.
yeah. I wish I had that kind of cojones. And then,
Right, yeah.
and the FOMO from somebody doing really well. I don't know. It's just a wild west, and I like some of their community features. Like it's just a quick thing that I
Sure.
just check every day.
Sure.
So maybe that, or am I
Am I the asshole? Yeah.
even though most of those are made up, like 100%.
Sure, sure.
People are just getting that for karma, like doing that for karma. But
Right. It's
the
a good
stories are
read.
fun.
It's a
I
good
like
read.
the read.
I love it. All right. Hey, keeping it moving. Coinbase shares tumble as their second quarter revenue disappoints. Revenue did rise slightly to 1.5 billion from 1.45 the same quarter last year, but it did fall short of analyst estimates. The company says they are going to be bringing in tokenization of stocks as well as prediction markets. But again, they are trying to diversify as the business struggles. Coinbase.
Down 37. I mean, but it's
Dumped.
nice that they say they're going to do all this, but some of it's not even legal yet in the U.S.
Sure. Well, laws don't matter now.
That's true.
Completely.
Yes.
dumb, yeah.
Laws, we're in a lawless land. So what is it down this morning, Coinbase?
37.
37.
Oh, wow. MSTR Strategy, the artist formerly known as MicroStrategy, swings to a quarterly profit as their treasury strategy gains momentum. I don't understand this company, but Strategy held 597,325 Bitcoins as of June 30th, and that's their business model.
Yeah,
They're also down pre-market.
Yeah.
it's literally the dumbest. Why anybody would invest in that company?
Did you trade them for earnings or no?
No.
Because you can't really trade them.
And why anybody would trade them?
Well, the company's net profit was $9.97 billion.
Yeah, I understand. Bitcoin went higher.
Well, it is also like a way to get leveraged Bitcoin exposure. It is another way to do that.
Okay, let's not get in an argument about this
Oh
yet.
my god.
We can spend
Mommy and Daddy are fighting.
we can spend 3 hours arguing about the leverage. The leverage that you're paying 300% over leverage for.
I'm caffeinated. I've had cookies. I'm ready to go.
I've had cookies. I'm caffeinated. I'm ready to fight you. Yeah.
Oh, fight. Did you trade First Solar?
No.
Well, First Solar raised their annual sales forecast as they expect higher prices for their products following additional tariffs on foreign-made panels. The solar industry has grappled with lackluster demand and high interest rates, but First Solar now expects current year net sales between $4.9 and $5.7 billion. FSLR. I don't know if you.
Bonds are back to unchanged.
Oh yeah, your number's out. Sorry.
Yes, and notes have had a huge rally this morning, which we're very happy about.
Yay, notes.
Markets
Yay.
dipping a
Yay,
teensy bit.
yay notes, as we say. We're selling out some of the notes we bought this morning, and the bonds we are just staying long.
Okay.
Market not moving as much as I thought it
No,
would.
the SPOOs have not moved at all, but the bonds went from down 17 to up 1.
A little dippy.
And
Dippy
the
dip.
10-year notes went from down a couple to up really nicely. It's a good move for the 10-year notes. They are up 10, and they were down this morning.
Oh wow. Okay.
We got lucky. We bought some last night. We bought some this morning, and all good.
Oh, good. Also, Julia, shout out to you. Someone on Twitter said Julia would make an excellent Bond girl. I'm getting more like girl with the dragon tattoo kind of vibes, but
Thank you. I appreciate that.
I can see Bond girl. Yeah.
Yeah.
For reimagined for the new millennium.
I could see Bond Girl.
Yeah. Well, don't make it creepy. You're her boss.
No, Bond Girl is that's a compliment.
Yeah.
I've never seen a Bond movie.
What?
You've no what?
No, I've never seen a Bond movie.
Sean Connery is my favorite. Sean Connery. He's my favorite James
My
Bond.
favorite on Saturday Night Live Jeopardy.
Yeah, okay. But there's different Bonds, like they're depending on. I mean,
There's a Daniel Craig Bond.
yeah. There's Roger Moore. There's Pierce Brosnan. Yeah. There's a
I've
whole
seen
bunch.
Austin Powers. Does that count?
It kind of counts, but you
Those counts.
normally I think it's like in November or whatever. Like TBS will just show like all the James Bond like movies.
How could you have never seen a Bond movie?
I live under a rock. I think you're underestimating
Wow.
the extent to which that is true. Yeah. Never seen
Wow.
a Bond movie. I haven't seen The Godfather. There's a lot of movies that I really gotta get.
I'm actually.
You should just leave work right now and just go watch Goldfinger.
I don't know if you should be allowed on the show if you've never seen Godfather.
I
I think we have to rethink.
I've never seen The Godfather either. It's too friggin' long.
Oh my God, we have to rethink everything now.
It's too long. Like, why? Like,
my top tier movies. It's like Godzilla versus Kong. The less separation from.
oh, James is upset.
James is upset.
James is upset. He should be.
The
I'm
fewest
upset.
degrees of separation from Godzilla versus Kong. That is my ideal movie.
Okay,
And then psychological thrillers. Those I've seen.
gotcha.
Yeah.
Okay, all right. I learn more and more every day about you. Hey, did you trade Roku? Roku like a hurricane?
Yes.
Well, they beat their second quarter revenue estimates as platform growth accelerates. Roku topped Wall Street estimates, helped by its expanding user base and advertising sales. The company reported revenue of $1.11 billion for the quarter. And Roku's platform segment, which includes advertising and subscription revenue, grew 18%.
Yeah, but I think if I remember correctly, Roku is down $5.
I didn't say it was up. I just said that they beat.
Yeah, down $5.
Down $5.
What was the expected move? Do you know?
Higher.
Oh, okay.
12 maybe.
So you're okay. So it's within the expected range.
Oh yeah.
Oh, okay, good.
Plus we played it to the downside.
Yeah.
Good. I don't know.
Yeah. No, it's all good. Sorry, I was just getting out of a bunch of bonds and notes. That's a good little rally for the good kids.
Okay, nice. Were you following the Figma IPO yesterday, Julia? Were you seeing
Loosely.
loosely? Okay,
Yeah.
well, just rocket ship, the design software
Yeah.
maker's stock surged 158% in its blowout market debut. They set their IPO at $33 per share, and they are just shares surged 158%. FIG is the ticker, so
Unbelievable.
not sure what it's doing this morning.
I'm not.
Felt like that
surprised.
was so.
But it opened at $85.
Yeah, but it traded up to like 115 or something.
I know, but they priced it 33. How are they mispricing these so badly?
They had already given it away. What is the symbol?
FIG.
It's $139.
It's $139. I'm not surprised. Very ubiquitously used software. I use it myself. Like,
Oh, okay.
not use it, but I have experience with
Sure.
it, right? So I'm not surprised by this. But we're also like hungry for IPOs. Like,
But we say that, but then when they come out, then it's like, it's like untrade, like CoreWeave. Like, who's trading it?
not me. But I think that I
$139 when it came out at $33. I would say it was mispriced.
Yeah.
yeah. I don't know. So I haven't traded it. I was just kind of like loosely following it.
Right.
Very excited to see where this goes, though.
When will it get options, Tom?
Probably wouldn't surprise me if they get them today.
Oh, that's fast. I remember when I first started at this job, it used to
Sometimes
take forever.
It used to take a month, then it took
Yeah, it
like
used to
a
take
couple
forever
weeks, then
for
it took
IPO.
then they do it in like 2 days.
That's That's awesome. I like progress in the market. Hey, speaking of IPOs, Klarna is prepping for an autumn bid to revive its $15 billion New York float. The buy now, pay later company says it's closely monitoring market conditions and will move swiftly when the timing is right to launch an IPO. Honey, that is a choice. Klarna, one of the bigger unicorns that is still out there, but again, is trying to capture, the ebbs and flows of the buy now, pay later market. I'm sure, kind of backed off from its peak of all times, but $15 billion float is nothing to sneeze at.
It is not.
There's nothing to sneeze at.
Huge move. Anyway, S&P's down 60. Right
Bonds
now.
are through the roof.
Bonds
right
up
now.
16. They rallied a full point
Huge.
off of those.
Yeah, huge
Notes were the biggest mover.
Yeah.
They exploded. But all the indexes, S&P's down 62, Nasdaq down 250, 260, Dow's down 400.
Did you think we would be at these levels this morning?
Well, the S&Ps were weak all night. Gold's actually.
You called the reversal yesterday, and that makes me upset that you were right, but
I'm kind of a market genius.
okay, all right.
I do not get why the market's not moving more. That's crazy to me. I don't, dude.
Gold is.
Everyone's at their Hamptons house.
Everyone's on vacation. They're all in Portugal. Gold's on fire too.
Yeah.
Oh my God.
They rallied some stuff. But we'll see. We will see.
Is volatility up or no?
Yeah. It's up big. It's up.
It is up big.
Yeah, it's up almost. It's up a little over 4%, close to 5%.
Close to 5%, yeah.
The U.S. Army on Thursday said it was consolidating dozens of contracts into a single enterprise deal with Palantir, giving it volume-based discounts and the option to purchase up to $10 billion from the software provider over 10 years. Just straight keep writing checks to Palantir.
I hate the future.
Keeps hitting new highs. What do we do?
I don't know.
I mean, they have all your data now.
Grid, Homestead.
There you go.
Yep, crap. I don't know.
What are you doing in Palantir?
In Palantir, we're a little bit shorted. It's down $3 today. We're a little tiny bit shorted.
Okay. This is interesting. Your public chat GPT queries are getting indexed by Google and other search engines. How much trouble are you in, Julia? I'm just kidding.
My search history I keep very close to my chest. Oh God, your public chats are getting indexed by Google and other search engines. I'm not surprised.
Yeah, but sometimes people ask it legal questions, and then we're now realizing that the things that you're asking in a legal sphere to ChatGPT, they're not protected by any sort of lawyer-client privilege, or your medical questions about your own. I had some lab tests run, and I just imported all the data into ChatGPT, and I was like, am I going to die? No, but it was helpful because I was like, I don't know what these values, mean, when you get blood panels run. And
sure. But and it's good that people are talking about it, but the reality is that when you've been searching stuff on Google, the same things have probably been happening, right?
Sure.
So, and that's getting sold to
But it seems more in depth though with ChatGPT. If you're hey, build me a business, or here's all of my tax information from, you know what I'm saying?
Yeah, for sure. But if you're storing something on Google Drive, for example, okay, so what's happening with that data? It's good that people are asking these questions about how's their data being used, who else is seeing it, is it being sold? But this is it's a much bigger problem than ChatGPT. But yeah, this is, I'm not surprised. What has been funny is there's been a couple times when lawyers have drafted opinions that were just ChatGPT vibrant hallucinations. And some of them have gotten very far, just in the legal
process,
before they got caught, of just hallucinated case law that just doesn't exist.
Right, yeah.
So yeah, that's this is the future.
It's in the landmark case of Bert v. Ernie. You're nope. Nope, okay.
Nope.
Hey, Moderna announced yesterday they're slashing 10% of the workforce as the biotech company is cutting costs as COVID shot sales slow. That's hard to say. In a memo to employees, Moderna CEO Stephanie Bancel said the company expects to have fewer than 5,000 workers by the end of the year. mRNA.
Yeah, stock's down. It had earnings last night. Stock's down $1.50.
Okay.
It's back to 28. It got as low as 25, and then it kind of bounced up pretty nicely, and now it's back to 28.
Okay. Did you trade it?
It did not. It trades a little more by appointment.
Okay.
I would say that this could be an interesting opening in there. Like if you wanted to buy something on a down opening,
Okay.
Moderna at 28 is kind of interesting.
Anything else happening in like Lilly or Pfizer? Because there could be some implications for all pharmaceutical companies to maybe
Pfizer's-
have to lower prices. I don't know.
Pfizer's untradeable.
Okay.
Lilly, on the other hand, is all over the place every single day. It moves $10, $15, $20 a day. Lilly's up 10, and Lilly's up 9.
Okay. Well, that's interesting. Here's something interesting. Best Buy is partnering with IKEA to test a new kitchen concept in U.S. stores. IKEA and Best Buy have launched a pilot program to put IKEA kitchen and laundry displays in 10 U.S. Best Buy stores. Shoppers can design spaces with IKEA staff and pick appliances with Best Buy associates. What? They're both blue and yellow.
Do they have meatballs?
No meatballs.
I will show up if there are meatballs.
I will show up if there are
There's
meatballs.
horse
No
in those
meatballs.
meatballs, you know?
That you can't just say that.
No, not just saying there's horse in the meatballs. There's actually horse.
There's actually horse in the meatballs.
Haven't you ever read
That's-
the story? They
What do you
took-
mean? Is there horse in the meatballs?
Well, Google it.
One time.
If you Google it, you will see that one time somebody did take those meatballs to the whatever
Some lab or something.
to some lab, and they found out.
Yeah, NPR 2013. I just looked up horse in the meatballs, and that was
Yeah.
And it came right up for IKEA meatballs, right?
Yeah.
Yeah. I mean,
One time.
One time.
One time.
IKEA doesn't exactly have the greatest reputation, just so you know.
All right.
But horse in the meatballs, yes.
Julie, I was very excited that you were coming here because I like to put, different stories in depending on who I am like co-hosting with. And I want to get your take on the Labubu phenomenon. And what
There's
do you
no chance Julia's a labubu.
I'm not a labubuer.
Right, yes.
Labubu.
But what do you think about the phenomenon as a whole and like Pop Mart?
Dude, we're completely cooked. We're just like, as a species, we're cooked. Yeah, that's my take.
That's your take?
We're completely cooked.
I agree with you.
Well, Labubus are a gateway drug, and they're getting U.S. consumers hooked on Pop Mart and driving up its business. People use the hard-to-find doll as a fashion accessory, scooping up the company's other collectibles. Pop Mart stock, which trades in Hong Kong, has taken off and has become a worldwide sensation. We wrote about it, I think, in our Luckbox newsletters. And you can trade it. I think it's just PMRTY or something. It's something. Hold on, I can look it up. But you can trade it. PMRTY. Yeah, but it trades over the counter. But you can trade Pop Mart. So
Yeah, you can.
yes, you can.
Yes, you can.
I think they're cute. Bat brought me one, and so now I'm obsessed with getting like outfits for it.
The thing is, like, I do actually like the phenomenon because, like, I grew up with like the Furbies, the Polly Pockets, like
Right.
excessive
The
culture,
Tamagotchis.
the Tamagotchis, and there's something I find really fun about like just a dorky, so like cultural phenomenon.
Yeah.
It's almost like for the meme of it. So I do appreciate it, but we're a little cooked. Yeah, that's my
Oh my god.
I didn't know you could trade it though. That is news to me.
Yeah. So yeah, something to look at, and it's a gateway. But I like, you can trade Sanrio, which is like Hello Kitty. You can trade
What does
Hasbro.
labubu mean anyway? What does labubu mean?
It means the boo boo.
Labubu.
The boo boo. You don't think they're cute?
Don't care.
Look, I had a rough day yesterday, and so I decided to eat my feelings. So I went to Chinatown to pick up dinner, and I called in my order, and I was going to go pick up my food.
Where
And
do you get your food from?
MCCB, it's like a Michelin restaurant in China. It's my favorite.
MCCB.
Yeah, mccbchicago.com. You have to order on their website, which I, as an introvert, love because I don't have to talk to anybody.
I've never been there.
So they've won a bunch of awards. Like it's like
I believe
really,
that.
and it's
Never
like
been.
really authentic. Like you can get some really crazy, authentic Chinese dishes. They're reasonably priced. In fact, when I went to go pick up my food, it was a random Wednesday, and it was like a 45-minute to an hour wait. Like people were waiting to like get seated, but I just walked in to get my food and go home. But anyway, as I was walking through Chinatown, there was a lady who had a whole table of bootleg Labubus.
Bootleg.
Bootleg
Bootleg Labubus, and I almost bought some.
How would some kid know? They would never know.
But it's like when you go to Canal Street in New York City and all the bootleg purses, like you know that those aren't real Prada Gucci purses in Chinatown.
Depends who you're giving them to.
But I almost bought some bootleg Labubus, but I did not.
Nobody would know.
They were cute. No, nobody has to know. Nobody has to know. Hey, this is interesting. Major League Baseball is going to play its first ever game from a professional NASCAR track and its first game in Tennessee. The MLB Speedway Classic will see the Atlanta Braves face off against the Cincinnati Reds at the Bristol Motor Speedway. It's part of the MLB's effort to grow the game and attract younger, more diverse fan base.
Nothing says more diversity than a NASCAR speed track.
Okay, well.
In Tennessee.
There was a baseball game.
But
Yes.
I love the idea that they're trying new stuff.
Okay. Good job, Major League Baseball. Hey, you know it, you love it. It's Friday, and I like to do a little segment I like to call Will Tom Eat It? So I scour the internet for food for fat traders. Tom, I know you love a meatloaf. Like you go to a diner, you see a meatloaf.
Yeah,
you love a meatloaf.
Yeah.
But it's summer, and you're outdoor kind of grilling guy. This guy has a recipe for a Mexican meatloaf.
I've had Mexican meatloaf.
This could change your life. Watch this.
I like this idea.
Childhood, I hated meatloaf until I tried it Mexican style.
White onion, jalapenos, cilantro.
For our meatloaf mixture, combine ground beef, cilantro, jalapenos, onions, breadcrumbs, milk, eggs, lava, taco seasoning, and gravel. So now we got a pan oiled up, going with that meatloaf mixture. Just gonna compress it into the shape of that pan.
Oh, onto the smoker at 275.
We're not using a dish, so that way we got 5 sides hitting smoke instead of 1. We got enchilada sauce down, then going with Oaxacan cheese. We're gonna melt it all together and pour it
I'm all
over
in
the
on this
meatloaf.
one.
It's gonna be nuts.
We pulled this meatloaf off around 145 internal, let it rest for 15, 20 minutes, sliced into it, and oh my lord, it was so juicy.
And then that
you could see the
Oaxacan
seasoning
cheese?
in the juice. And then we covered it in that Oaxacan cheese. The onions and cilantro helped keep more moisture in that meat as well. This is not your ordinary meatloaf. I personally hate ketchup, hate barbecue sauce, so these flavors make it way more appetizing to me. My whole childhood, I hated
There you
meatloaf
go.
until I tried
I'm all in.
That looks fire.
There you go.
I feel like meatloaf is one of those dishes where, like, if you showed it to someone who didn't grow up with it, they would just be like a little horrified. It's like a big thing of meat that's sweet.
You're like, I shaped this
It's
meat.
really hard to find good meatloaf.
I don't mind a good meatloaf. I grew up with
I
it,
love
but like,
meatloaf. It's hard to find a recipe.
Right, because it gets so dry. It gets so
dry.
chewy.
There's a place by me called Farm Bar.
Mhm.
They sell meatloaf.
I don't mind a meatloaf. That looks like a good meatloaf.
Well, there you
I've had in a Tex-Mex restaurant, I had a Mexican cowboy meatloaf, and it was great.
Well, I would do anything for love, but I won't do that. Meatloaf? No. Hey, we're going to take a quick break, and when we come back, Tom and Julie are answering viewer questions in Confirm and Send. You're watching Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We lost Tom.
Oh, no, that was just really funny. Somebody was texting me something. Hello, everybody. We're back. I'm Tom Sosnoff. I'm here with Julia Spina. It's 7:52. Yeah, you're right. I'm used to the bat being there and saying, something. S&P's down 61. Bonds up 26. There was a perfect opening for us. We're long bonds, short S&Ps. So this would be the perfect one. We don't get a lot of days like this, by the way, Ms. Spina.
We do not. The overnight expected move for just like market indices is about 0.7%.
It was actually like in the 50. It was
I'm
50
sorry, not
handle.
expected move. The standard deviation of historical overnight moves. So when I say expected move, I'm like, that's like the standard deviation. So this is significantly above
The
that.
SPX overnight and the S&P overnight projection, because the unemployment number was 50 handles, we moved 61. Big movers this morning, like I said, are bonds up a point because they were down almost a point. And, we've been, the 10-year notes having the biggest move. They're up almost a point or 3/4 of a point.
Yeah.
Gold's up 42. That's another big one. The yen had a huge move today, up almost 800. That's a good one. And the euro, another monster move this morning. Last night there was a bunch of tariff news sent the market lower. The village idiot decided to get. He woke up early and decided that we'll just raise prices on American consumers. So that's why the S&Ps are down. But a lot of earnings too. So there's a lot of stuff to talk about today. Julie and I are going to have a ton to talk about. We got Jamal coming in at 8. We have Fast Market at 8:40. We got the opening bell. We got earnings. We have positions on in Roku, Reddit. We get this right. Roku, Reddit, Microsoft from yesterday, Coinbase from last night, and Apple. So we got a ton of earnings to do on the opening, and then we go right into Fast Market.
Yep.
And I've actually already made 20 trades this morning, so it's kind of been a busy morning. Also, then we've got TP coming in the house. We have Thomas in for a market measure on scalping, and then we got Scott in here. So we got a crazy, tasty, very tasty day. Right now, it's me and Miss Julia Spina. You're a best-selling author.
Yes, I'm a best-selling
Best-selling
Amazon
author,
bestseller. Yes.
Amazon bestseller, travel aficionado, travel.
Extraordinaire.
No, we're like a travel influencer.
I'm a travel influencer.
Yeah, something like that.
I would be a travel food influencer.
I've known you now for how many years?
Almost 6.
6 years.
Yeah.
You started here when you were how old? You were young.
I don't even remember.
Early 20s. And so you and I have had a lot of meals together.
Yes, that is correct.
We've been on the road. We've had a lot of meals.
Food is a very big deal on the road.
I trust you, but I don't fully trust you yet. Like, you haven't won my, like.
Well, you've never let me pick the menu.
I know, but you haven't completely won me over as a food critic yet.
There have been several occasions when we're at dinner before the show, and I can pick out exactly what you're going to pick. I've done that successfully several times.
That's not that possible, but I'm trusting your skill set. And we have been on the road a lot together, and so I'm just trying to, now to be fair, I generally trust people that are a lot heavier than you.
Thank you.
That's a compliment.
Omaha.
I'm talking about our own team, okay? I have to trust the big fat guys, not the skinny
That is normally where I place my trust, my food trust as well.
Yeah.
To be fair, yeah.
Yeah. Yeah.
I think I could put together a mean food experience. Food, not like just, I don't know, pick stuff from the menu.
Like, I don't trust like my 98-pound
multi-course.
daughter, you know,
Well, like,
or my healthy wife. I don't trust them.
that's fair. But like, you know, like proper Italian meals are like 9 courses.
Yeah, but you know what's weird? I know you're Italian.
Done with the Italian. What?
I know you're Italian, but you're not like, I feel like you branch off from like traditional Italian.
Your version of that is like New York, Jersey Italian, which is very different.
And Chicago West Side Italian.
Evidently, yeah.
Yeah, I got it. Chicago, what do we call them? Parish Italians.
A parish Italian?
Parish Italian.
Parish Italian. Yeah. My family's kind of like the engineer kind of Italian. Engineer and musician kind of Italian, which is a different kind.
Yeah.
But what are you going to do? I would make a very good spread, though. I'd put that together.
That I believe.
When I host D&D and I get to like do the spread, I do a fantastic job. I go above and beyond, especially for like a breakfast D&D session. It's spectacular.
Today, Julia said to me this morning, she said, "Oh, I have a connection there. My DM works there." And I'm like, I'm gonna regret asking this. I'm gonna regret asking this. I go, "What does that mean? Your DM works there?" And she goes, "My dungeon master."
Yeah.
Yeah. I don't know. My friends don't use that term.
D&D is your era. Oh my God, we could do like an office D&D.
Yeah, no, it might be. I don't know if it's my era or not, but my friends didn't play.
It's your era of, I don't know. It's also a fun game. I don't know how well you do at the game though. The mechanics are a little complicated, and you got to be it.
I wouldn't do well. Anyway, we got to go. We got to.
Yeah, we got to go. Okay.
This is confirm and send.
Let's take a look.
It's Friday, August 1st. When deciding where to sell calls or puts, are you primarily using technical indicators like EMA or MACD, or is your decision more risk-based, like the probability of expiring worthless?
So I'll say that like for longer term positions, I'll normally use like SMA loosely. Like I'll do my SMA 50s and 200s. So like I use SMA like a little bit, but for the most part, I almost always default to neutral because I just suck at making directional assumptions. So sometimes I'll look loosely at price history to determine if that's like the right move. I'll look at like upcoming events, but usually don't default to directional unless like maybe there's like a strong indicator that suggests that.
That answer is the answer of Miss Julia Spina, Miss Julia Spina alone. The Tasty Network wants no part of that answer whatsoever. Our decisions here are based 1,000%. We give zero amount of probability of our decision or percentage of our decision making to EMA or MACD or any other technical indicator. Everybody on this network, except for Julia, has been trained on probability of expiring worthless. That's it. That's all that matters. Okay.
That's fine.
Let's
I'll
go to the next
stand on
slide.
that ground.
I have to draw the line. I thought your piece with Dylan on Wednesday's Truth or Skepticism on AI was really good. A lot of content rang true for me. I did have a question regarding your opinion that there will be a lot of new jobs created after a lot of companies realize that they can replace some workers with AI. What kind of jobs do you think will be created following large-scale AI adoption? I mean, my comment on Wednesday with Dylan is we did a piece on AI, white-collar jobs, and the transformation of what we think is going to happen over the course of the next, 3, 5, 10 years. And I suggested that, as with any other kind of new technology, initially there's a shock. I used the example of the exchanges where I said, you know what, when we went from open outcry to pure electronic trading, all of us were standing there, we're like, oh my God, our jobs are going to be gone because there's not going to be any open outcry anymore. Yet, over the course of the next 10 and 20 years, the business is up 1,000%. So what happened is AI caused a lot of people to lose their jobs as floor traders, but AI also created a over 10-fold growth in the derivatives business, thus creating hundreds of thousands of new jobs.
Yeah.
I'm not sorry, AI, but just technology. That's my case here, and that's the discussion. I can't tell you exactly what kind of jobs will be created, But what will happen is the technology will replace certain jobs, certain existing jobs, and with the growth of the economy, because of those new jobs, because of AI, it will create lots of new jobs.
Yeah, no, I'm inclined to agree. I'm thinking of like the like basically during the widespread adoption of the internet, how many jobs were at risk of being lost then, and how many probably were. But there are ebbs and flows in the labor market as these industries evolve. AI also has a fundamental problem, like a multiplicative problem. Like as it gets trained on more AI-generated content, errors and inconsistencies in the output can become increasingly erroneous, right? So I am not surprised that a lot of companies are trying to cut costs now, and like, you know, obviously they have the incentive to do that. But I think with time, in order to like maintain the reliability of these models, you're going to need kind of content experts and industrial experts, and that's kind of like long term what I'm expecting.
Yeah, I argued that every kind of, like, you know, it doesn't matter what you're trained for necessarily. What we're going to need is just smart people, independent thinkers, creative people, you know, because AI needs to learn.
It needs to learn, and it's also going to probably make a lot of jobs easier. Like a lot.
Let's go to the next slide, John. Just trying to move it along.
Okay.
Among many tasty segments, I like watching rising stars. Some of them started with very little capital, others with more. When I watch, though, I don't hear any new revelations that surprise me. They all seem to follow the tasty methodology. If you could sum it up, what do you attribute to their above average success? Is it scaling? Is it adding futures options? Is it the amount of trades, highly skilled? What are your thoughts if you can generalize?
Consistency, I would probably argue, is a big one. I think you'd have more input here, though. I'd say like consistency and like scaling.
It's hard to say. You know, when I do a rising star segment, I mean, obviously we have a production team here that vets the candidates. And then after they vet the candidates, you know, I'm given like maybe like a 10-page questionnaire that we give to the rising stars. Then we're given some research that our team does on the rising stars. Then I'm given like kind of a summary or resume, whatever you want to call it, of the rising star. And then I usually meet the person for the first time about a half hour before the show, and then before we tape it. And then I have 30 minutes to kind of, you know, get a 22 or 24-minute piece from it, of which I try to get as many, you know, I try to dig for as many questions. I ask as many questions as I think will be interesting to our viewers. And each person's just a little bit different. And each person's also nervous. And, you know, I mean, there's a lot of stuff going on. It's a little more intense than you would think. Just because, you know, some people haven't been recorded before, some people haven't had their stuff. You know, you know, they're under the lights here. There's a lot of cameras around. So, I mean, I think Julia's right. I think it's consistency. I think it's, you know, there's a certain number of people, certain number of tasty traders that are incredibly successful. There are a certain number of tasty traders that are not successful at all. And then there's a lot that fall somewhere in the middle that want to be. Obviously, everybody wants to be successful, and we want everybody to be successful. We approach our industry like we want to create as many successful people as possible, but we know everybody can't be successful.
Yeah.
So we throw out everything that we know, and we hope that people can kind of, you're right, we're hoping that they do seem to follow the tasty methodology. We don't want people on that don't follow tasty methodology. What would be the point of that? And, you know, their above average success, it is a little bit of their ability to scale. It is a little bit of their ability to use everything, including futures and options and different strategies. It is about the amount of trades. It is about the amount of skill that they have, the know-how that they've acquired. None of it's easy, but I think that, you know, I think if you throw that all together, you've pretty much summed it up yourself. It's a good summary. Let's go next slide. I did strangles, this person writes, in both Microsoft and Meta. They were both up huge on the opening yesterday. Microsoft sold off a little bit. Neither worked out. Instead of defending the trades, I just closed them because the IVR dropped below 10. Did I do the right thing, or should I try to manage them?
That's tricky. I know it's not tricky, but like for me in that situation, I'd find this a little bit tricky because like after like a very aggressive move, even after vol drops, I kind of have the tendency to give them a little bit of time to recover. But if the premium's down, like there's just not a lot of opportunity left, and the probabilities just aren't there. So
she's right. And you know what? I did strangles in Microsoft and Meta, and in Meta, I just closed it, and it was a small, tiny loss. In Microsoft, I tried to manage it, and by trying to manage Microsoft, I turned it into a big loss. If I just left it, I would have been fine. So I actually did try to manage Microsoft, and I butchered it. So I'm not going to say you did the wrong thing. I mean, trying to defend Microsoft and Meta was really hard. So if you just close them, you probably did okay. It probably was not the worst thing to do, and you can redeploy the money somewhere else. And I don't like to just close things, but I can't say that you did the wrong thing at all. Not at all.
there's really like not a, I don't want to say there's not a right thing that you can do, but when something just has a crazy move like that, like it just,
You're right.
there's not a lot of options left.
Let's go to the next one, John. On SPYI and JEPI and a lot of other stocks like that, the key selling point is that they have a consistent income around 1% per month. But I'm not sure how consistent it will remain since these are all relatively new products. If you were to do this on your own, how would you recommend going about it? Buy the underlying, sell the 16 delta call at 45 days and close it at 21 DT? Should we follow the typical tasty methodology for this? I believe, Julia, that SPYI and JEPI are both income funds, which are covered call, like they're like covered call ETFs.
Basically, yeah.
Yeah.
That's how I understand
So
it.
if you were going to do your own covered call, essentially, if you were trying to just replicate this, and you were doing your own covered call ETF, you know, I mean, would you use the same tasty methodology?
I mean, with like a new fund, I would kind of like sometimes I just like buy the underlying and see how that goes, and then maybe put like scale options on top of that. That's kind of a very personal preference. Any kind of like underlying tendencies would be reflected in the option chain, right? Like, so like if there is like this kind of upward drift, then that's already going to be like kind of baked into the options themselves. So to me, it would be a little bit weird to do covered calls on top of this. I don't know how you feel though about that.
Okay, so, I mean, to answer the specific question, you just did what Tony does a lot.
What?
Answered some other question. SPYI and JEPI, if I was doing that on my own, yes, I would do exactly the methodology you described at the bottom. But I would probably I'd buy the stock, but instead of selling the 16 delta call, we'd probably do a little bit higher, maybe the 20 to 22 delta, 25 delta, kind of at max. 45 days to expiration, close at 21 days. We would follow absolutely the typical tasty methodology for this. There's no other way to do it. Our methodology is optimized. So of course we're going to follow the tasty methodology. You know, these funds have done a really good job with their returns because the market's going up. Okay, remember, there's a lot of principal risk here. These are long delta positions. These are long delta funds with a ton of principal risk to the downside. But as long as the market goes up, they look great. Let's go next slide. But you can do it yourself. Last one. This is right up Julia's alley. How do you calculate return on investment on a naked position?
I feel like ROI for naked options is misleading, right? Because like the right way to do it, it's misleading. The right way to do it is like the capital that you're putting up, so your buying power reduction, over like how much you actually made. So how much you made over the buying power reduction, which like I don't love doing that, even though that's the proper thing to do, because that is your capital that is working for you, and that's like technically what it's supposed to do. Sometimes what I'll do in this situation is I'll use the CVAR, which is usually a bit lower than the buying power. Sometimes either CVAR or maybe like just look at the position with like a really far out of the money long leg on it, right? To just kind of get a sense of like worst case loss against how much you actually made on the position. But in my opinion, ROI can be a bit misleading when it comes to options. It's really more designed for like equity positions.
Sure, but
that's how I feel about it.
To answer your question, if we were to calculate ROI on a naked position, it would be the buying power used. Mm-hmm. That's it. We would calculate the return based on the buying power we're using.
Right.
Okay, it's not based on notional value. It's not based on CVAR. It's not based on anything else. Just based on the buying power required to make the trade.
Right. That's technically correct. But I think there's modifications that you can make to make it
we agree.
Yeah, for sure.
All right. That's it, John. Thank you. We're going to come right back with Jamal. We're going to take a very short break, like less than 2 minutes.
Perfecto.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Behind JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. At Tasty, we're delivering babies.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. We are back. And you know what? It's about 8:15, so it's getting a little late here. And we're going to bring Jamal in first in 1 second. S&P's down 70. NASDAQ down 300. Dow's down 400. And the Russell's down 40. This is an ugly opening. Bonds are up 101. A little flight to quality today.
Ugly.
Notes are up 25. A huge move in the notes.
Ugly.
VIX is up over 5%. And what else do we have that's... Oh, gold.
Gold's
up $54, and it just exploded. And just some other things. The U.S. dollar just got crushed. The U.S. dollar, the euro's up 1,280 ticks, and the Japanese yen's up 1,000. So a lot going on. And we're going to bring to the man that knows everything about what's going on, Jamal. What up?
What up? What up? Yeah, this is the funny part about doing a weekly show when things really change on the last day of the week. It's a trip.
on a Friday. Ugh.
Yeah.
And I wanted to relax today too.
I know. I mean, this was brewing, right? I mean, this was about the only thing that could go wrong is if they fumbled the bag on the situation of the jobs report, and that's exactly what happened.
Well, I would say this was much more tariff related last night than it is jobs related. I don't see this as a jobs issue, Jamal. I see this as last night as a pure tariff play. This is 100% on Trump's tweet last night.
Mostly tariffs, but there has been a little bit of more
It's
momentum
all
after
related,
the
though.
jobs report came out.
It's all related. I mean,
Yeah.
the fact remains is like they were expecting a higher jobs report, and as soon as the jobs report came in lighter than expected, it's like, oh, tariffs all over again, right? Along with along with yesterday. So it's a combination of a lot of things, but it's all related to tariff. The market had been steady, but not quite as much now. Let's move to the next slide. So they were looking for 100,000 jobs, and 73,000 jobs were added while the unemployment rate rises again as tariff fears start to set in. So the core PCE the day before accelerated in June at the fastest pace of the year, while consumer spending barely rose. So again, tariffs are starting to set in, and we knew this was going to happen at some point or another. This is one of the reasons why the Fed held rates steady. It did not budge despite all the pressure to cut rates. Fed held rates steady at 4.25 to 4.5 for the fifth consecutive meeting. We had some earnings this week, a ton. The big ones: Microsoft, of course, surged on cloud growth. Meta surged on AI. Amazon, however, fell on cloud weakness, while Apple supposedly is returning to China growth in China, but still the stock is kind of sitting steady. VIX jumps back towards 19, which is the highest level in 2 weeks, and VVIX climbs above 98. So that's kind of the table setting right now, basically, right? We had a bunch of earnings this week. Fed didn't really change anything at all, which we expected because they're worried about tariffs seeping into the economy. And now we're starting to see some of that happen a little bit here. We saw it with core PCE, which is the Fed preferred measure of inflation, and we're seeing it with the most recent jobs report. Let's move to the next slide.
Yeah.
This is as of yesterday. I mean, this is how things were prior to today. Basically, historical vol was so low that it was making implied vol look so high. There was about a 10-point difference between the two. Historical vol hadn't been that low since last year, and that's about to change, folks. Big time.
Well, we keep saying when vol's really super low, it's the riskiest time because, it's easy.
The pops.
It's a lot easier to get a 5% move off the bottom than it is to get 5% move off the top. So
exactly, yeah. Expected ranges are tight, premiums are low, so you're not being compensated as much. Like it's
right.
Yeah.
I don't think this should surprise. I just can't imagine that there's a single tasty trader out there that's surprised by this. I think it's probably, it's actually good for putting on trade. We're putting on trades this morning. I like it.
It is, but I think something that's worth noting is that we're still around the long-term average of the VIX. It can 100% go higher. So even though relative volatility is inflated right now, that's always something I reference both.
Relative volatility is actually high considering we're just off record highs, but it's been in crash mode for so long now. It feels like it's been a month and a half or so. So that's, I think, the thing.
Yeah.
Yeah, as you guys know, I was kind of out for some time, and so I closed a bunch of stuff. I'm almost 90% in cash. And I came back yesterday, and I couldn't really find a trade that I loved, honestly. I mean, you didn't necessarily I didn't want to sell any vol and any earnings names because vol was fairly low in a lot of those, and there really wasn't anything else that was interesting. Gold wasn't interesting. Silver wasn't interesting. And I just was like, well, I'm just going to wait for the vol pop because it's coming at some point. When you see this right here, the vol pop is coming at some point.
Yeah. And it can take a long time to come in, but when it comes in, it can really hurt. So that sizing, that's why that's so important. Yeah.
Yeah. Let's move to the next slide. This was one of the craziest things that happened this week. Copper, big move. Obviously, we saw the big move a couple of weeks ago. But the big release of the move in copper after the exemption of the most widely imported form of copper was exempted from the 50% tariff. Crazy move in copper more recently. I had a copper short, but it was combined with a gold long and a silver long, so I had a 3-legged trade. I took that off. I don't know if you guys had anything going on in copper.
We did not. I mean, we basically, after the FCX earnings about a week ago or so, we took our copper position off. We didn't have anything on an HG. We usually do, but we didn't now, luckily. And We didn't have anything on an FCX either, so we had no copper exposure, zero.
Vol's still a little bit bid in there if you're interested.
Oh, it's bid, but there's HG has been untradeable, and
Toughy to trade.
FCX kind of
Toughy, yeah.
kind of sucks as well.
Yeah,
Yeah.
copper's hard to trade. But I mean, the shenanigans in the commodities has been interesting, especially because with like the kind of lower volatility across equities, finding some movement.
Yeah,
in
these
there.
moves in copper have been insane, but again, the markets, Jamal, were $1,000 to $2,000 wide on a one lot. I mean, it was literally untradeable. So Tony and I looked at it. We went through all the near to the at the money strikes. None of them were tradable, and there was no volume. There was no volume, so it doesn't matter.
Let's move to the next slide. It's interesting looking at the difference between 1 year and 2 year paper. It's sitting around negative 25 basis points. We saw the same thing in early 2020. We saw the same thing around 2008. We saw the same thing in around 2000. So it's sitting in an interesting area. You don't know if things are going to change at some point or another to the upside. But yeah, it's kind of fascinating to see the difference right now. That's not expected to cut rates anytime soon, but I think if they eventually do, it's only going to be because things are really bad and scary. Obviously.
Yeah, I think you're seeing that today. Bonds up 101. They're trading 115. They almost traded 113 this morning, so they're almost 2 points off their lows. I mean, we've been on the right. We've been on the right side of this move. We bought some this morning and sold them out in the rally, so. No complaints on bond move. We've had this one right.
Yeah.
It's the only thing we've had totally right is this bond move.
Yeah. I don't know. I'm curious to see how this kind of goes for the future because, like, I don't know how. Like, we saw like
every dip, every single freaking dip is a buy, unless you think we're going to default. Okay, every dip's a buy. That's the way I look at it.
I'm more worried about like not worried, but like watching the larger macroeconomic consequences. Because
why are you watching larger macroeconomic? You work at Tasty.
Well, I
you don't watch larger macroeconomic consequences. Don't even. If you use that line here, I can't even take you seriously.
I can't with you today. Oh my God, we saw a ton of companies go down because they didn't price in interest rate risk.
I can't listen.
And going for this much longer than expected.
I can't listen to you.
I can't with you today.
I can't believe. I actually can't believe what I'm hearing. I never thought I would hear Julia say that of all people. I never thought. I mean, wow.
I seriously, I thought
our little Julia's grown up.
I thought.
Thank you.
I thought I hand fed her, like I really did. I got her when she was like a little tiny, like a little, an infant,
a baby bird,
and I hand fed her, and now they come back and they turn on you.
You know how they do.
In a macro picture. No, don't give me that crap.
Well, the bird has flown away from the nest a little bit and seen some shit, so we can argue about that.
Yeah. I mean, she's right. You know, by the way.
No, she's not. I'm not giving her 1 inch here. I'm not. I have to. She hasn't been on in a while with me. I have to just, I have to rein her in.
Oh, and I gave you cookies today.
And she did give me cookies.
I gave you
I was
cookies
nice
today. This is oof.
That's why you gave me cookies.
This is harassment. I don't like this.
You were going to come with that. You were going to come with that argument.
Workplace harassment.
You tried to fatten me up and
toxic workplace environment. I didn't ask for this.
This is a toxic workplace environment, but if you're on air, it's all bets are off.
All bets are
off for sure on air. That's 100% accurate. Yeah, 100% accurate. Let's move to the last slide. Trump asked 17 drug makers to take steps to cut prices within 60 days. So he's going after drug makers next. Lilly, Pfizer, Regan, Merck, NVO among them. Some of them were down yesterday. Figma, I don't know. These guys might have top ticked the market. IPO yesterday soared 240% after they raised $1.2 billion in their IPO. I think Adobe was trying to buy them for like a $20 billion valuation, and they surpassed that yesterday. So that's crazy. Tariff deals were apparently struck with the EU, UK, Japan, and South Korea ahead of the deadline today. Again, this is the day, too, that we've been waiting on. Research, July 30th, Tasty Bites, non-equity ETFs and smaller accounts. Check it out.
Good stuff, Jamal. Love it. Talk to you later, man. Thanks.
Thank you.
Man.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hello, everybody. We're back. I'm Tom Sosnoff, and today I'm joined by Julia Spina. The Bat is on a long weekend vacation.
Good for him. I
Good
see.
for him.
I could see why he needs a break.
You mean, are you saying because of me?
No, that
Oh,
would be
okay.
rude.
No, I need a break from him. But he's on a long weekend, so I have Julia for another half hour, and then I have TP for the final hour. So thank you for thanks for helping out this morning. S&P's down 65, 30 seconds before the bell. NASDAQ down almost 300, 290. Let's see, Dow's down 400, and the Russell's down 37. Gold's up 55. Bonds are up 102, and we have a lot of earnings to cover on the opening. We sold Strangles in Roku, Reddit, Coinbase, and Apple. I don't know what's going to be, and Amazon and Apple.
And Amazon, yeah. Amazon's in the pooper.
We only sold calls in, which is Amazon. We only sold calls.
There it is. Yep.
Reddit. We only sold Roku. We only sold calls.
Mm-hmm.
I don't know what's going on here.
Also had like Exxon, Chevron, Riot, some other names.
I did not trade. First one we got filled in Roku. We sold calls in Roku, and we bought them back at 2 cents. Coinbase, we sold calls in Coinbase, and we bought them back for 1 penny.
Nice.
Those are always good when you buy stuff back for 1 penny. Those are Coinbase, and then we just bought our Amazon calls back at 1 penny. It's always good when you're buying stuff back at 1 penny because it's the last day, so there's not much, they can't hurt you, as they say.
They can try to find a way.
Bought our Apple Strangles back. Now we'll see where our Amazon Strangles are at.
Yep, Amazon's into pooper this morning. Roku really dumped as well. Sounds like
Looks
that's right
like
now.
the big-
Reddit. I'm curious to see if we get not a reversal, full blown reversal, but if we get a little bit a little tiny bit of a reversal throughout the day. It looks like we're already kind of starting to see one a tiny bit. That was a huge move.
Looks like the big loser this morning is going to be it's going to be Coinbase, which is surprising. And the one and the other one we have to cover here is Reddit.
That's not bad, actually.
No,
that's not bad. Sounds like the directions were in your favor for a lot of these, which is good. But yeah, the Coinbase one surprised me a lot, to be honest. Like MicroStrategy's a little bit too. Bitcoin itself, like Bitcoin futures are down like $1,500. So seeing some more stagnation in the crypto space, which is another surprising thing, especially with the news that kind of Annetta talked about this morning. As well, anything else? Yeah, Chevron up a smidgen. For solar, up almost 7%. You didn't have any positions on in there. Regeneron Pharmaceuticals up 6.2%. That was another earnings announcement. Yeah, some of these some of these could be really playing out for a post-earnings play. I still think Amazon for a post-earnings play.
Not sure if Reddit options are open yet, actually, now that I look at them. Don't know if they're open. So we're going to go to Coinbase. And Coinbase is the only one that's a problem child this morning. Coinbase is down 50. 50 is a big number.
That's 50
50 is what we call a big number. That's what my buddy that used to stand in front of me in the OEX pit would say. He'd say 50. And 50 is a big number.
Gold futures holding steady up 50. Gold futures are really...
So on the earnings plays last night, Apple, nice winner. Amazon, nice winner. Coinbase, loser so far. Loser. Let's take a look. We're going to have to roll up. Coinbase, loser. And let's see, what else had earnings?
Roku? Did you do your Roku already?
To get to that 1 second. Let's see. Roku was a nice winner. And what else is there? There's Reddit. I'm not sure that Reddit's open.
Yeah.
Are the options not open in there yet? I don't think they are. I don't think the options are open in Reddit, which is kind of really weird because it's late for them not to be open.
Yeah. Yeah, I'm kind of sensing the same thing. It's a little weird, but
yes.
Sounds like everything else.
Cancel my Reddit orders. S&P's down 84. Not a good one, but I mean, good one if you're short deltas, and we're short deltas.
It's continuing to sell off a bit after this. So we're finally getting a little bit more movement in the market. NASDAQ as well, down 350. Down 350.
This Coinbase move.
Gold having a rally up 52.
Coinbase down 50. By the way, does not surprise me because I thought Coinbase was one of the most overpriced stocks that there was. Also, MSTR, another stock, was only down 14. That's not bad. And there's some stocks here. I'm going to read you some stocks here that have had some pretty big moves. Apple's up $4, but AMD's down 5.
Nvidia as well.
Amazon's down 15. App's down 15. Caterpillar's down 10. Coin's down $48. Going through the list here, just looking for big movers. Microsoft's down 2. That's nothing. Netflix down 3. That's not much at all. RCL's down 10. Roblox is down 7.
Oh.
Tough. And Roku is down 13. Wow, that's a huge move. And Shopify down 4. TTD down. Man, they're coming for this stuff.
SoFi as well. SoFi down 5.5%.
Really? They just had earnings the other day.
Yeah, SoFi is getting a little beat up.
So the one stock, still, I don't know if they've opened the options in Reddit. What is going on in Reddit? Why are the options not open? Oh, they just opened.
Strange.
Okay,
Yeah,
they
dude,
just
this is a bloody day.
it's a bloody day.
Bloody day. I'm curious to the upside. Anything interesting? Anything interesting other than like Apple? Yeah, bloody day.
Yep.
Some of the consumer staples, unsurprisingly, Coca-Cola is up 1%, so pretty large for a consumer staple. New holdings.
So the August options in Reddit turned out to be big winners, but the September options in Reddit did not work out. This is an interesting observation about trading. You know, different which cycle to choose. So I bring it up only because it's. Let's see. Man,
Novo Nordisk is having a green day. Novo Nordisk is having a green day on this bloody Friday. Well, I believe, don't they have earnings? Someone correct me if
What's the
I'm wrong.
symbol?
NVO. Don't they have earnings on next Wednesday? Yeah, they have earnings next Wednesday. Having a nice
I don't
move today.
really
Up almost 3%, yeah. $1.41.
I don't really follow that stock. Anyway, so I'll just talk about earnings for just a quick second.
Sure.
Everything that we did that was August was a big winner, including Reddit. Everything that we did that was September was a big loser in Reddit and in Coinbase.
And
really funny. If we had an August position on, they killed. If we had a September position on, they lost money because the moves were outsized moves. Yep.
Yep. It's funny how that works. Looking at the indices. Yeah, nice little vol pop in the E-minis. Looks like, yeah, they had a little bit more momentum to the downside, I should say.
Well, I would say
on the
down
open.
84 is a pretty ugly.
That's ugly.
Is a pretty ugly arse move.
Well, overnight standard deviation of returns. So when you look at like overnight moves, it's about 0.7%. So this is about double that historically. So
This
a
is
very
outside
large
the
move.
expected move for the week. And down 83. I mean, just talking about some stuff here that's pretty interesting. Bonds up 106. This is kind of a new high in there. This is a little bit of the kind of backhanded flight to quality. You know, you can see gold up. The only stocks that are really a lot higher are some of the earnings stocks. But when I look at my screen, Coinbase down 50, Amazon down 16, Roku down 12, Nvidia down 4, Meta down 13. I mean, these are ugly.
Ugly.
Yeah, PLTR
Ugly day.
down 5, Tesla down another, almost 4, Microsoft down 3, Google down 2. Oh, it's just it's
Financials
ugly.
as well. I'm seeing like Citibank, JP Morgan.
If you look at the
Bloody
Russell,
Day,
which is financial
Goldman.
heavy, the Russell down 45. Dow's down 600.
Of course, the Russell's getting like disproportionately smacked.
The bat is the KOD.
The KOD,
Kiss of death.
the kiss of death.
Yes.
He's the contrarian indicator.
When he always makes fun, says, "Well, I'm not here, we crash," but it's not me, it's him.
It's him.
Yeah, when he goes away, and then the duty hits the fan.
The duty hit. Well, the duty has certainly hit the fan this morning.
Yeah, I mean,
Yeah, dollar's taking a big old hit as well.
the dollar is getting annihilated.
It's
But
getting
that's
annihilated. Yeah.
that's a village idiot play.
This is also maybe
you have to
potentially
put-
a village idiot play. Like every sector except for consumer staples is getting hit.
You have to give credit where credit's due. And the whole thing with Trump is that the only way that the rest of the world gets back at all his protectionist trade policy and all his idiocy is by just crushing dollars. So like no matter, because he never talks about the dollar because A, he doesn't understand it, but B, he's able to defend a lot of things by saying, hey, you know what, the stock market's at all-time highs, but he doesn't realize that we've lost 15% of our buying power.
I mean, like, I think that at the start of 2025, there was a very good case for a weaker dollar. Is like it was disproportionately strong.
There was a case for the dollar being disproportionately strong for a long period of time, but not to.
No, you want to go at that with a scalpel, not a sledgehammer. And this is a sledgehammer, which is not. I mean, I had just gone to Portugal. The conversion rate was abysmal.
15%.
How is it going to buy my oysters?
15% in a matter of since April is kind of ridiculous.
It's bad. Yeah, that's bad.
So, but anyway, when you start to look at markets here, I mean, Apple's only up $1.20 now. Reddit's only up 20. Yeah, listen, you know what? I'm not complaining. Bonds up, stocks down. This is kind of the position we had on. It's 8:42 in the morning. I'm Tom Sosnoff. She's Julia Spina. And we're going to come back with Fast Market because this is going to be a good morning. SPOO's down 94. It's going to be a lot to do.
Lot to do.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
I'd started to disrupt my trading career like really early on, probably 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think. If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We're back. I'm Tom Sosnoff here with Julia Spina. Miss Spina, getting a little bit of excitement here in this day.
Market's down, time to clown.
Market's down, time to clown. What does that mean?
It means the Russell's getting absolutely destroyed. E-minis are continuing to sell off. NASDAQ, it's just a bloody day. NASDAQ's down almost 2%. Oh my God.
There's a little blood out there today.
A little blood. Whoa.
I will tell you that right now. There's a little blood. And some of these stocks not looking good. I did not think we were going to see like Microsoft under 530. Wow. Yeah.
Everything's getting hit right now. Tech companies, financial companies, semi companies. Oh my God. Even some consumer facing companies. Like everything's just on fire. Bitcoin as well, down a bit. Natty Gas.
Bitcoin's only down 2,000. Nat Gas is actually only down 1 penny. It's just rallied a little bit. Gold's still down 47. But my eyes are all over the place just looking at all these different, U.S. dollars getting murdered.
Bonds are having a field day.
Bonds are having a field day up 105, let's say right now. S&P's down 107. This is the biggest down move we've had in a while. NASDAQ's down 460. Dow's down 670, and the Russell, like you said, is down 55. That's a huge move. For us, we're short Delta, so I'm okay. Yes, I'm not complaining. The only stock I have there's a couple of earnings stocks that are up big. Reddit's up $24, which is a huge move. Lilly's up $18. I'm just looking at my own positions. Costco's up 10. What a counterplay Costco is. Gold's, screaming today, but everything else is getting crushed, including of the earnings plays. Apple's actually down in the day. It was opened up $4. Coinbase is down 54. That's ugly.
Oh my God, Apple reversed.
Yes.
Oh my God, it flipped. Wait, I didn't know that one. Oh my God. Oh yeah, today's a day.
No, but if you want to do something, I'm not saying I'm flat Apple because we had an earnings plan that worked, but if you want to do a post-earnings trade in there, give a little bit of long delta into 110 point down move in the S&Ps. I've seen worse plays.
God, you were right. Amazon crushed. Amazon completely vol crushed. That's so annoying.
What's it down now?
Ivy rank at 15. Apple at Ivy rank at 25. Yeah, so for post earnings.
No, I know, but what's it down?
1433.
Oh, that's where it's been pretty much all morning.
Yeah.
I like the Apple. I like the SEP selling the 190 puts and the 235 calls into this move this morning, because I want to get a little long delta in there just on this down move. So I'm going to do that. That's just an opening trade. I got to put some stuff on today into this down move. John, let's see what we got. We got fast market. We got to get through a bunch of trades here. So SPOO's down 113. Do we whack them and how? Let's see what we got, John. So the first one is Justin from Woodstock, Georgia. Time to get a little long natty gas. I think it's at 2-year lows. I put on the 285, 275 put spread, keeping it small, hoping for recovery. I'm with you, Justin. Natty gas is on its butt. We are short a bunch of strangles in there. Let me just go to our natty gas position. So far, no bueno. They're working today, but no bueno. We're short the 290 puts and the 337 calls. So we already have a lot of long delta, but you know what? Just for you, dude, I will roll up my puts by a strike because I agree with you. We just sold the 290, 295 put spread, but we're already short a lot of puts in there. So yeah, I agree with you.
I like today, yeah.
We sold that put spread.
Nice.
Let's go next slide. I think that is the right play in there to be long net gas. IBM post earnings play here. Prices dropping and implied volatility is climbing. I agree with this one too. Mike from Akron, Ohio. We've been watching IBM. They got crushed on earnings. They're still getting crushed. It's down another $4 today. This is, I believe, Mike, the lowest it's been. It is. This is below the earnings move. This is everything else. I think this is the perfect play here. Slightly bullish. He wants to do the 240. I think we go to the 235 because it's down 5, and he probably sent this in yesterday.
Yeah.
235, 270. That's a pretty bullish play. I'm adjusting for the move this morning, Mike, and I like it. Mid price is 552, right above mid price. 550 was mid price.
I have your rank a little low in there, but with the bullish skew.
I know, but I think it's going to pop up today with
the bullish skew. Yeah.
With the bullish skew. I did this more as a bull play than an IV. Normally, I wouldn't sell IV at 11.
Yeah.
But this is a bullish play.
Yeah, the directional component.
I like the call, Mike.
Yeah.
Let's go to the next slide. So, Lulu, Trevor from Green Bay, Wisconsin. Trevor, in case you didn't know, is a Bears fan. I don't know that for sure. But what do you want to do here? Catch a falling knife may not be bad. Selling a Jade Lizard, 85 put. You know what, Trevor? We're just naked short puts. We sold some the other day, 251. They're 520 right now. What puts are those? Those are the 170 puts. I'll add to that put, but that's all I'm doing in there. I do not love this company at all.
Lulu's a beast.
You know my feeling about their.
Lulu's a beast, and with earnings coming up on September 4th, like kind of a weird time in cycle.
I sold some of the 170 puts, and I sold them for 525. But I'm not a fan of Lulu and their racist founder.
$80 leggings.
But they've killed this stock. So I'm going to do it as a trader. Let's go to the next slide. All right, Trevor, we're in. Festivus from New York, Harold from New York.
For the rest of us.
He's looking at 6A, which is the Aussie dollar. Have not traded this in a while, but we do have other, Aussie dollar is up huge today, 325. Looked at high VR, this on top of your watch list. What is he trying to do here? 62, 63, and Sep can't pass this or do something better, me lord. Looking for high VR on top of this. I think he wants to sell this put spread. Is that it?
63, 62?
I think, because before today, that would have been right there. 63, 62. I don't think you can do it today, Harold. Well, you could. I'll do it. What the hell? I mean, if I get filled, I put it in at mid price at 120. Let's see if we get filled.
Get a fill, Phil.
I'm not going to go down on this because I think that it's up too much today. If it sells off another 10 cents or 20 cents, I think we'll be filled. Let's go to the next slide. SPOO's still down 114. And if you're wondering, I'm always watching out of the corner of my eye. SPX Ben, market tanking, and VIX jumped almost 2 points today after those job numbers on Friday. Might be perfect for an iron condor. Looking at 16 delta, $25 wide, 0 DT. What could go wrong? A lot could go wrong, Ben.
Oh, man. Don't ask.
But because we're having a good day, I don't hate it. I don't hate you. We're all good. It's early. It's right in our wheelhouse. 0 DTE, 16 delta.
$25 wide, 0 DTE.
Let's see. That would be $25 wide, you said, right?
Mm-hmm.
61.75, 61.50. 62.90, 63.15. This would be about $4.95, right at mid price.
Mm-hmm.
Let's see what happens. Target price, we're trying to make at least 10, 15, or 20% before the show is over today. That's the game plan, Ben.
I pop it on a day like today, with vol coming in, or with vol all over the place. Yeah, I like that one.
Yeah, we're going to see. Let's go to the next slide. Phil, Ben. Adam from Jersey City, Jersey. Is that lemonade?
Lemonade. Oh, it is lemonade, yeah. Well, actually, wait a minute. Hang on.
LMND?
Lemonade, yeah. Lemonade.
My kids buy their insurance through Lemonade. Do you?
It's a pretty popular one. I don't, but it is a very popular one. A weird couple of
$36 stock. I don't know if I've ever traded it. It's been on. It's gotten killed. It was 46 a few weeks ago.
Earnings
It
August
opened
5th.
downs on Friday. Sell puts ahead of earnings next Tuesday.
Yep. Earnings August 5th. IV rank of 45. Down almost 4% today.
Expected move is $8. The stock's 36. We will sell the 28 puts. See, that's what we do. We go to the expected move. Market's 85, 105. We'll put it in at 95, which is right in between the markets.
You're at the 14 days?
No, I'm doing SEP.
Oh, yeah, okay.
I don't know if this trades in between markets.
The spreads are a little... Well,
Spreads are crappy.
Spreads are a little rough.
I'm not going to force it. I'm going to see if we get filled. Oh, filled in lemonade, 90 cents. Don't love it, but we're going to try it, Adam. Let's go to the next slide. Brandon from Shreveport, Louisiana. Small account gang just went long the yen. Nice trade, dude, because it's up huge today. Let's see what happens. I am already long the yen, /6J. I am not getting out of the yen for the next 150 years. I will take long yen to my grave. It's been one of the best trades. Long bonds and long yen have been the best trades of the year. All we've done this whole year is sell puts in the yen. I like what you've done. I don't know when you did this. Oh, went long yen at 666. Oh, yeah, you're up. Hold on, I got the wrong price up here. 6J. Oh, yeah, you have a great trade. It's 100. It's 1,000 points higher.
Daylight today. Oh.
Yeah, I'm already long yen,
That's
so
nice.
I'm going to pass on this. But you're up 1,000 points already, Brandon. Nice trade. Could not agree with you more. Let's go to the next slide.
Okta.
Ooh, Fred, this one you're going to kill me on because this one I swore I would never trade again.
I don't blame you.
OKTA, it's traded 500,000 shares. And if you go to the September options, the markets they're really wide.
Markets are tough in
Like
here.
a dollar
yeah.
wide. They're tough to trade.
The premium's juiced. I mean, like,
Sell a simple expected move strangle. Well, there's nothing simple about this stock. See, earnings are not to the end of a.
I really don't like where earnings fall.
Let's just see where you are here. He wants to sell the 125 call and the 82.5 put. Well, you got to sell a cheaper put than that. Let's do 75 put. Stock's down big. 75 put, 125 call, 223. This one you got to do a little price discovery. Yeah, 225. I did it 2 cents above mid price. I don't know if that mid price is any good because the markets are so wide. I'm going to check it out afterwards. I'll do a little more price discovery, Fred. But we just got our feet wet in there. Sold it for 225. Strangle.
Little dab.
Wide one. Let's go next slide. Mike Y from DC. Costco naked puts are out of my league. Have you thought of, well, Costco's up big today. Costco's a counter trend play. It's up $6 today. We are already long a ton in Costco. Poor man's covered call. Sep Ak. We are, let me see my deltas in there. Hold on a second. Costco. Yes, we're long Costco. Not making much money today, surprisingly. I'm going to sell a put spread in there instead. I don't mind selling a put spread into an up day, and that's going to be my Costco play because I already have a lot of positions there. I don't want to mix and match them all.
Mm-hmm.
Let me see what I can do here. Mike, Costco's not the greatest trading vehicle. SPOO's down 116. I've been trying. Nothing done. I'm still working this in Costco. Trying hard too. SPOO's down 120. Let's go next slide.
Spreads.
I'm working it,
Oh
Mike.
my
I'm still
God.
working.
Spreads in Costco. Ugh.
I'm still working the Aussie dollar trade, but nothing done in there. Andrew from Puerto Rico. He's looking at UNH. We just covered, Andrew, we just covered our UNH position a couple of days ago. What do you want to do in there? Premium looking juicy. I agree with you. Premium is juicy. Stock down another $5 today. We're out right now. I want to play this with a little bit of long delta. What do you want to do? 220?
220, 290s.
No, you know what? UNH has been one of our best performers year to date.
Has it really?
Yes.
Really?
Because we didn't get caught that bad the down move. He wants to do the 220. Stock's getting killed today, so let's
Like
do
the
the 210.
210s. Yeah.
210s.
210s, 290s.
210s, 290s is a really flat trade. And I think there's a good chance we can get filled right above $6, right at $6, or close to $6. Damn, thought there was a chance.
NASDAQ down 540. It's still dropping.
598.
ES down 126.
Yeah. So before,
It's
let's see what we got here, John.
like a rock.
Okay. So natural gas, we sold a put spread in there. IBM, we sold a strangle. Lulu, we actually just sold a naked put in Lulu, John, just a naked put. In 6A, we never got filled on the vertical. In the SPX, we did an iron condor, and it's not going to be working right now. I can guarantee you that. Not bad. Lemonade, we sold a naked put. In 6J, the yen futures, we sold put spread. In OKTA, we sold a strangle. In Costco, we sold a put spread. And in UNH, we sold a strangle with a tiny little bit of long deltas. We are still working. Oh no, we're still working Costco. I take that back, John. We did not get filled in Costco yet. So Costco still, we filled 8 out of 10. We're working Costco, we're working 6A. We didn't get filled in the other ones, but at least we're getting some positions on, and it's a interesting morning.
Interesting to say the least. Markets are getting killed. Gold is still on a tear. Bonds are still on a tear. Oof.
Did you just give me a woof?
A little one. A little one.
Little one.
This is that kind of day. It's a
Yeah.
cookies and an oof kind of day.
Yeah, I agree with you. Okay. All right. Thanks, John. We're going to take a short break. We're going to bring back the team.
Awesome. Thanks, guys.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right?
Now.
Yeah, you're a camper
guy.
You're a camper.
Hold on, honey. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Oh no.
Oh.
Can you put that leg up again?
No.
No. Do not.
Oh.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
All right. Hello, everybody. And I am here today on this momentous occasion with Thomas, and TP, or he could be another Thomas, but I don't want to confuse things.
What are the odds?
What are the odds, TP?
I don't know.
How many Thomases does it take to screw up a light bulb?
That's a good question.
Yeah.
It's never been, we haven't been able to figure out the mathematical formula, but.
Better yet, Thomas, is how many Toms can actually just sit in the black, in a dark room, and not even care about the lights? Just gonna sit there in blissful relaxation.
Who would speak up first? Yeah.
You're very similar to a young TP, just so you know. Not talking about just the hair, you know, but your skill set, your background. TP was our models guy. Built all the models on Thinkorswim, built all the models on Tasty. So this is right up your alley. And so he's going to be a harsh critic of your work today, of course.
I suspect not, but Thomas, at some point, if you are the young TP, we'll have to take some time, and I'll tell you some cautionary tales about what not to do with your life. Okay, so I'm on your side, Thomas. I'm on your side.
Anybody that wears a DePaul University Mathematical Sciences T-shirt, you know, is right in TP's, right in TP's wheelhouse. I mean, this
Thomas,
is
that's a strong move.
That's a strong
That's
move.
a
I mean, this is
strong
a kid that got his master's from University of Chicago just because he wanted to just say he wanted to be the only person that ever got a master's in Latin.
That's actually sick. I think that's cool, and that's what makes Thomas's strong.
It's weird, but you can call him cool because his kids might be watching.
That's an adjective that doesn't often get associated with me, but that's okay. Thank you, Thomas.
Yes. So TP is the kind of we talked last time about beta weighted deltas and IVR and stuff like that. He's the one that pushed us to getting it originally on the platform. So, all that stuff is industry changing. So anyway, so let's see, what do you got here for us?
Yeah, so today I wanted to study on the intraday scalping zone. So really looking at daily ranges on an intraday basis in the past 12 months. And I believe this will be helpful to any new traders who want to trade futures products, understand the landscape of each futures product, how each futures product behaves differently, and so they have some more context when they go and place trades, whether it's putting their stop losses in, take profits, or putting a wing in or something like that. So studying daily ranges will give you context, and so that's the goal for this market measure today.
We like it.
Alrighty, so
let's do it. Intraday scalping zones, and by the way, we'll be your harshest critic on this one, just so you know, because when it comes to intraday scalping zones, that's kind of like this is kind of like something that we've been talking about for literally for years. So. Hang on one second. Let me just there you go. All right. So we used to do it as a measure of kind of whatever the expected move was for the day. So like, let's just say 1/2 a standard deviation to 1.5 standard deviations, think about that way. But we haven't really done a lot of work on intraday scalping zones for quite some time now. So I think this is going to be really cool.
And it's also interesting, Thomas, that you're doing this now when we're seeing a lot of two-sided markets. It had a massive rally for the past 6 months. Now it's getting choppy, and there's a lot of whatever your take is on the market or whatever. There's some opportunities right now that I think we haven't seen in a while.
And you're talking to somebody that, I don't know if you know this, but I grew up in this business as a scalper. First 20 years of my career, I just stood in the pit and scalped, and like everybody else did. So this is kind of the whole scalping thing. I want to cover it more, but we haven't on the network. Tony was a scalper too. So let's do this. Intraday traders rely on speed, intuition, and often guesswork. But how far do prices really move on these days? We analyzed intraday ranges to define realistic scalping zones. All right, let's go next slide, John. So scalping zones are based on intraday price ranges from 8:30 to 3 p.m. at Central Time. For each symbol, we measure the 50th percentile, the 75th percentile, the 95th percentile, and the daily range. Okay?
Yeah, these were the three things I decided to use. The 50th percentile being like a base case, the 75th percentile being some sort of stretch, then 95th percentile being some sort of outlier or extreme move in the market. I also made sure to add a formula at the end that kind of shows how I calculated the daily range as a percentage of the open price.
So today, we'd be way outside of this.
That is correct.
Okay, let's go next slide. So we pulled 1 minute. OHLC is open, high, low, close data. We analyzed the ES, the NASDAQ, and the Russell. Use the futures, but it doesn't make a difference. Crude oil, gold, silver, Bitcoin, and ETH, and the last 12 months.
That is correct. Yeah, and I used our Jupyter notebooks that we use internally for our research, for other research projects. So I wanted to include a snippet just to kind of show the viewers kind of what we do in the background and kind of how we pull data.
Good.
Yeah.
Little glimpse into the
little
Jupyter
glimpse.
network. Yeah.
Of course. Yeah.
I like it. All right, let's go next slide.
All right.
All right, go ahead. I'll let you take it.
Sure, yeah. This first plot, I made it a little bit more complicated than it probably should have been, but let's talk about box plots. So what we're looking at here, that colored in zone is an interquartile range. So it's between the 75th percentile and the 25th percentile range. So right now, as you can see, that red line, that is the 95th percentile range. That is the outlier moves, the orange being the 75th percentile and the 50th being the median. And so as you can see, when we look at the first three box plots, those are the indices. they trade at a very small. The IQR, the interquartile range, is sharp. It's lower. It's not as wide. So those are good futures products I would recommend for small and consistent scalps. And then when we look at commodities, you kind of get also that small range, but not exactly with the CL, but they offer some more movement with still a good amount of liquidity and volume in those products. And then we're looking at Bitcoin and Ethereum at the end, the last two, where they see massive moves. Even their 50%, their 50th percentile moves, the base case, is much higher than ES's or the S&P 500 futures 95th percentile move. And so those would be products I would definitely want to position smaller in, and definitely don't have as much volume as the indices.
Yeah, and the markets aren't nearly as tight.
Yeah,
they're not as good.
What I want to add here is box plots have been around for a while, but what you see here is a good intuitive explanation of what they represent. So if you've been trading for a while, of course, ES and NASDAQ equity indices a little less volatile than something like Bitcoin or Ethereum. Okay. And what Thomas has done is shown much wider ranges, wider boxes for the more volatile things. That's what a box plot shows you, well, literally visually. Okay. So you can see here, obviously, crude oil is more volatile than gold. Bitcoin is more volatile than crude oil, et cetera, et cetera.
Let's take a look at the next slide.
Sure.
So crypto has the widest intraday swings. I don't think that would surprise us. Commodities offer solid movement, and the equity indexes are more stable, which favors scaling in and out with precision.
I think an easier way to describe that would be I would increase the size of my positions if I'm scalping in equity indexes compared to the cryptocurrency.
Okay, that's an absolute no-brainer. I think that when it comes to scalping, you got to realize that 98% of all scalping is done in the ES. I mean, some people will scalp NASDAQ, and there are a few firms that will, they'll make markets in crypto, so they'll scalp it. There's also some market makers that will scalp, like, bonds and some customers scalp bonds and crude oil. But for the most part, the equity indices, specifically the ES, sometimes the NASDAQ, but specifically the ES, are the primary vehicle. Let's go to the next slide. So the NQ offers the richest daily range, which I don't think that would surprise anybody. The ES is usually, the ratio of ES to NASDAQ is usually, depending on where we are, you can do it 3-2 or 2-1. The Russell is more like 5-2. So if you're just thinking of what the ratios are, the Russell ranges are modest but consistent. I think that's fair. The ES remains steady near $70 per day. It's 70 handles per day, and yeah, I think that's an average.
That's correct.
But you went back to the beginning of the year for that average, right?
That is correct. Yeah, the last 12 months.
Right, last 12 months. Because right now it's a little less than that. Right now we've been in the 60 range. Let's go to the next slide. So volatility peaks in April, likely due to earnings or macro catalysts. I mean, this year it was all the tariff stuff. That's but right. After spikes, movements tend to compress, yes, and can use this to adjust trade size and expectations month to month. Yeah, I mean, sometimes April's a nothing month. This year it happened to be crazy, but I think that's all pretty fair. I mean, that's exactly how we trade.
Just to confirm some of the data here, what you also saw was a spike in the VIX, right, in April, because like you said, with the tariffs and all that jazz. And the point is, market movements and volatility, implied volatilities, are very closely related. They're not 100% correlated, but yeah, you saw, just like we saw a spike in the VIX in April, we also saw a spike in the scalping ranges.
And that mean reversion also is shown here as well, with that compression after that big spike in April. Yep.
Let's go to the next slide. So using scalping zones to structure trades. So this I'm curious about. So take us through this.
Sure. So let's talk about when the markets are in a base case. I mean, that particular day of trading is a normal choppy day. It's a base case. What I recommend, or a use case for this days, would be to fade extreme movements scalp the reversals, and make your targets tighter. Anything you want to add to that for that first case?
So the 50th percentile just means if the expected move is, let's say, $60, your base case is a $30 30 handle move.
It'd be 50% of the average.
50%. So fade extremes, well, that's what we are. We're contrarians. Scalp reversals, I mean, that's the same thing. It's the contrarian play. And the tighter targets, I would totally agree with that.
Great. All right. Then the next case would be the 75th percentile. So let's just say we're in a trending market, stretching. The use case in that situation would be to lean into a trend, use wider targets, and trail your stops.
When you say lean into a trend, you mean what?
What I mean by leaning into a trend is to...
Are you fading that trend or are you buying that trend?
I'm buying the trend.
Okay, because we would still be fading the trend.
Okay.
So you'd be leaning into a trend. In other words, at a down day today, you'd be shorting this down move.
You would be, because this is outside the range today. Because today we're in the extreme case. But if we're inside of kind of a normal move for the day, we're usually on the contrarian side.
Okay.
That's what I think of when I say lean into a trend. I agree with the wider targets, because if you're moving more, you want to widen the targets a little bit. The trailing stops for us are mental. They're not hard stops. They're not orders that are resting. They're just mental stops.
Sure.
Okay.
And then for the 95th percentile or the extreme market condition or outlier breakouts, the use case would be to widen your stops and avoid early exits.
Yeah, and that's where we stop fading. So the difference for me is when you get an extreme move like today, I'm less likely to fade it intraday. So for a scalp today, normally if we were down, let's say 30 handles, I would get long. If we're down 50 handles, I'd still get long.
Okay.
But if we're down 100 handles, I'd get short. That seems kind of weird, but big moves outside of the normal range I feel like they have a smaller chance of intraday reversal. So I feel like it's a better play to be on the same side of the market than to a reversal.
Yeah, like another way to put it is anything within the IQR, the interquartile range, fade the scalp. Or fade the reversal.
That's what I would do.
Yeah.
I don't know about you, TP, but that's my 2 cents. Let's go next slide. All right, what do you got here?
All right. So I have some implications. I added like a bonus graphic, a volatility radar. If you look at the first three on the like top from the beginning to the right, or the first subset of a graph, you have the indices, and you can see that their range is very short or small, 1.4, 1.8, and 2.2 respectively. Then you go to the commodities, you have some inconsistencies, but much greater range. And then when you go to the cryptocurrency, the ETH and the BTC, you can see that that 68, the standard deviation of the daily range, is much greater. So what are some implications from this? You can avoid overtrading by anchoring trades to an expected range. You can adjust sizing by symbols, so do not treat the ES and the BTC the same. And don't chase. Know when you're in a typical day versus an outlier day like today.
Well, I think one of the really good takeaways of this is the don't chase rule. Because what I've learned over the years is if you miss it, you miss it. Don't chase.
Yeah.
And it's easier said than done to know when you're in a typical day versus an outlier day, because you really don't know. I mean, today they were kind enough early on to give you an outlier day, so you didn't have to guess. But normally it's much harder than that. But the don't chase rule is really important.
So the two things I'd say about this, the nice thing about when you're talking about adjusting size, what you can do when you're doing this at home is the size of the contract and the buying power requirements sort of even them out. So you can see, okay, how much does it cost? What's the capital requirement to buy an ES versus buying BTC, for example? You factor in the capital requirements and you factor in the volatility, and that starts to give you a solid number of, okay, I'll buy, 5 worth of ES and only 1 worth of Bitcoin, for example, whatever the capital is. So that's the sort of thing that the way I would do this is look at the capital requirements and try to have them balanced. As far as don't chase, One of the things that I like to tell people is money doesn't care. Your Netlick, your bank account doesn't really care what symbol it came from. If it's not working out in ES or Bitcoin or whatever, don't hesitate to look to another product. We are product indifferent. Thomas looked at 7 symbols, awesome symbols, very highly traded. But if they're not working for you on a particular day, either don't worry about taking a day off, or go look at some other products.
Let's go to the last slide. So, key takeaways. Each future symbol has its own personality. I completely agree with that. ES, tight and tame. BTC, wild and tame. Now, just to be fair, nobody really trades BTC futures. I just want to be really clear about this. They're a massive contract. So, BTC futures are, let's see, right now they're 500 and they're $600,000 a contract. Right?
That's a lot.
Right. There's $600,000 a contract in notional, but you have to put up like over 40% of that. So you're talking about like $250,000 just to trade a Bitcoin future.
It's $232,000 to buy one of those futures versus ES.
And just so you know, only 7,000 have traded today. So nobody scalps Bitcoin futures. If you wanted scalping products, you'd scalp ES, you'd scalp ZN, you'd scalp NQ, you could scalp CL. But those are if you're trading futures, MES, MNQ, that kind of stuff.
So
Percentiles.
ES 23,000. Bitcoin futures are 10 times the requirement of ES.
Yeah, that's the other problem. Yep. Percentiles help define risk-adjusted trade expectations. So you can't know if a 95th percentile day is coming. That's accurate. But when price is already there, you know the odds of further extensions are low. I agree. We're there today. We've already seen that happen. Understanding the range of intraday moves can benefit traders who are looking to scalp or fade large moves. Like I said earlier, we will fade half a standard deviation, 3/4 of a standard deviation, but once you get outside of a standard deviation and you're up to your 95, 100%, we're done. We're not fading anymore. We can still trade it, but we're not fading.
Yeah, and I just think that adding more context for traders, especially new traders, and adding more filtering when you want to execute a trade, I think it results in better trading and better results. So more filtering.
I think this is a great presentation, and what I would suggest is go back to Tasty Live website, go to this market measure, load up the slides, and have those box plots and that bar graph that Thomas created, just have that up and running. If you're going to try and, if you don't have the trading experience to kind of intuitively understand NASDAQ versus ES versus Russell versus Bitcoin, have that data in front of you. It is very informative.
Thank you so much, sir.
Yeah, and thank you for the criticisms, the compliments, and it's been really fun, especially with this internship that's coming close to an end.
Oh, when's the internship end?
August 8th, next Friday.
Oh.
Yeah. So I wanted to say it was a great time working here at Tasty Trade, and
you got a week left, kid. You got a week left.
Are you going back to school?
I am. I'm going to be a senior this year at DePaul.
No, now he's been here all summer. He's going to drop out. He's a drug addict.
Yeah.
Steve Jobs dropped out. I'm just saying.
All right, big shot. You didn't drop out. Just remember that.
Because I didn't know any better.
Okay, well, he doesn't know any. He's staying in school. Okay.
This is why I'm saying to Thomas, don't make the same mistakes I did.
Okay. I'll talk to you more then so I can learn some more mistakes you've made and avoid them.
You don't even want to know the mistakes he's made. Anyway, thanks, Thomas.
And thank you.
All right, TP, we'll be back with Scott in 2 seconds. Got 1 week left. She'll be on next week.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at TastyLive.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, filled everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay. I need help understanding. This is the largest monitor that I've ever seen. I have to move back in order to see everything. And somehow when you're on air, you're looking at this. You need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Hello, everybody. We're back. And it has been a glorious Friday. Bonds up 106, S&P's down 92. Couldn't ask for more. Fun little Friday. Fun little Friday with stuff going on. I'm here with TP. And what do you got? What is that, a black satin shirt or something? What are you wearing there?
Oh, yeah, I'm huge. I'm big by big.
Big by big. Look at you.
And I gotta thank you, Donald Trump, for today. He's paying some bills. Thank you very much.
He is paying bills. Another tariff, paying our bills. Anyway, I'm on with TP right now. We're going to bring Scott in a second. We had Julia Speen on for the first 2 hours. Thank her a lot. She was awesome. And we're going to wrap. We just had Thomas on.
She's a powerhouse. Julia brings a whole new element to the show. Love Julia.
I had to correct her a few times today, So, but it's okay.
She texted me during the show, gritting her teeth, like, "Oh my God, Sosnoff is trying to correct me, and he's wrong."
Well, she tried to fatten me up. She got in this morning, brought some cookies, tried to fatten me up. I didn't fall for that little scam. 1-855-238-2789. We will take some calls if you want to call in, just because I don't usually have TP on with Scott. 1-855-238-2789. There you go, 1-855-238-2789. If you want to ask Scott or TP a question, give us a holler. I'm only going to take 2 or 3 calls max. Let's bring in Scott, John, wherever he is. A day without Tony is a day without thunderstorms. Hello, boys.
Wherever I am, like what, first tee, ninth tee, where am I?
I don't know where you are.
I'm here.
I'm not in charge of your schedule. I have enough stuff to do in my life. I can't track you down.
Yes, you do. Hi, TP. How are you? TP, the goats good?
The goats?
Yeah, don't you have goats?
No, the goats have been gone for 10 years. If you and again, this is like, 2005, your meme is calling. But you ever watch those videos of the screaming goats, like Yugoslavia?
I love the screaming goats videos.
Oh yeah, they're great, except when you're living it. So when we used to have goats, long story short, got some of these stupid white goats from some contest these other people had, took these goats in, go out the back door in the morning, and they would start a couple of 100 feet away was where we had them, and they would scream for food. We had the goats for, I don't know, maybe 6 months before we sold them both for $100. Best trade in my life. Guy comes in at a pickup, says, "Sure, I'll take your goats." Took the $100. I helped him push the goats into the back of the pickup. I think they became cabrito.
I think it's a Geico commercial where they have the neighbors and they open the door and the goats and the neighbors are screaming.
Scott, I know you're laughing, Scott. It really isn't funny. It is the most. Like I say, you ever look at those Dutch masters paintings from the Middle Ages and they're portraying Satan and all that? And Satan has goat's eyes. That is exactly what they are. So they're satanic creatures. That's why I gave them the name. Tom was mentioning earlier, classics and all this crap. I named them Phobos and Deimos, Panic and Terror. Those are the 2 little deities that would accompany Mars, the god of war, into battle, Panic and Terror. So I gave them those names because that's basically what they were.
Appropriately named, it sounds like. That's
yes. Fun. Scott, next time you need a pet name, give me a call.
I got it. Tom's getting ready. Tom's not going to listen to you on names, although he did pay you a compliment yesterday.
No, he didn't.
Yes, he did.
Scott, I am selling that with both hands.
Nope. He said he loves running his name ideas past TP.
Yeah, because I'm his counter indicator.
Oh, that's why. TP, just take the well, okay.
I have a lot of counter indicators, TP. You're one of them.
I'm one. You're one. Slappy's one. Is Jules on that list?
No. Jules has a lot more sense than you guys.
He's exempt. I'm part of that group, TP. Happy to be part of it.
I'm proud to be part of it.
Beautiful.
But I will say this, TP, I did tell the story that when I ran the name Tasty Trade by you, you were all in on it. You loved that name.
Oh yeah. Yeah, we were sitting at the Palm Steakhouse in Las Vegas. I remember it well. Crowd of, table full of people. He looks over at me, he says, "What do you think of the name Tasty Trade?" I said, "I like it." Didn't know what it was for. It doesn't really matter what it's for. And that's what I think business gets wrong. They worry about the product and all that, and what the company's going to do. The name is 80% of it.
You don't need any money. You don't need no stinking.
Right. You don't need an idea. You don't need a product. You just come up with a name.
How long did Amazon not make money and became, huge?
Long time.
Amazon, great name.
Great name.
Well, I mean, now you think it's a great name. At the time, you probably didn't think it was a great name. I mean, when you think about it, like how good a name is Apple? It's not a great name. It's just,
They did it because they wanted to be first in the yellow pages.
It's a major fruit. I mean, just go to some random person in the street, name a fruit, apples.
It's true. Do you have a go-to? Honeycrisp.
Go-to fruit?
No, go-to apple. Honeycrisp would be mine.
Oh, you know what? You were talking about Costco earlier. Costco has Cosmic Crisp apples, organic. They have them down here anyway. Absolutely delicious. Love the Cosmic Crisp.
Have to look for it. Don't think we have them. I don't think they make it north of Texas.
They have those. Trader Joe's has the Cosmic Crisp apples.
There we go.
I use them in my house as a like a decoration. And
how long do they last?
Couple weeks.
Couple weeks. About 3 years. You just roll the mold over and go to the next one.
Couple weeks. But the funniest thing is, every time I go to Trader Joe's, it's really interesting how they train their cashiers. They train their cashiers to try to like make small talk with you, which is interesting. They like, they say, "How's your day?"
That might just be somebody being pleasant.
No. They train them because everybody says
on your radar, like asking somebody how they're doing.
No.
So buying those Cosmic Crisp apples again, I see.
They'll say stuff like, "Oh, I love those apples. I love those. I love those dumplings." Like they make small talk. It's intentional, and
that's intentional.
It's good. It's a smart thing on their part, and it's one of the things I really love about Trader Joe's. But I guess my point is, it's really nice, but I don't like it. Because I don't like when they say, "What are you doing this weekend?"
You don't like people when they're friendly? You just like to be grumpy?
Yes.
Hey, take your stuff and get out. Take your order. They throw it at you and just say, "Get out."
Well, we're the only country in the world that does this.
Does what? Being friendly?
Yeah, that's friendly.
What are you talking about?
There's no other place in the world where people talk to you like that. Nobody's friendly. I mean, where have you been in the world where people will actually, initiate small talk with a stranger? It doesn't happen.
Yeah. And it's kind of relaxing. The times I have been overseas, it really is.
Don't second guess me, Scott. It's that way all around. Nobody makes small talk.
Okay, I don't want to hurt your feelings. I think it's you. Okay?
No.
I don't think people want to talk to you. I travel, okay, and I know people have conversations.
Because you initiate them. You're like, "Oh, having a nice day?" Whatever it is you say. But that's not.
Haven't you seen the videos on whatever, TikTok or whatever of, my Eastern European wife, joyful, sad, and it's all the same face? They're the best.
Eastern Europe, you go to anywhere in Eastern Europe, they won't even look at you. They look away. Nobody will smile. Nobody looks at you.
Okay. I'm speechless.
And that's a cultural thing. Back in college, when I was studying, I took Russian classes, and the professor said, what amazes Russians when they come to America is how tired their faces feel after smiling and talking so much.
Right. I'm telling you, you walk down there, Scott, you're dreaming if you think that people are anywhere in the world are friendly. They're not.
Okay.
They're very nice. People are very nice.
I apologize to anybody outside the United States who's watching this show right now. I apologize. I think we're going to move on. Let's go to
It's not even. It's not a bad thing. They're very nice people. They're nicer than us.
It's a different style.
It's a different style. That's all it is. We're
It's
just
a different style.
We're phony about it. We'll say like, "Have a nice day," when we really don't even care. Like they won't say
oh,
that.
yeah, Tom, I love your beret.
Yeah, right.
Yeah, your gray hair falling out of it like Brooke Shields. No.
That's why the guy at Trader Joe's, when they go, "What are you doing this weekend?" He doesn't care what I'm doing this weekend. They would never say that in Moscow.
I have to tell you, we've been doing this a long time. This is the craziest conversation I've ever been a part of. Everybody outside of the United States is rude and doesn't care. So don't ask.
No, that's not what I'm saying at all. They just don't want to. They don't want to engage in small talk with you.
Okay. Okay.
All right, here, I'm going to save us. Because one of my buddies is on the phone right now.
Oh my God.
Wayne, save me, man. Save me.
Oh man, what's up? What's up?
Tell
How you
Scott.
guys doing,
Tell
man?
Scott. Tell Scott he's crazy. Okay. This is Wayne.
Scott, you're crazy.
Thank you.
You're crazy. You're crazy, man. It's almost a year ago. You guys were up here last year, this weekend. I miss you guys, man.
Wayne, Scott, just a TP. Wayne's in Toronto. He's one of my buddies in Toronto. He's a great guy.
Canadians the worst. They don't even look at you.
I love Wayne. Wayne, yeah, but you know, Wayne's a nice. See, this is the whole point. Wayne is a great guy. Okay, it doesn't matter if he smiles or whatever.
Hey Wayne, I'd ask you what you're doing this weekend. I'd ask you what you're doing this weekend, but apparently I don't care. Okay.
Well, I really called to see what happened, man. Tony mentioned penis on last call, and now he's gone. Is this like a Shannon Sharp situation? What's happening, man? He just disappeared.
Tony, he pulled a fast one this weekend. He was like, I'm gonna go. I have to go away this weekend, and he goes, "Oh no, I bought the tickets for today. I thought I was buying them for tomorrow." You know, he pulled a classic Batista.
So TP isn't the new Tony. We're not going to see TP on the network now full time.
No.
Okay, I got to stop you right there. Putting TP and Tony in the same sentence, no. Okay, no. We're not going to change it.
So, is Canada done completely? Any chance of bringing this thing back to life, or it's a done deal?
Well, in this iteration, it's done. I'm never going to say there's no chance. You know that in the future we might make a move for up there, but it wasn't going to happen with what we were looking at. So we pulled the plug on it.
Wayne, it'll be cheaper for us to just move you to Chicago. Okay. I'll move you and your wife to Chicago, and we'll, it'll be cheaper for us than to go to Canada. Okay.
You'd be very happy. You could unleash your inner small talk, Wayne.
There you go.
Well, with everything that's going on, I still have to keep my place in Toronto, but maybe second home or third home, Chicago. It's a possibility.
I mean, you know, you did have a little Bulls fan in you at one point, so you know.
Yeah. So, but I was just calling to say hi, guys, man. I miss you, and even though Tasty, the platform's not coming up here, I still love to get you guys back up here to maybe come and visit, speak, talk to some kids, do some stuff like that.
We very well may, Wayne. Just stay in touch, okay? Thanks so much.
Yeah, I will.
Thanks.
I will say hi to everybody for me. All right. Love you guys.
Will do. Thanks.
Before you
Next
go to
one
more
up.
phone calls. Oh wait, before you go to more phone calls, let me do my list really fast. Then
Let's
you
do
go back
the
to
list.
phone. Yeah. All right. Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you. Number 20. UVXY at an 18. For everybody else, Amazon at a 14. Apple at a 25. Tesla at a 12. Nvidia at a 20. Meta at a 9. Coin at an 11. Reddit at an 18. AMD at a 36. Hood at a 20. Microsoft at an 11. MSTR at a 14, PLTR at a 41, UNH at a 37, IBIT at a 28, GLD at a 17, TQQQ at a 27, Roku at a 13, TLT at a 13, SoFi at a 16, and number 20 for Tom UVXY at an 18.
All right. Let's go to, I think it's Fuad. I'm not sure if I said that right.
Hello.
Hey, Fuad, how are you?
Yeah, thanks for taking my call. You said it great, Tom.
All right, I got lucky. How can we help?
I have a quick question. You know, you guys introduced me to trading and option and future on options, and I'm trading in an account about 150, and I had a copper trade on where I was short the $5 put on the expiration coming up. And as you know, after the adjustment of the tax, it went down to 4.5 now, 4.4. So my question is, should I my losses, or I'm fully prepared to carry the actual contract and roll it forward? What would you suggest?
And what's the underlying?
Copper. Copper sold off 20% on the other day on the news, but it snapped back. What did it trade down to?
Low fours, I think. Low four handle, and then it was up yesterday. Let me just see real quickly today.
Yeah, it dropped down to like 420. He short. Squad, you're short the 450 put.
No, I'm short the 5.
Oh, short the 5 put. Okay, sorry.
Yeah, I mean it doesn't matter. You're short the end of the money put. I mean, do you have nothing else on? Have you sold any calls against it?
I did, but I cashed the call out because it was like 99% now.
Got it. Listen, it's a tough one. If you're going to hold a copper here for whatever reason, which I can understand because you've already pretty much eaten the loss, you got to sell some call against it. And you can't sell it above the 5 strike. It's too far out of the money. You're going to have to sell something closer to at the money and hope that the premium's jacked in there right now. So I would sell something if you can get it off at a decent price. Copper's up today. I'd sell a call against it and hold it if you're inclined to do that.
Get assigned and roll the actual contract forward.
Hold it. Have you been assigned yet, or you're just saying you're going to be assigned?
Going to.
No, I haven't been assigned, but I was thinking maybe I should, wait till I get assigned and roll the contract till the copper recovers.
I mean, you certainly can. I'd rather roll the contract than take the assignment. But
because you're coming up on 25 days.
Very bad.
I mean, the five puts still have a lot of premium in them. So I'd rather roll the contract rather than take assignment. But that doesn't stop you from selling the call.
Yeah, absolutely. I was waiting a couple of days after the huge drop to see if there's recovery before I sell a contract, so I don't get a website.
Right. Okay, then that makes sense. Then I would roll the contract, don't take assignment, roll the contract forward, and sell some call against it if you can, whenever there's a rally.
And Fuad, just keep in mind when you're rolling, you're going to be those next options deliver the D's future. Just be aware of that.
Yes, absolutely. Yes, just the option market on copper is very bad. Like the spread is so much apart.
The markets in there were almost $1,000 to $2,000 wide on the options, and they're not even trading. So you have to hope that you get lucky on rolling the spread into a rally, and you have to hope the markets get a little tighter. There's virtually no volume in the options, and even today, I'm just looking right now. If you even go out to set markets today, they're still crazy wide, but they were like ridiculous wide. Now they're only like $100 wide. They were $1,000 wide, 2 days ago.
Yes, that's what I noticed. I was like accepting the idea of just getting a sign and carrying that contract forward. But I will just give it a couple of days more to see if it will get better.
I mean, you can do that, but if you roll them, at least you'll save yourself 300 or 400 ticks, because 300 or 400 pips, because that's what's still in that's the amount of extrinsic that's still in there. So if you roll to September, so I'd probably roll. Yeah. All right. Hey, well, thanks.
Thank you so much, guys. You're great. Appreciate you.
Thanks so much. We'll get one last call. We got Eddie. Eddie's in where's Eddie? Eddie's in Texas. Hey, Eddie.
Hey guys, I wanted to get a little bit of a different call today. I wanted to bring you guys in on what's probably one of the most pivotal times in my trading career. So I'm 26. I just took 26 yesterday, and I plan on going full time using about $80,000.
Eddie, it's hard.
Eddie, we're having trouble hearing you. Can you speak into the phone more? I can't really hear you.
Gotcha. Is that better?
It's a little better. Sure.
All right. So I'm trying to trade full time as a 26-year-old.
Okay.
And I have about $80,000 to $100,000 right now.
Okay.
And I'm thinking about quitting my job and, basically trying it out for a year. And I'm a little scared, but wanted to hear what you guys' thoughts were on that.
Well, you should be scared because it's a tough transition. And you say you have $80,000 or $100,000 to work with, or you're up 80 or 100. I didn't hear you said.
My net leg right now is 80.
Okay, so the challenge for me, and I can't speak for Scott or TP because they could say whatever they want, but the challenge for me is that I think you need to get to where you have portfolio margin at like about 175. You need to about double your account size because if you want to trade full time, you kind of need the leverage of portfolio margin. Could you get away with it with $80,000 to $100,000? The answer is yes, but you think about it. Even if you do a 50% return, you're only talking about 40 to 50,000. And I think that I don't know what you're currently making. I don't know any of this stuff. But realistically, if you're talking about realistic returns, I'd like to see you closer to get to that portfolio margin level. But I'll let Scott and TP jump in.
I would agree. I totally agree with you.
Yeah, the thing is, Eddie, you got to make sure you can cover your bills. You can pay your bills. So if you can strip stuff down and live as, a Spartan lifestyle and not have don't have a big nut to cover every month. But the other point is if you do this, and I know it's scary, you will learn more about trading by doing it full time than by doing it part time for 10 years, because you would be jumping off into the deep end of the pool. Yeah, it's scary. Yeah, it's dangerous. Yeah, it's going to be hard, but you will learn. That's the way the three of us started 25, 30 years ago, to basically just throw you in there and see if you survive.
Eddie, okay. I hope that helps. Thanks so much. We're exactly out of time right now. We got to go.
I appreciate you guys.
Thanks, man.
Hey, TP, nice seeing you, and I hope you have a good weekend. And I mean that.
Thank you. Thank you, Scott. And Scott, look at me smiling at you. I hope you're doing well. I hope your lovely wife and children are doing well also.
Thank you. And Tom, to make you feel better, GFY. How's that? Now you feel better.
Hey, Scott, I just got to run this by you. Yeah. Do you think Tom is the Sydney Sweeney of trading?
Oh, you had to go there, did you?
With the hair.
Did you not see the picture of me that Tony posted yesterday?
I saw it. And it's, I think it's a possibility.
All right. Have a good weekend, everybody.
I'm Tom Sosnoff. Right. He's Scott Sheridan. He's Tom Preston. Thanks so much. Liz and Jenny coming up next.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line, this is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So,
started.
He
we
was
did-
my friend first, clearly. Met at work.
Yeah, at Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. It's a very special day. My name is Liz Deerking. The beautiful brunette over there is Jenny Andrews, and we have a special guest. He's at the bar, not drinking. Glenn, everybody, slow clap for Glenn.
Thanks for having me, guys. Happy Friday. How are we feeling?
Happy Friday.
You
I feel
guys-
like it's a Thursday because I'm in red. I almost brought us in.
He looks red on camera, though.
Did you hear the clapping we were getting? Welcome, Glenn. He's our FX expert. Usually on. That's why I thought it was a Thursday. I'm in red. Glenn's on.
When did the sound effects come into the office?
I know. And now the game has changed.
It really
It's sound effects all the time.
I want to get a wah, wah.
So this is going to be a good show because, well, we've got Spoos down 102, and we must have things moving in the FX world.
Big time. Yeah.
Big
Not usually here on a Friday, but glad I am because
Did they make you come in specifically for this?
no, I'm in every day.
Do the new, here's my question. Do the new hires come in every day? Is it like, during COVID, we were all home and then everyone slowly came back 2 days, 3 days, but now the new hires, are they just in every day?
It's pitched, I think, mandatory 3 days.
Uh-huh.
I live very close by, and so for me, I get probably $30 of value out of coffee and food and snacks.
Oh, yeah.
So it's very easy for me to come in. And I only have one monitor at home. Here I have two.
Okay.
And, Friday vibes in the office are spectacular.
It makes sense if you're a young person, free food.
Well, I'm not going to lie to you, Glenn. I'm going to make some assumptions here. You're young. You're not married, correct?
I'm not married.
So, I mean, when you're young, if you are working from home the whole time, you're not going to meet anybody.
Right.
Like, as a 50-year-old woman, I don't want free food, but if I'm a 23-year-old guy, I'll take the free food.
Exactly. Yeah. So, yeah, it's fun here. But
I don't want free food.
On a shirt.
But I can see why Glenn comes for the free food.
yeah, but glad to have you guys here on a Friday. You guys
We're coming
have
in for
much.
Oh, yeah, you can take me out to the ball game. I've got my...
Let me release my hat. Where's the...
But don't lose it.
I know. My husband
It goes
said,
right back on.
You can't buy this hat anywhere anymore. So my husband said, if I don't come home with the hat, don't come home.
I will make sure. I will make sure you go home with that hat. Glenn, I usually don't sing, but today is one of the days, the one day a year that I do sing. Last year we were all singing. Is it only when they get a home run, or at some point in time, or the end of the game, when everyone sings the "Go Cubs Go" song?
Oh yeah, when they fly the W.
Yeah, that's usually when they win.
When they win.
But guaranteed you have the 7th inning stretch song.
Right.
Take me out to the ball game.
Game. You're too young for this since Ryan Sandberg died.
Well, he's not too young for it. It was all over the news last week.
I know, but he didn't watch him play. He wasn't even born yet, right?
Correct.
Yeah.
But
It's
yeah,
not like a
great
special
guy.
place in your heart.
I
My
hear.
husband cried 3 times that day when he
He
found out.
did?
Yes.
But yeah, now they're wearing like a patch for him, or they have something on the field. So
Yeah, I'm kind of curious to see what'll happen at the game today.
I'm sure there's gonna be dedications. Even the White Sox park had dedications to Ryan.
Yeah, it'll be. So we're lucky. We're lucky the SIBO's taking us.
100%.
They, it's kind of nice. Get to go to the private club. All unlimited food and drinks. They had very good chicken and waffles.
50-year-old unlimited.
Once a season.
Once a year, unlimited food and drinks.
That's pretty funny.
Oh well, all right. What do we have going on in the FX world today, Glenn?
FX World today.
Is anything going on in the market? I mean,
You guys are already.
Spoos down 107.
But
Yeah.
they've been down 100. No, I'm not saying it's the same, but they've been down 107 all day.
They were down overnight for sure.
Yeah.
But yeah, much different story if you're tracking U.S. dollar, because early this morning, 7:30 Central Time, 8:30 Eastern, we had the July non-farm payroll report, which is more closely related to U.S. dollar prices because it's one of the two mandates that the Fed has. Fed sets interest rates, pretty clear trickle down for U.S. dollar demand, and so we had a very surprising non-farm payroll report.
Really?
Only 73,000 jobs added in July.
And that's lower, right?
They were expecting like 110,
Oh.
but even more so than that, they revised their numbers for the past 2 months. So the month previous, they had at 147,000 jobs. Today looked again 14,000. So somebody missed a decimal place.
What?
So yeah, those revisions
Would
sparked.
you argue non-farm payrolls is like your Super Bowl? Like, is non-farm payrolls like the FX?
It's usually pretty good, but Wednesday we had our Super Bowl. Fed meetings are usually the Super
Fed
Bowl,
meetings are Super Bowl.
but they're getting too boring.
How are the non-farm payroll every month?
Yes, yeah.
Every month. So once a month.
Once a month we get those employment statistics, and we get kind of some.
I never looked at non-farm payroll.
We look at that on the calendar and we're like, whatever, whatever. I didn't realize.
Ends up all night long thinking about non-farm payroll.
How many jobs? How many jobs? Yeah, but usually a pretty important number. And on the slate of this economic week that we've had a GDP number, we've had PCE inflation, we had a Fed meeting. All those signs pointed to in a good place, no rate cuts coming. And then this much weaker job market spurred a ton of dollar selling as that contradicted all the other indicators. So definitely got a volatile morning today.
So let's jump into FX and take a look at so everyone could see what Glenn's talking about, what's moving. So if I look at these popular USD pairs, what should I open up to?
Can we look at our positions first?
There's nothing worth looking at. All we have is
shekel is still bad.
Shekel's still bad.
But we took half of our shekel off.
Oh, that's
we
good.
just have half. So whatever. If we're only down 100, honestly,
that's not bad.
This shekel position at one point was down $300 or maybe $400. Now net, we're down 145. I closed my shekel for a loss at some point in time and was glad I did. My FX trading is net positive since we've started.
All right.
So I don't mind if we close that for a loss. We've made a lot of money back from where it was. I don't know what you think about that. I'm not afraid to take losses. I don't know how you feel about taking losses.
Yeah, I think in this space especially,
I don't mind holding the shekel for life though. Like I feel like at some point it's going to turn around.
it is still at pretty historic lows. That
Here we are.
there is.
Yeah, I mean, if I looked at that, I'd get in the position today.
But yeah, it's also a question of just redeploying capital. So you have a ton of capital available. So if you're not necessarily going to use this immediately, then you could stay in it. But if anything categorically has changed,
But we're clawing our way back, Glenn. We were down 400 or 500, I think, maybe even more, and now we're only
the
down
second-
200
the
since
second
we've
shekel is a
started.
winner. Right.
And really, what's taken us down was the shekel.
Mm-hmm.
It was. That's kind of where that's the only loser we.
How many times did we say shekel already in this episode?
more than I've heard all week. So
So
that's good.
it's not like really a hot topic anymore. But it's just a matter of do we keep this position on? Liz says she'd double down today.
I mean, looking at this, it's still at an extreme. I mean, unless we need the capital, unless
Right.
you're going to take, and Jenny, I'm not in control. So unless you want to take all of our capital and put them in other positions.
You may say looking at an extreme, but that's just this brief moment in time. You go before that, and it's not really. Like look at the time frame.
2020 to 2022, it is not.
No, I mean 2020, 2022. It would be worse for us.
No, so we're long this, but you guys are long this position. So right now we are at the lowest levels since.
Just recent. This.
When you say it, we say we because we're all a collective team here. So we are along this position.
We're at the lowest levels in this period of time, this highlighted period of time.
Right.
But then if you go a little bit before that, it's much lower.
Correct. Yeah. If you want to zoom out, if you hit daily up there in the top left, then you can switch it to a weekly or monthly, and then you'll get more.
And then people will see.
Right. So yes, you are correct. Back in 2022, we did get down a lot further below this level. So
Right. So and what was happening then that went on? Do you remember,
I
Glenn?
do not know.
You were probably in high
I
school?
can't say I was not tracking shekel prices in 2022.
We're in high school.
I'll raise the hand on that one. But yeah, let's.
2022, we were just at home working from home. I was
middle of the pandemic.
I was baking and painting and I wasn't watching the shekel.
I wasn't much on the shekel either.
But yeah, let's look at some more popular U.S. dollar markets because that's what's moving today. If we go to the watch list, where I would look first is just at that net change percentage column.
Oh, here we go.
And you're just looking at those popular U.S. dollar pairs, and you can see Euro USD over a percentage move. USD JPY dollar yen almost 2%
Well,
down
this is the big one. This is the biggest move I see.
Are you circling something that I can see?
Can you see? Oh, how do I? They can't see my arrow.
What are you saying? This? Just say what you think of this.
Okay, the USD JPY. The USD
Exactly.
JPY, where you see the net change of 2.7. That's the biggest one I see on here.
Exactly. Yeah. So if we want to pop that into click on that and then pop into the trade tab, we can get some graphs on that. Let's
Oh, it looks big, but then you look at this chart and you think, because I'm still on the monthly.
Exactly. So
Hang
let's
on,
go.
hold on.
Let's go into daily and then zoom in, scroll in, just with your mouse. I think you can scroll in on there. Yeah.
There we go.
Look at that move.
But it really, so yesterday it shot up and today it's just giving back what it shot up yesterday.
Exactly. So this week we've had, a major dollar comeback, dollar resurgence.
Mhm.
We had the euro dollar drop from 117.5 to almost 114.5. So over 2.5% move there to the downside. Now we're getting a reversion back. Similarly here, but flipped. We hit a 4-month high yesterday in this dollar yen, and now giving it nearly all back, trading
And then
back
some,
to
yeah.
trading back to 148. So what this does is it gives you an opportunity. If you still wanted to be long dollar, and you thought earlier this week you missed the boat because we had such positive data.
Mhm.
And now you're getting a better entry price if you want to be long dollar, but you're also, if this non-farm payroll report, categorically changes now. The interesting thing to look at for me today was using the CME FedWatch tool.
Okay.
That's how you look at, where futures traders are positioned, what they expect the cutting cycle to be. And looking at it yesterday, we had a 60% chance of no cut in September. Looking at it today, they've completely turned that around. 80% chance of a cut in September.
Really?
So traders pricing in 2 rate cuts this year. We actually have a Fed speaker. He's probably wrapped up now, but that was talking about an hour ago.
What was it? A descendant? A dissenter?
I don't think it was a dissenter.
Oh.
Bostic? I don't know. I don't.
And bonds are up over 115.
Yeah. So we're starting to get a little bit of a pullback. If you see, on this candle, we were plumbing below 148 in this, and in euro we were, reaching 116. So we're getting a little pullback after he was saying, they're looking at maybe 1 rate cut this year. You could treat this, as a very sharp reaction.
Don't you kind of think the numbers are more important than the speak?
You could, except you think about this one number. What they did was they revised their past 2 months.
True.
And so
Just a decimal. Like
do you
this, yeah.
do you trust this when before the next Fed meeting you'll have 1 or 2 more, just one more of these numbers, right? So another chance for this to be revised, possibly higher. It's just one, data point.
You just wonder why didn't you get and look at the non-farm payroll numbers
You can't get them in advance.
before?
You can't.
Before, like this is a day, 2 days later. How about why don't we have our Fed announcement next week?
Exactly.
How about on Monday instead of Wednesday, and we wait for these non-farm payroll numbers to come out?
Right.
That would have made more sense.
In this scenario, yeah. So yeah, I mean, it's just all about how you contextualize it. If this is just one blip on the radar, you still think, we haven't had a cut so far this year. Is this people overreacting? Now you have a speaker, someone that actually will decide, saying, just 1 rate cut, we'll see more numbers. I don't know, but definitely an opportunity here.
Well, you say opportunity, but I look at this and I think, geez, wish I would have gotten in yesterday. I don't look at this. I kind of think, oh, okay, we gave up what they bounced up yesterday, and I might wait to see how things shake out.
Yeah,
I do think a lot of the people trading this, and correct me if I'm wrong,
Mhm.
are quick in and out. Like, so that's why when he sees a big move like this, it's an opportunity, because you and I are so trained to be like, let's look at it once a week, where a lot of the trades, you're in, you're out, you're in, you're out. Sometimes that's why it's one click, because they can't hit 2 clicks.
And they'd be out because they would have got in yesterday. Like they would have got in, I think people would have got in selling this yesterday and they're out today. Yeah. So if you sold this yesterday and you're out today, you're not putting out a new trade.
You might buy it back.
Right, but
You might buy it again.
Yeah.
click on the daily again, and let's go to hourly. And that'll tell you kind of 1 hour.
Keep going down here at 4 hours.
And this will tell you, kind of how we got to where we were. We saw, a steadier climb up throughout Wednesday, Fed announcement, Thursday, really throughout the whole day after that inflation number came out. And now we're right back to where we were pre-Fed announcement.
Pre-Fed announcement. Okay.
Yeah, we're right at that level. But you can see in the past hour, we had the first hourly candle there, a huge move, a continuation into the next hour. And then when U.S. market open kind of consolidated, we pushed back, a full 50 pips from where we were at 147, half those lows.
Mhm.
And now we're consolidating a little. So you're right in saying that this is perhaps an opportunity for quicker trades, where if you don't have kind of a long-term view on, okay, now this is a cheaper price. If you already had positions on, say you were long this market and you believed yesterday, now you have a much better entry point if you still believe that. Whereas there's also kind of perhaps a mean reversion play here, where you think, this was a crazy non-farm number, but the reaction was
The reaction was crazier than the number.
But if you think-
might have been an overreaction, then there's gonna be a correction back.
But if the Fed rate tool is showing you now there's going, 80% chance there's a cut or 60% chance there's a cut, and if the cut means that the USD JPY is priced around here, then if you think there's going to be that cut, you wouldn't expect this to bounce back up.
Correct, but that tool is just trader speculation as well. So, we've seen a big difference before in what the market's pricing and what the Fed actually does. So there is some asymmetry there, but of course, markets are efficient. So this is...
There's a way to do, Glenn, come up with some kind of pair of, if we got into this, let's say we got into this and we bought this, so this is going to go up if there's not a rate cut, but if there is a rate cut, bonds would pop even higher. Maybe you get long this, but you sell puts and bonds, and it's like some type of pair. Do people create pairs with this and bond positions together?
I'm sure, yeah. It's harder to, size as like a pairs trade, perhaps, but
notional.
I'd think of, if you are not as confident in like the larger picture, but you want to, put something on the reaction, then you could put kind of a smaller time horizon, maybe a symmetric risk reward trade on with defined risk. So you could say like, okay, this has moved almost 300 pips today. Its normal range is about 100. If you bought this here, you could put in a take profit for maybe 50 pips and also a stop loss if it goes past those 50 pips lower, and say, okay, this is the level where things categorically change. I was wrong. This wasn't an overreaction. It's going. This pair is
Let's do that.
trendy.
Let's put a stop loss.
Okay.
We put it in for profit, and we usually don't put our stop losses in. Let's put both in.
Yeah, Glenn, so walk me through this. So we're gonna just try to take 50 pips out of it. So say we want to make $50 on 50 pips. How much do we need to put in?
Right. So first, I would hit the buy price if that's what you want to do. Hit that.
Oh, where am I?
I don't know where you are.
I'm trying to find it.
on the trade ticket.
Hit the buy and sell. Hit the buy.
Yeah, hit the
147.994.
In the trade ticket.
Oh yeah, here we go.
Yeah, hit that.
There we go.
Okay, and now you can size it up, and so in that size, I would hit and then hit the plus. And so this is one that is harder to.
Just do a 0.10.
Harder to size because it's not quoted in U.S. dollars. It's quoted in yen.
Yeah.
And so, let's see if you were doing.
So if we do 0.10, that's
$500.
$500 in buying power.
So you're looking at $500 in margin, and your per pip movement is around 70 cents. So 70 cents times 50, you're looking at like a $35 gain.
Okay, sure. All right, we'll take it.
Yeah. And then we'll put the stop loss in for a $35 or $50 loss or something.
Okay.
You know what I mean?
Yeah, so you can either enter in your stop loss and take profit on this ticket.
You can?
Yeah. So
do that.
Yeah.
Walk us through it.
Yeah. So
Stop
just
loss.
in that next one, you'll click the field and you can just type in 50.
Well, I'll click here.
No, where it says normal. Go to where it says
Yeah.
stop loss.
Yeah,
And
and
the
box to the right.
To the right of it.
Yeah.
And I'll type in what?
50.
0.50?
Just 50.
Just 50 because it's in pips. Yeah.
Oh, so
50, not 0.
50.
And then take profit 50 pips away too, don't you think?
Yeah, for a symmetric risk reward. Just because if you're looking at the tape action here, that 50 pip stop loss is right where we pushed those lows.
So will it, when she hits place trade and you don't have to do it yet, will it show me the lines on the chart?
It will, and then you can edit them right there
And you
as
can
well.
move them up or down.
Exactly.
Okay, so I'm going to take 50 pips stop loss or 50 pips profit, which will be about $35, but it doesn't tell me that anywhere.
You need to call Glenn and ask.
So it tells you that where it says 5,000 yen. So because this
5,000 yen, and you said that's like $35?
34, yeah.
$34.
So, just because this is one of the ones, if you're trading euro dollar, then that would be a little bit easier to see on the ticket just because it's quoted in dollars.
Did they ever add the conversion in for simpletons like me? So to convert everything to what the dollars would be per yen. So the next, did they ever add that in?
I think so. It would have to be
too many moving parts.
It would have to be indicative, just because the contract you're actually trading is in yen, and so it's not like it's settled in dollars. There is some conversion after the fact, and so you wouldn't want to be tied to this because if we're at that level, then it'll be converted to dollars at that exchange rate, which isn't what it is right now. So.
I gotcha.
There's some more math involved, but you can back the envelope.
I've got my calculator out for all the people at home who say, how do you look at 5,000 yen and get $35?
Mm-hmm.
Walk me through it.
You would go. You would go 5,000 because that's what you have.
Got it.
And then you would divide it by 148.
0.122, where it's one divided by, where it's trading right now.
Like back in math, it's the bid and the offer.
Right, and so you could even get.
That was my moment.
And so if you're doing like the take profit, what you could do here is like if you're doing the take profit where we are right now, that would be 148.5, and your stop loss would be 147.5. But you could just for rounding purposes just call it 148.
Sure. Okay, so yeah, $34. Because I knew there was a way. I'm looking at the 5,000, I'm looking at the 148, and I'm trying to think of how did Glenn come up with $35?
I know how to do it now. You take that 5,000 divided by, we're going to the neck and math, around about the price of what it is now.
Right, so that is the formula. If you're lazy like me, you just type into Google US dollar to JPY, and then Google does it for you a little bit.
Well, that's what I wish they could put on there. Just right next to it, say 5,000, and then in parentheses, and they could be doing it. And you can just say all
instead of doing the math
by the bid.
Right.
So you can say it's all taken by the bid or the offer, whichever one you choose, and then it's right next to it in US dollars.
Currency conversion.
So I'm going to place this trade, and then we're going to walk through the exercise in another underlying and we're going to do the math.
Wait, deal confirmed. Look, there's only one line.
No, then there's a dotted line here and dotted line here.
Yeah, click on click on the 0.01 lot, the middle line.
Do you see that dot, how tight they are?
Click on this.
Yeah, So now you can see exactly where your take profit and stop losses are.
Okay, good.
If you wanted to, move that stop loss around.
Looks good.
Yeah. So for this time horizon, you're looking for.
I did not see the take profit line originally.
And I think what's confusing for new people too is like, if Glenn weren't sitting here with us and I said, Liz, what are we going to type in for the stop loss or take profit? We wouldn't have come up with 50 pips.
No, but the back-ended way is that if you would have placed that trade, I would have put that line there and that line somewhere around
exactly.
there. I just wouldn't have had any idea what we'd be making.
So there is a visual way to get into what you're trying to what you're already thinking about in terms of profit expectations. You're thinking, okay, we've had a very large move. I expect it to come back a little bit, perhaps, and just set those graphically. But then,
It should be out today.
a little bit.
Honestly, well, I'd like to do more, Glenn, but it's already 10:30.
Oh yeah.
I agree, but this is.
It's good. It's good.
Back Thursday.
Yes.
Hopefully, when you come back Thursday, this is gone because we took our profit and not stop loss. We'll know by our P&L.
Hey, you know what? Everybody that I talked to yesterday, I was at an event. Everybody's like, you learn way more from your losses than you do your wins. We're gonna be like $35.
Glenn,
Awesome.
thanks for joining us. Have
Thank
a
you,
wonderful
guys.
weekend.
Thank you. You as well. I don't think you guys will be catching any foul balls from behind home plate, but
No, probably not. There's a net in front of us.
These will have gone horribly wrong.
I'll make sure Clink has it on his big
Yeah,
monitor,
we'll be
so
right
we'll
there.
look for you.
So if you look at the plate, we're a little bit to the left.
Okay.
If you're watching,
pitcher.
if you're the pitcher,
If you're the pitcher, we're a little bit to the left.
we're
Got it.
probably 5 rows back,
Don't flinch.
right?
The internet will make fun of you if you flinch.
We're right in the aisle though.
Yeah, but I think we're about 5 rows back.
Yeah,
if they're the same seats as last year.
That's where we're gonna sit.
Regardless. Awesome.
All right,
Have a
Glenn,
great time,
good to
guys.
see you.
Yeah.
We'll see you next week.
Bye-bye.
Okay, so now SPOO's down 111. You've got some decisions to make, Liz. I'm going into our positions.
See the platform, please. Thank you.
We have our SPX trade here, which was
very confusing to me. I was going to ask you this on the train. So I know the little one. I know the 5100, 5150. I don't know this one.
Oh, is this just one of those baby call spreads too?
It must have been because the volume was in there, so we put it in.
Oh yeah. So I was thinking we still had one of those upside broke wing butterflies. We don't.
No, we don't.
We don't.
This is us seeing volume and having fun on the platform.
Yeah. Okay. Well, I'll close this one. What these were just so any of those people.
One. Well, depending on what side they did, but yes.
All right, hang on. What I want to see is I'm going to look at our activity to see what really we collected for this.
Well, we keep buying them because we can't afford to sell them. We
sold it for $1. This was not one of the high volume. Oh,
No,
theirs was much further and very wide. It was very different.
Yeah, so
we just
go back into these strikes. Go into these strikes because I want to see. I think we just took. They did,
but theirs was like $50 wide, and we made it $5 wide.
Yeah, they did the 60. They did the 25.50. We did the 25.30. So look at the volume on that. Change
the open interest.
Yeah. Oh yeah.
Yeah, because it's not going to be volume today. It's going to be open in the open interest now. So it was the 65.25 and like
65.50 or something.
6,700 or who knows. It was very wide, but we took the one strike and made it a $5 wide.
Yeah. So get out of this. We sold it for 125.
And we'll buy it back for 40 cents. Okay, we're out of that. And
the other one was in the same cycle.
I'm going to push this to the,
Oh, I got to do that other side. I'll do that afterwards because I don't know how to do it.
Today, all symbols, I will publish this to the follow page. Then the other side that's that baby spread. That's not making anything. That was a baby spread we paid 40 cents for. So
Does not make it, I mean, that's got a long way to fall if that's the case.
Oh yeah, we put that on 16 days ago. 16 days ago, SPY was a lot lower.
No. Yes, but it was still pretty far away.
16 days ago.
It was still very far
1,
away.
2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15, 16, plus weekends. I guess we're right back to where we were.
No, but that's what I'm saying, Jenny. That it was so
it was so far away.
Yeah.
So far away.
Yeah.
Yeah, so far away. So we just leave that. Now, our UVXY we put on yesterday is up $162.
Let's take it.
This is why we said if we put on 2, we close 1 and leave 1.
Yeah, but let's take it.
Oh, we only put on 1.
Yeah.
So we'll take it. Okay.
Is that our only green thing today?
Well, so if we take
coming back because we were short it yesterday.
I'm gonna look at delta.
So
I want to see if we have any short delta positions.
We put the UVXY in yesterday. We had the triple Qs, but I don't think we have it in here.
That's
yeah,
not
no,
put
we have a triple Qs
spread.
position.
And Joby's bearish. We have just very few. I'm just looking at negative delta. Oracle, triple Qs. That's just a residual, and that's useless
Pretty far
to
away,
us.
yeah.
Oh, it's going to expire today. So
Yeah.
that's not helpful. That Oracle, that's part of our spread, that pairs trade.
Oracle, yeah.
So as far as short delta, we don't have much.
Did you see the earnings from yesterday? So Amazon was down, Apple was up, and I wonder if they're still the same thing. And Reddit was up huge.
Yeah, I did see that. I'll go into that. So the only question with leaving this UVXY or taking this UVXY off, we don't have any other bearish trades.
I mean, I don't mind.
Rocket Lab and Joby. That's it.
Is Joby a win?
No, but Joby was a bearish trade. We have 2 bearish trades in this account.
Joby's up.
That's it.
Okay, let's leave the UVXY through the weekend because that's what I'm doing in my account. To be honest with you, I'm kind of sitting on my hands in my account for Cubs game purposes. But honestly, sometimes it's better for me to not overtrade in this.
I'm leaving mine till Monday too.
And let's leave it till Monday.
Yeah.
We're well aware of our risk, and we're well aware that that you can't take the profit. There's nothing you can do to a zebra that's profitable. I mean, you could ratchet it.
Well, let's see if we could ratchet it.
Yeah.
I'm gonna look. So to ratchet a zebra,
I mean, it's trading 17.41, which is pretty good.
we would close this.
Yeah, you could ratchet this.
We paid about $3 for it. What did we pay?
$3. Yeah, because you're gonna make
$2.98. Yeah.
you're.
So this is a good lesson in the ratchet.
Oh, look at this.
If we could take risk off the table. Then we go to selling at the money. So I'd sell 17s, and then there's 240 extrinsic value. You know what?
You can just do the 17.16. Just make it cheap because you and I both know that no matter what happens, it's going to. You can take $1 off the table. There you go. That's actually good. No matter what happens, if this goes up, it's going to go up. I don't mind a little bit of extrinsic value.
So I'm moving it to the 17.16. Honestly,
and we got $2 in risk.
Here's a good plan. We paid $3 for this. This is a 49-day trade. Now we're taking $1 back. So we have $2 in this. It's a 49-day trade. I don't mind leaving it.
And with this, I'm playing for a UVXY of 40. I'm not playing for a UVXY of 17.
So let's just keep ratcheting this until we have it on for free. Every chance we get, ratchet it. Once we have it on for free, we just leave it.
It's the ultimate goal.
Yeah.
Problem is if it turns right around, but that's okay. Let's leave.
Well, it doesn't matter. So what we're doing, we're taking $1 and risk off the table instead of closing it and taking $159 in profit.
Yeah.
But this is if I had a bunch of bearish trades on, whatever, we were going through our bearish positions on the train this morning and this. What do? Do we close them? We said close some, close one, close two.
And like I said, I'm sitting on my hands today. I do it on my computer. It's not for the first time ever. I have my computer everywhere with me. I didn't bring it to the Cubs game.
Well, we can't.
Would they have let us in?
No,
computer?
No, I don't think so. Well, I don't know. I was wondering, are there lockers somewhere around there where we could have left it? But no bags. We can't bring in a bag. We would just be carrying it.
Okay, I would.
Okay, so that is moved. That's ratcheted. We took in $1 credit. Excellent. Great.
Yeah. I'm just kind of taking a glance at everything. Okay.
So, and I don't see anything major that we need to address. If we had something that was a real doozy,
Can we take a look at volatility too? I mean, I know we just looked at UVXY, but what is the VIX doing right now? Is it 20 yet? Is it 19?
I bet it's 18, 20.
Yeah.
Whoa.
I thought it was going to be 20 because it was
big jump.
19. Yeah, it's a 21% move.
Yeah.
If we get 3 or 4 of those in a row, UVXY.
Right. That'll help.
But that one's got to get some wings under, some things underneath it.
So all I'm doing is just quick looking any puts that are Archer. I don't think that's a big deal. Any puts that are short term, moving them out in time.
Pretty good. I mean, take Dow out in time. It's a 14-day.
And I'll take Bull out in time too, right?
Yeah, you might as well. We wanted it nearer term, but on a day like today, you take it out.
So $1.89, I can move it from the 14.5 to the 12.5.
Sure, go for it.
So you can move it from 14.5 to 12.5 and pay 36 cents, or move it from the 14.5 to the 15 and take $1.40.
I like the latter.
Taking $1.40. Yeah, that's not bad. So that's moving out. Then DraftKings 7-day 42.5 put, that's still out of the money. Let's leave it. What do you think?
Roll the dice. It's like that guy on the side of our train. Have you ever seen the ad at the side at our train station? It's like roll the dice every chance you can.
Hey, it's still out of the money. Next Friday,
100%.
Still out of the money. Webull was $1.25 in the money.
Oh, I get it.
That's out of the money. I'm leaving it.
Take a look at Dow, because Dow is for sure in the money.
DocuSign September, that's out of the money. Dow is 26. Oh, yeah.
That's what I'm saying. Let's roll that one out in time.
That one's been a real doozy. And we got into that after the Dow move, I think.
We got in and then, yes.
We were in and then out and then back in after earnings, and it's continued to really fall. So here, this is where...
What Go to the 25. I don't want to go to the 27. Yeah, there you go.
30-cent debit.
You're going down by $1.
Okay, I got it.
But it's the most extrinsic value. Let me just give you my thought process here. You're getting the most extrinsic value. If you're going to go up by $1.25 and get 20 cents for the extrinsic value, because your choices are, it's 26. So you can either go 25 or 27 and a half. 27 and a half is 20 cents.
No, I
In the
know.
25, you're getting 58 cents in extrinsic.
Yeah, sure. Okay. Got it. Moved. That's out in time. Enphase Energy, it's...
Those are all longer durated. You can close a lot of these.
Okay.
IBIT is the one we got to keep an eye on because that is going to take us out today.
No, it's...
Still got 7 days. That's fine.
Okay, and what is this ETHA? That's the Ethereum. That's fine. 49 days. FIE is 1 share.
Yeah.
What? 1 share? We bought $156?
It's Faraday futures. No, I think I'm pretty sure we bought it higher.
Wait, and it's $2.
Yeah, I have 1 share in my account too. I think it's Faraday futures. If you want to click on it, that's what it's called.
That's okay. Then IBIT.
That's what I said. IBIT, close it up. It's got 7 days.
7 days, we'll leave that. But I could buy back that 70-71 call.
It's 5 cents.
I'll leave it.
I mean,
whatever. Intel's already out in time.
I think we're good, Jenny. I mean, just kind of glancing real quick. Should we pop?
Joby, our 1 bearish trade, and that's the only thing up today.
I know.
As long as everything is September.
Just glance quickly. It doesn't have to be a dress each situation.
I am. Rivian, August. We'll move that out. Move that out to SEP, and I don't know where we're gonna. Oh, here, not bad. No, that's tough. Rivian's tough. This is where I think we turn it into. I don't know what to say about Rivian. It's just like long stock. I might as well just leave it. When it's just long stock, because we're not getting anything to move it out.
No, just leave that.
I'm not gonna move the 16 to 16 for 10. I'll just leave it. It's just like we have Rivian stock.
Do you want to see some silver lining in this market?
Sure.
Pop into Twitter.
Sure.
While you're addressing, and if you change anything, you can keep looking. If we change anything, can we pop into Twitter, John?
Yeah, pop into Twitter.
Because I can't believe this. Blue Wackadoo done for the day. Collected $25.11 after fees. Blood, sweat, and tears.
Eric, nice work.
Blue Wackadoo, I'm super proud of you. That's what I wanted to show.
Yeah, that is good.
Because you know what? So the risk isn't overnight. He's done. He's out. I agree with the blood, sweat, and tears. You probably sweated this one out. You might have cried a little bit, and hopefully you didn't cut yourself. But you don't know this, do you?
Well, I heard something about. I thought I saw Vanetta talking something about in the news.
What do you know about it?
That there was accidentally Celsius in White Claws.
The opposite.
What?
They put alcohol in the Celsius.
What?
Yes.
No.
Yes. And they're high noons. So high noons and Celsius are packaged at the same plant. And so that's why all kids in America are like, we got to take our chances. Let's go buy a case of Celsius.
What?
Yes.
I thought it was the flip.
It's the opposite. Think about the legality. Oh, you got to ask. You have to have Lily at the law place find out about this.
All right, I'll have to. That's crazy. Mm-hmm. No, I didn't. I mean, I saw something in the news about
Tony
it.
asking for a friend, black top or silver. So look at this. They accidentally canned them differently because they were canned in the same spot.
Oh.
So Celsius. So, but think about this. Don't get me wrong. A lot of people who don't drink a lot of caffeine. People who don't drink alcohol do sometimes drink a lot of caffeine, especially recovering alcoholics.
Maybe, but if someone's like healthier and they don't drink to be healthy, they're not drinking Celsius.
I think a lot of people that don't drink might not have drinking because of a problem.
I mean, I think at this point in time, the stores have all pulled them off the shelves.
I don't know, but
yeah, I would think the stores would have had to pull them off the shelves.
They don't know which ones it is, so they should just pull all of them. Okay, now Jack Tucker, early small tranche sold at 545 and GTC hit for 320.
Whoa.
Oh, good job.
Good.
So,
and then Fabio Z, painful day, 18 minutes ago.
I know. I mean, my account doesn't look.
It was only down 90 now.
Sometimes I'm just sitting on my hands right now.
I mean, sometimes I want like down move, take off any hedges and then bounce back up. And you're like, great, I made some money on my hedges and now we bounce back up.
Yeah.
But we don't know. You don't know if we're going to get a continuation of this down move.
And it's kind of interesting because I was at an event yesterday with my husband and some people, and we were talking about how you and I, it doesn't affect me anymore. It doesn't affect, these wild swings don't affect me anymore because I've been trading for so long.
I know.
When I say wild swings, I mean in my account. So that's what I'm saying. Because I know I've had days that are really good. And like this is a day where I was like, okay, I'm gonna sit on my hands and try not to do anything stupid.
Not to do anything stupid. And we've talked about
I've done stupid things before in these moves.
When you get used to them, And again, like risk is managed at order entry. So when you place your trade, you know your risk. What's my risk here? If I'm selling puts in these products, what's my risk? Getting along these products. Day like today, my account's not looking good, but I'm long these products now. I decided to do that. If I sold puts in there, I'm willing to do that. So risk is managed at order entry. And as far as the hedge, that's always a question. Like, or I've been saying, I've been throwing collars around my stack. Well, do I sell out the puts? Do I buy back? I buy back the calls. If I'm doing collars around my stack on a day like today, I buy back the calls. Do I sell out the puts or do I hold on to them?
That's the problem. And that's what TP was saying. That's why that's kind of a good hedge because you do buy back your calls.
Yeah.
And if you get that two-way action, that's absolutely decent, right?
I buy back my calls, but then, yeah, right. It's not bad on a down day. It's nice. But already, if you sell out the puts, there were some puts I had sold out yesterday or the day before where it's like
they're already gone.
They're gone already.
Yeah.
Yeah.
So, and that's just it. I mean, we were talking about my earnings positions too. We were talking about Hood, and I had a decent position in Hood. And instead of selling something against it or collaring it, I just cut it down. And I thought that was a way to hedge too.
Right,
I
cut it back.
My position back, which is a hedge.
Cut it back.
So it's that same thing. And I think I have just because TP was on the last week for 3 days and he doesn't like hedges. He said hedges a 4-letter word. He's like, I've lost so much money in hedges. And so that's what he says. If you're going to put a hedge on, cut your position down.
Cut your position down if you're never going to do anything with the hedge, because otherwise the hedge is just throwing money away. And when we talk about reducing your basis, if you're constantly paying for a hedge, you're increasing your basis. You're not reducing your basis, you're increasing your basis.
Yeah.
So if you're never going to do anything with it, so maybe on a down day, you got to take them off.
Yeah.
Otherwise, take the position off.
Did you watch the show Home Improvements?
Kind of, sometimes.
It totally reminds me of this. The guy that would only talk through the fence. Because like right now,
I know. So you want to know this new version of a hedge that I don't want to say I came up with it, but I find it to be.
Let's pop in the platform.
Yeah, let's go on the platform and tell me what you think about this. So if like, let's say here for a collar, you can buy the 60 and sell the 95. So like here's a no-cost collar where your put will pick up at 60 and you're paying for that by selling this 95 call. But you have from here until
60 to lose money.
60 to lose money,
but
right?
You do make money 1 for 1 to the upside up to 95. But yes.
So throwing on these collars in the longer term then went shorter term with here to 60.
Buying a put spread?
Doing like ratio spread closer up, where it'll kick in closer up. You know what I mean? I try not to pay for it, or maybe I'll pay $1. But you like
this isn't bad, but you're putting a lot of the zero cost collar is great because the capital requirements. Here, you're throwing more capital after it, but it reminds me of Tony from Mexico. Tony from Mexico is like, I like to defend it with the same side.
Oh, I see. But so it's like
you have to have the capital to be able to do it.
So if my put to the downside doesn't kick into 60, then I have this ratio spread in the shorter term that would kick in immediately. Do you see what I'm saying?
Do you need the put?
What do you mean?
Do you need to buy that put if you're collaring it? You could sell the call in the farther out term and do the ratio spread, and then just keep doing the ratio spread.
Oh, and just keep doing the ratio spread and not buy that put.
Not buy the put.
That's another way to look at it.
Because I liked your concept of the ratio spread in the nearer term because then it's going to pay off more
sooner.
Otherwise, if you got that ratio spread in whatever cycle you were in, why would you just do downside ratio spread, weekly downside ratio spreads,
and have that call further out in time?
Because you can get farther with the call farther out in time, and you wouldn't be comfortable if you were going to do the ratio spread with the call as close as it would be.
No, you can't go. The call's too close. Shorter term.
I like it.
I don't know. So, so maybe
twisted spoke.
And so the collar would be short call further out in time, short-term ratio spread.
Yeah.
And you keep moving that ratio spread.
Weekly.
Weekly. Not bad, right?
No, I think that's good. I just wouldn't buy that put because then you're throwing money away.
Then you're throwing, well, no, because if the collar's a zero cost collar, but then you put in that ratio spread shorter term.
You're doing things a lot on your basis because if you're putting that ratio spread on for free.
And if it's all on for free, everything's free.
If you put the ratio spread on for free and then you sell that call, you're actually cost basis reduction at big time because you have that call.
If you make that money,
not the put. If you don't, because if you looked, that put was $4. And you were going to get a call for $4. Then you've got $4 reduction in cost and a near-term ratio spread. I think we just invented something.
But I do think some people might want some protection. And if you just do that ratio spread, then you're getting like doubly long if the wheels fall off.
In double capital.
And if the wheels fall off, doubly long.
Yeah, in double capital.
I don't know. But that's just, like, I back-ended into that. And I was like, hey, I don't hate my position. I've got these collars further out in time, and I've got these short-term downside ratio spread.
I'm going to start protecting it with like that because I do like I like the ratio spread short-term. So the collars, I struggle with the collars because
But I take my call off on a down move. So
but it's stock that you know you want to keep. So there's some stocks that I have in there. Well, and I was kind of confused. Can you go to NVIDIA real quick?
Sure.
I threw a collar around my NVIDIA stock. And I'm happy that I did today, but I was cursing myself yesterday.
Because it was up so much.
Yeah.
But okay, so it was up so much yesterday, but down today. Again, most of the time,
and I'm able to at the top of the range because that makes sense to me.
How far out did you go with your collar? August?
No, I went to the 15. Yeah, August, regular August.
Yeah, August. And what call do you think you have?
85 maybe.
Well, let's just say it went through it. Let's just say we're at the 175 and it's through it.
Oh, I know it's not through it.
I know, but let's just say someone had the 175 and it's through it. When it goes through my calls, that's when I'll go out in time, and you're usually able to get it pretty far, and then think like, okay, if by September it's up to 190, great.
No, I get it. You're just the thing I have a hard time with the collars is you're not chipping away at your cost basis. You're planning for an up move, but you're not chipping away at your cost basis.
But by adding on that downside ratio spread, if we go down, then
you make some money. That's why I like that versus the collar. Because buying that put, to your point, it's like then you have to decide if you're selling it. And then you're saying the down moves over and I think it's gonna come back up.
No, but the collar chips away at your cost basis. So like let's look at this. So say you sell a call.
If you sell out your put, it does.
If you close it, so like you buy a put and you sell a call, bearish. This is giving me all negative delta, bearish, and then on the down move, you have to take that off. Like it doesn't chip away your cost basis if you just leave it, but if you throw these collars on and on a down move you take them off, then you're chipping away at your cost basis. Yeah. And on an up move, great, you're making money. On a down move, take off your collar, and then you've chipped away at your cost basis.
You're going to re-collar it. You're going to keep moving it.
Well, I'll take it off and wait. Like on a down move, I'll take it off and wait.
100%. But like if you were going to do this I just have cutter in the back of my mind, where if it's like, if the collar is your primary
then he's always keeping it on.
Yeah, like I said, if that's your primary trading strategy where you buy a stock and you collar it and you wait for the dividends and you move the collar every 3 months, and that's a legit strategy. You get a positive drift upward and you're collecting dividends.
And that's it. And the max you could lose is like 10% or something like that. And then that's a different strategy. Then the risk is always covered. But if I'm throwing on a collar and then down move I take it off and that helps my basis, then I have the risk on. And I'm okay with the risk.
Yeah. I like it.
I don't know.
So it's really down 90. It's a rally.
Get your hat.
Get your hat.
You've got your hat. Get your hat.
It's my rally hat.
All right. 10:54. Market measure recap. Can we whiz through it? Can we whiz through it in 6 minutes?
Yes, we can, Jenny Andrews.
Weekly summary of market measures. And go.
Slide 1.
Here we go. Next slide, please.
And
1 minute.
It's okay. It's okay if we don't get to it though, too. Because my favorite market measures last week was the one that we did.
Which one?
The SIBO floor, the iron flies. Well, it was the iron flies in different volatility environments.
That was UNTP. I wasn't here on Wednesday.
Okay. No, you were here. We did.
No, I wasn't here on Wednesday.
The Jacob study.
I was in New York last week.
This week was Jacob.
The
Jacob study this week.
Yeah.
Is this a recap of this week's market measures?
Yeah, I was here. I was here this Wednesday.
Okay, trading bullish strangles.
All right, next. When examining premium income potential, 30 delta puts typically generate higher premiums compared to 16 delta strangles over extended periods. This premium advantage can potentially lead to better success rates and improved performance. I like this idea. 30 delta put instead of 16 delta strangle.
Oh, I 100%.
In a bullish market, it makes sense.
In any market, it helps my like mentality. I'm not a huge fan of naked.
But if we end up in a bear market, that 30 delta put's going to get tested.
Yeah.
And slide 3, please.
When we compared the bullish strangle to just selling 30 delta puts, the strangle made less money and had a lower win rate. The call side reduced the profits, but the strangle was less volatile and had smaller maximum losses. It's a compromise that gives us some upside while controlling the risk better than naked puts. Okay.
I mean, okay, so you look at these results, annualized return, 20% on the 30 delta put, 17% on the strangle, success rate, 79% on the put, 74% on the strangle.
But I look at this and I say, you know what, they're close enough.
And maybe
if you like selling strangles, this is a close enough result where I wouldn't be like, get rid of your calls.
You know, if people are putting these on at multiple times, not like going all in at once. If you have a certain day of the week, if you're like, I'm putting it on when it's 45 days till expiration, it's a down day, maybe go with the 30 delta put. If it's an up day, maybe go with the 16 delta strangle.
Momentum. I think that might be coming up next. Next, can we see the next slide? Is the takeaways. Bullish strangles have positive delta exposure, so they perform much better when markets go up consistently. We get higher returns, but also accept more volatility compared to neutral strangles.
The bullish strangle sits strategically between selling naked puts and neutral strangles. We get solid returns from the put side while having much better downside protection and less overall volatility than naked puts alone.
I like it. That's a good takeaway.
Yeah.
Okay, next, do you know how many slides we have?
I have no idea. Next. What time is it? 10:57. We could do this. When break-evens tighten, do losses multiply?
Ooh. Okay, next slide. For 2020, there was never a loss on an early managed 16 delta strangle and SPY that exceeded its initial buying power, including in 2008. That's a crazy statistic.
Never a loss on an early managed 16 delta strangle before 2020?
It exceeded its initial buying power.
In eternity? Like if you go back to the inception?
Well, that exceeded its initial buying power. So what they're saying is, if the buying power is $5,000,
I know what
more than $5,000.
I get it. Never.
No, because I don't think so.
Not even in the 2008,
including 2008.
The worst case loss as a percent of initial buying power reduction before 2020 of the trade happened in 2009, with the trade's loss at 21 DTs closing at 56% of the initial buying power.
So they're saying if you manage it before, you're not going to lose the full buying power.
You can keep reading it. I'm going to tell people what this is talking about. So I'm just going to sell a 16 delta in SPY right now, and a 16 delta in SPY right now
is what, $8,000?
Is using
$8,000.
Hold on. $8,000. So it's saying
$8,000.
You wouldn't lose more than 4,000.
No, it says more than $8,000.
No, 50%. Never you lost more than 50. I thought it said
never. That exceeded the initial buying power. So it never lost more than the initial.
The worst case was 56% of the buying power. So that's what I was.
That's what I'm saying. But it's saying the never was losing $8,000. So here you don't lose 4.
Okay.
And this one says you lost 56% of the buying power. Okay.
In 2020, we experienced the first loss that breached the buying power by the 21 DTE mark. The loss was 1.1, 110% of the initial buying power.
In 2025, markets across all assets have had wild swings, and currently we are experiencing low volatility.
Has this translated to sharp losses on any single trade, similar to either past sell-offs? And also, when break-evens tighten, do losses multiply?
Break-evens tighten and lower implied volatility.
Yeah.
Next.
Takeaways. In 2025, so far, worst losses for short premium trades as a percent of BPR were moderate, with the worst market being gold and NVIDIA, where the loss totaled 32% and 45%. And I'm guessing that's to the upside.
I am too, if it's gold, for sure.
Yeah.
NVIDIA. They had, 32 and 45 of buying power. When volatility is high, losses rarely exceeded the trade buying power due to wide break-evens. As IV drops, break-evens tighten, and your buying power cushion disappears. And modest moves can breach your buffer, so you need to reduce size, widen wings, or use defined risk spreads.
Okay, we are out of time. It's 11. Today, we closed one of our SPX. We closed a short call spread in SPX. We did the ratchet on the UVXY Zebra, and we rolled our Dow puts out in time. That's all we did today. That's it, Liz.
Yeah,
we're ready. You ready for the Cubs game?
I'm ready. One of our participants is going to be there by 11:06.
11:06?
Yeah.
Hope she has
We gotta
fun
go.
drinking alone. All right, well, it's 11. We can't get there. We tell her she's gonna have to. She could shop in the gift shop for a little while.
She'll be fine. She's at a bar.
All right, everybody, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you Monday.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Hanson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago. #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign, #18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions out from strategies, concepts, trade ideas, trade management, whatever. Just come in with us for the next hour of the day. My favorite hour of the day. Get spent with my buddy, Mike Butler. Good morning, sir.
Good morning.
Good morning. Happy Friday. In studio Friday.
Very rare.
Forgot my party shirt Friday.
Naturally. I knew you would. I didn't even text you. I was like, are you wearing the party shirt? And I was like, there's no chance.
Yeah. Well, I usually put the party shirt on like a minute before we go on air because I always forget.
Naturally.
And I'm a little bit,
You've created a habit.
Yes.
I would say it's a bad habit.
I know. I'm a little bit all over the place.
Yeah. But yeah, my screen's broken. The colors are broken on the platform.
Have you seen this before?
No. Actually, no. We were down over 100 today.
Yeah.
Crazy.
120, I think, was like the low of the session here.
Yeah. But I was able to I've got some losers, of course. Apple played to the upside. Amazon played to the upside. Coinbase played to the upside. All those trades are in September, though, except for Coinbase. I've got the 14-day butterfly and then the 0-day butterfly. But I did have some hedges on that worked out.
Yeah.
And kind of softened the blow there.
It's great because you get 1 day. That's all you need.
One day.
You need 1 day.
And if you got hedges on today, you better strongly consider.
Yeah, I did the UVXY trade yesterday for the 3 trade ideas, which obviously was a good one this morning with vol at 19.20 here, the VIX at 19 and change here. But it's a point that we've always talked about with these hedged sort of trades. It's across the board with anybody trying to hedge. The downside is like a lot of times it's a paper cut bleed for weeks, and then you get paid on that 1 day, and you gotta capitalize on that. Could we go lower? Of course, but those hedges, it's nice to take them off, and it's synthetically buying the dip because you take off those long delta or those short deltas. It's synthetically getting more long deltas.
Yeah, and when we get these sell-offs, because they seem to be so rare these days, I think it's always good to check out implied volatility. Implied volatility is up, but it's like barely up. And I think that for me, if we were to see the VIX futures up like 2, 3, 4, 5 points today into a larger sell-off, then maybe I leave some hedges on and play for continuation. But for me, VIX futures up like 60 cents, $1 in the Q contract. We're still in a pretty steep contango here. That makes me lean towards taking the hedges off and sprinkling a little by the dip action by just taking the hedges off, not adding more positions necessarily.
Yeah.
But we'll see what happens from here. We're seeing recovery from the lows today, but definitely an interesting situation. And now the interest rates have completely flipped from
they have a cut.
There's an 82% chance that we get a 25 basis point cut, as opposed to the opposite. It's literally flipped.
Yeah.
But yeah, this morning I did take some stuff off. So I took off the Costco calendar spread.
Oh yeah, Costco was one of the few stocks bucking the trend today. Costco up $11. Netflix was another one I was looking at that was up a couple dollars, but definitely a little red day today.
Yeah. So yeah, just took off some risks. So I closed the Costco calendar spread for $215 winner. That was the 1,000 strike long September, short August. Then I took off the SPY put diagonal spread. So I had the 630, 615. That was a $200 net winner as a hedge. I took off the M6E position. That was a home run that Katie put on yesterday.
Overnight.
Yeah, $170 on one micro contract. Huge move there.
Yes.
And then
dollar getting smoked today.
Yeah. And then the gold, I had a gold iron condor. That one was right in the middle of the range. Closed that for a $255 winner. That was the GCV5 contract.
Nice.
And just closed it to take off some risk with the big move in gold. Didn't want to see that winner turn to loser. So I'm now left with a stronger bullish delta because I took off a lot of those downside trades.
Than you had yesterday.
That I had yesterday.
Yes, which is good because the prices are lower.
Yeah. So yeah. We'll see where things go from here, but
yeah, I too did a lot of cleanup. I closed out the UVXY position, took a couple bucks out of that. That was a nice little overnight trade. I took some profits in the Apple position this morning, which ended up being good timing. I did it when the stock was at 210. It's at 203 now. So, you know, we talk about that with earnings trades all the time. 50-50 in terms of when to close them. You know, sometimes you close them too early and you miss out. Sometimes you close them early and you miss out on the $7 down move that would have wiped out all your profits. So we usually just manage them in the morning. Took that one off. I then did a lot of cleanup in positions that I had that I was able to take off a little bit of risk on. So I had butterflies in AMD and SMR. Those were positions that the stocks are obviously down. They're positions that have risk on the upside that I could cheaply buy in. And so buying in that risk frees up that capital, still leaves you with a shot to the upside, but just a way to kind of reduce overall risk into this sort of move. And then I close out a Palantir Strangle, and then in the Johnny Trader account, again, you know, sometimes you close a position and you miss out on another dollar like I am with Meta, but Meta was higher at one point today. This was an earnings trade gone wrong where I held that in the money call spread and you know, when we get those emails and chats and whatnot of, you know, $10 wide iron condor blows through the call side or the put side, and now your position's at $9, you only have $100 left in risk and potentially all that value or some of that value to come back. Meta down, you know, 20 from the highs that it was at yesterday, 25-ish. Totally bailed out on my now at the money call spread where it was a $300, $400, $500 loser yesterday is now a $173 loser. Take the money and run. You know, it's a couple $100 that I got back today. And so I closed out of that. So no other new positions. If you got new positions, I'm certainly willing to do that. But when you get bailed out like this, it's kind of like a, all right, be done sort of thing.
Yep. Agreed.
Yes.
Kind of getting bailed out in the TLT position. I have a 85-88 call zebra.
Wish I held that.
2 weeks left, and that was a $200 loser yesterday, and now it's a scratch.
Mm-hmm.
So I think given the dynamic of what's happening, I'm going to hold on to this. It's still a small position, but if we get another move like this, it'll be a $200 winner.
Yeah.
And this is kind of like one of the short, we'll call it a short delta hedge that I have on. Still have the SPX Iron Condor. That was 100 points in the money yesterday, and now it's 40 points out of the money on the upside. So that, as long as you stay in this range, we'll be okay there. And yeah, no other adjustments really to be made.
Quick little rundown on the markets, and then we'll get into all the chat questions we got coming through. If you're on YouTube, throw them in there. E-mini S&P 500 futures down 82. We got as low as 62.43, so about 50 handles lower from here. We've had a nice little rally from about the last 30 minutes or so. That's reversed that from the lows. NASDAQ down 350. Some big moves. Amazon, which had earnings after the close yesterday, down 18 and change. Apple is now down 4 and change. You know, Meta giving up a lot of the move that it had. Microsoft as well was weak this morning. Tesla was kind of one of the stronger ones. It's basically unchanged, but it's taken a beating. NVIDIA and the semiconductors. NVIDIA was down to 170 was the low of the session. SMH itself down $2 and change. So that's kind of bounced back a little bit there, but definitely some weakness in the big name tech stocks. You got the Dow down 479 and the Russell down 35. So the Russell actually the biggest mover to the downside today, despite rates, which have come in significantly, as Mike mentioned, rate projections, with a more likely for a cut today, you would expect small cap stocks to be performing a little bit better than the rest of the market. They certainly are not. Oil down $1.93. It stopped out at that 70 handle, down about $2 from there. Volatility futures up $1.15, a little over 6%, 1920 here. We did get into a 20 handle. 20 was the high in vol futures. The VIX itself popping as well. It's at 1936. Gold and silver both taking a little bit of a bounce here. Gold's up almost $50. Silver up 22 cents. And then Bitcoin having some two-sided action, was significantly lower in the overnight session. It got to 114 and change here. 114.4 was the low of the session, but bouncing a little bit here in the middle of the day. So definitely a risk-on day. Popping volatility. You had all sorts of tariff headlines last night. Earnings moves, obviously not as well received. So definitely a little bit of weakness.
Mm-hmm. Yeah. We'll see if it holds.
Yes.
See if it holds. But join us on the YouTube channel. We're streaming live on tastylive. I've got the Cherry Picks newsletter pinned to the top of the YouTube chat. You can get that for free. I'll throw in the Tasty Crypto one as well. That comes out tomorrow morning. Also free. But yeah, let's see if we got any trade ideas here.
Cool. Let's do it.
How much do you need to comfortably take or hold a SPY strangle?
What's the margin requirement? Like $8,000 or something?
Yeah, it's pretty big number, but I don't know. I kind of categorize it differently. Like if I have a SPY strangle on, I'm probably just holding it the whole year as like a core position.
Mm-hmm.
So it's a $60,000 product. Buying power is $11,000. Looks like.
Depends on where
you're at.
Yeah.
11-ish. So I don't know. If you have a $100,000 account, you can hold a SPY strangle easily.
Yeah.
For a core position, just roll it perpetually throughout the year.
Yeah, you could always buy wide wings too. I mean, the upside wings are a lot cheaper, obviously, because there is put skew, especially today. But for most people, you could probably cut your capital requirement pretty significantly for a pretty cheap amount. And it helps you sleep at night, define the risk, however low probability it may be.
Indeed. How did we start trading options?
Right here.
Yeah, through family that works at Tasty. Yes, that was my story and your story, really.
Yeah.
Both of ours. But yeah, I used to play poker a lot. So poker strategy is very similar to short premium strategy in putting yourself in high probability situations, risk management, blah, blah, blah. So I caught on to the concepts pretty quickly, and I didn't care. I didn't really look at the markets at all before Tasty.
The big key is just getting involved.
Mm-hmm.
Clicking the button. It's always the hardest thing to do. And, you have trial by fire. The first couple trades, the first big loser, that's always, a special time for a new trader. But that's how it goes. I mean, you can't, you got to get in the game. So we were lucky to have family involved. But
did Tom ever figure out that I changed the zoom level on his computer? I don't think so. But if you've noticed that he's further away from the screen, then it's working. Let's see. NVIDIA double calendar. Short the 160. The 160, 195, September, August. 160, 195, September, August.
Yeah, it's a little cheap. I mean, you're selling about $1 worth of premium in the shorter term. These double calendars are just really, really tough.
I think you can do it for earnings.
Yeah.
It's just it's hard because like you're paying $7 for both options, and for this to be profitable, you need Nvidia to move towards one of the options to appreciate it and basically double the value of it.
Yeah.
If you're selling,
which means it has to be at the money. So you
Yeah.
have to pin one of these strikes at the long you want it to happen at the short options expiration because that's the most extrinsic value.
I do like it for earnings. If you're doing that, where you can buy September and sell the earnings weekly expiration, the 28 day, because now you're reducing the basis on the long options by well over 50%. So if you put this on now, for example, and then you held it through earnings and Nvidia was near 195 or near 160, it'd be a great trade. Or you can wait till earnings and play something similar, but you're not going to have as much short premium to reduce cost basis.
Yeah.
But yeah, ultimately with the double calendar, you want to move to one of the strikes, ideally the upside strike. You'll probably make more on the upside with the appreciating stock price and
gamma.
Yeah, gamma and higher extrinsic value overall. But yeah, don't hate it, but it's not something we do all the time. Please explain how you hedged Coinbase. I didn't. I just had butterflies. So I had a 0-day butterfly on the call side. That's going to be worthless. And then I have
I got a butterfly too.
I have a 14-day butterfly. But this is such a huge move that it's likely going to be worthless. It's just a complete reversal of this move. It's nuts. But both those were defined as small. I won't do anything to it. I'll just leave it. And if we reverse this move over the next couple weeks, it'll be okay.
If I step in front of this train now,
Maybe.
Sell put spread, 270, 280.
You could. Certainly could.
If I can get filled above the price. Could do a diagonal spread. It's just going to use a lot more capital.
Mm-hmm. Same thing with Reddit.
228.
Nice. So yeah, Reddit, I have an Iron Condor, 14 days out, the 170, 180 short call spread in the money. I need Reddit to just reverse half this move. 175 is the expected move. Nothing to do.
Yeah.
This is why I go to August or September, because if you had the 0-day, you're at a max loss and you can't do anything. So we'll see. We need a reversal. Thoughts on Oklo?
I can do something cheap to the downside and Reddit into this move. In sympathy of your position.
Thank you. I'd appreciate it.
I don't know if I want to put $1,000 on it though, so sorry.
It's all right.
Could do a call spread. Maybe I do like a little $10 wide call spread. 210. That'd be new highs, near new highs. Like the 210, 220. Let's see if I can get like over $3.
Yeah, Oklo, I don't have any. I'll look at this for earnings next week. $12 expected move, pretty decent. Well over 10% of the stock price in terms of an expected move. So should see some craziness there. But
$3.
I'll come back to this next week.
OKL low, yes. I have that crab trade on the downside. It hasn't moved all that much just because vol is still super high here. I am long the 70 in September, and then I'm short 2 of the August 60s, buying the 50 strike wing. I still have $2-ish in $2.20 in extrinsic value on the downside here. So sideways / down from here would be perfect for my position.
Lovely. Let's see. What else we got? Close your eyes and buy the dip.
A little bit of that happening today.
Feels like it.
6,300.
Feels like it.
That nice little support level there.
Yeah. Any adjustment on the Starbucks position?
What do you got?
I have a regret, is what I have.
What happened here?
I just got destroyed. Yeah, there's nothing to do. I mean, it was a scratch after earnings, after the little recovery it had, but it's just been straight down from there. But I've got the long 95 strike in September, 50 days out. And there's nothing to sell against it because that option's only trading for 80 cents. So need some kind of recovery here over the next 50 days. But my basis on this is $3. And if you look at the value of the 90 strike in September, it's $2. The 85 is $4. So somewhere in between there, it'll be a scratch, which equates to a 7-point move to the upside. So maybe we see a little recovery, but a lot can happen in 50 days. You're seeing a $3 sell-off today.
I'm gonna do the 85-88 diagonal spread. Buy it.
Here you go.
$90.
Still holding your SPX put butterfly?
Yes, I still have that. I'm basically at a scratch now because we've ridden this whole wave higher. So I put that on. I did that on the 7th. So let's see where we were. Yeah, we were right in the middle of this little move. So we rode this whole thing up, just bleeding by paper cuts. And then now we get a little bit of a pullback.
Perfect.
Marked at 1170, so I'm out about 40 cents on it. I'm gonna hold it, see if we get a little continuation of this, and then I'll look to close it. I don't think it was that much of a winner this morning. I think it was only like maybe 70, 80 cent, 90 cents, something like that for, the part of the morning session where we were down 100, 115 or something like that. So I'm gonna hold it, see what happens. Got 28 more days, so.
Yeah, so let's take a look here. Are we doing anything with the Amazon diagonal spread? So I've got the short 240 that's worthless in the 1 day, and I have the long 230 in September. So if you look at the 14-day, which is where I would likely roll if I were going to, the 230 strikes trading for 90 cents 2 weeks out. If I were to turn this into a calendar spread, the 240, the 235, those are too low priced to do anything there. I mean, you could do like the 235 and keep the diagonal on, but I think I'm gonna let this expire the 0 day, and then if we get like a 5 or 6 point rally next week, I'll throw something back on. Because if that happens, the 230 will go from 90 cents to $1.80 most likely. And the 235, the 240 will gain some value as well. So if we get a reversal next week, at least a little bit of one, I'll re-diagonalize it and go with the 235 or the 240 if we get those options above $1. But I don't love calendarizing it into an 18-point sell-off because if you get the reversal, you're just stuck now with that position. So
I got the 235 call. So I'm out about $370 on this one, so I'm gonna hold it. Hopefully you get a couple dollar up move in Amazon, a little buy the dip action, and then take it off for a little bit less of a loss.
DJT is at generational lows. How many thousands of calls do we need to smash here?
God.
From the one and only Stock Messiah. It's a meme. It's just meme. Pure meme.
That.
You could meme it though if you want. Yeah, it's crazy. I'm sure it'll pop again, but when? When? August 20th. The short options are before the earnings call. Could you not then roll those into the earnings call? I think you're talking about the double diagonal or the double calendar. Yeah, you could do that.
Yeah. You have to keep in mind though that options decay. So just because you're going to be rolling into a 7-day expiration at that point, which is now, what do we add in NVIDIA?
If you go from the 14-day to the 28-day?
Yeah, or the 21-day. By the time you get there for that roll, value is going to decay. It's not like those options just stay, bid, and you would expect volatility to increase, but it's going to depend on where the stock is trading too.
Yeah. So yeah, you could start with the short-term ones and then roll into longer-term ones.
Yeah.
It just becomes trickier if you get a big move and one of your options goes in the money. But yeah, you could do that if you wanted to. Sold an ES 6,100, 6,000 put spread twice yesterday for August. Now they're 2 times what I received into the sell-off. Defend now or wait. I mean,
6,100, what was he?
6,100, 6,000. So you still have another 200 points that you can absorb before you roll. So I wouldn't be doing anything personally. Yeah. But if you get closer to 6,100, that's when you want to probably roll out in time if you want to defend it.
Yes.
That's it.
Agreed. If you're doing big wide put spreads, you got to be able to hold them.
Long-term bullish on Amazon. What's the best way to get positive delta after earnings? Naked put, long shares, Zebra, something else. I would go with the diagonal.
Yeah, they're cheap.
Zebra's too expensive. Diagonal is not.
They got a 10%-ish discount from the highs, recent highs. So if you were doing something long-term, you could even do like leap options, like a January 2026. I typically don't want to go out more than like a full year. I'm not looking at the December 2027 options. They're just not going to move as much.
You could even do October, September for a diagonal.
Yeah.
Make it wide, like a 15-point wide diagonal, long October 215, short the December 230, or the September 230 is $8 and change.
Yeah.
Or you can make it 20 points wide for $10. So that's what I would be doing into this sell-off.
Yes.
XLE, 80-90 strangle for September.
Okay.
September 80-90 for $2 and change, $1,200 buying power. I think it's fine. Covers a decent range, basically the range from June on.
Yeah.
Do we post trades from TastyFX? Unfortunately, we can't yet.
Yeah, we don't have that functionality.
But positive carry just means you're clicking on the bid or ask that has a positive swap bid number. It means you're getting the interest rate difference in small payments every day.
Yeah, but it's
very small.
It's microscopic.
Yeah, like when we say $1 a day, we're talking about one literal dollar a day.
Yes,
not $100 a day.
Yeah, I mean it depends on your size, obviously.
Yeah,
you can size these up, but there's a lot of leverage here. So it's.
Yeah, so if you were to short the euro dollar, if you look at the swap bid all the way on the right side, it has 0.54 positive, which means if you're short the euro dollar, you're getting paid to hold that position every day.
Yes.
So if you have an assumption and then you look at your swap bid and it just happens to be positive, then that's great.
Yeah. It's short and long. So if you're long this pair, you're long euro against the USD, you are paying 96 basis points. And that's per it's annualized, but per day. So that's 96 basis points, so less than 1%. Over a year time frame, let's say it's $1,000. That means that in notional value, $1,000. That means that you would be paying $1 a year on that.
Yeah.
So it's very, very small. So that'd be paid out, a couple pennies a day.
Indeed. Trying to get out of my Reddit position.
I'm sorry, $10 a year. Still pennies.
Yeah.
It's minuscule is what I'm trying to get at.
Like I had like 10 pips on a position and I was getting like 50 cents a day.
Yes.
Which it's not that small of a position. It's small, but it's not like
$4,000, $5,000 notional.
Mm-hmm.
You get, pennies with nothing.
I'm trying to get out of my Reddit position.
Okay.
143, 115 put spread for August. Nice.
Yeah.
There's no bid on the 143 because it's straight up moonshot.
Yeah. So
how do you get out of it?
143, 133?
Yeah.
So you're probably trying to
Or
route
143, 115. So the 115 is worthless.
Yeah. So you can see here the bid-ask spread super, super wide. And it's marking to buy this at 31 cents. You're going to get filled way below that.
Yeah.
So this option, the 115, is probably near worthless. Maybe you get a penny or a couple pennies from it. This option, I would route an order to
just the 143.
Just the 143. Buy that for 5 cents, 10 cents.
Just start at 5 cents
and just work your way up.
Cancel or replace.
And then you'll probably get filled somewhere, just to look at these options, and they do not look good. But you can see, let's see, volume here. So there's a couple that trades them. So this is marked at, let's see what this is marked at, 56 cents because it's the mid price between these. But you can see these options have like 40-cent bids. So you know that this option is going to be a lot cheaper than that. It wouldn't be more expensive.
Yeah.
So I would imagine you're looking at, 10, 15 cents maybe to buy this back. But I would start at a nickel and work your way up from there. And then after that, you can go to the long option and try and sell that for, a couple pennies if you want to, or just
do the opposite. Start high.
Start high and just leave it on and just, or you leave it on and see what happens. I mean, it's not out of the realm of possibility that the stock, goes lower. And maybe that option goes from no bid to 5 cents and you get $5 out of it.
Yeah. But yeah, start with the short option because that's where your risk is and your buying power requirement. And yeah, start low and then just cancel, replace, move it up 5 cents or something every time. And you'll eventually get filled at like 30, 20, 25 cents, 20 cents, something like that. I would imagine. ATYR.
ATYR.
Looks too good to be true, so it's probably a trap.
What are they looking at?
Selling buying a $5 call and selling 312s in September.
Selling 3.
Yeah, for $1 credit.
Yeah, I mean, you have 370% implied volatility, and it's a pharma stock. I don't know this one specifically, but I imagine it's biotech sort of thing. So there's a lot of binary risk, which is why you have 300% implied volatility. And the 300% implied volatility tells you that the stock potentially in the next 49 days can be 0 or 12. I mean, that's what 300% implied volatility is the price can go up 3x, can only go to 0. So it's certainly not too good to be true. It's priced as it should be.
Yeah.
So,
but yeah, just got to be careful with that. All things considered.
Yeah.
But yeah, if you have 3 shorts against 1 long, your break even's up at like 16, 17, something like that.
Yeah.
So
you got $5, $6, $7. So 7 divided by 3 would put you, let's call it 2 1/3 above 12. So 14.33 is basically your break even plus whatever the credit is. We'll call it 14.50 is roughly your break even.
Yeah. IBM short call spread closed at 50%. Nice.
Nice. Oh, we played that for earnings. Ooh, touching the 200 day. My little perfect lines right there. Like that, right?
Wow.
Oh, it's dashed. I didn't even know it's dashed.
Look at that.
Look at it. So
you're saying there's a chance.
Do I do something here? IV rank at 12. Like there's just no ball hasn't exploded.
Right. That's what I'm saying. That's why it's like
I think
maybe this is the buy the dip.
I think I might little long delta play here. In October, September.
Yeah.
Such a cheapie. Maybe I just do the September put spread. Yeah, let's just do a little cookie cutter put spread here. 235. Where is 235 at? That's all the way down here. Kind of the lows going back pretty much the whole year.
Mm-hmm.
Let's see if I can get filled like 10 maybe.
We'll see. Any adjustments to the end phase put spread, the 40-30?
I'm gonna leave that at 205.
Do you have this put spread 40-30? I just have the short put at 40.
Yeah, I just have a short put. I'm in the money right now. Out of $200.
The 30 strikes protecting you by $200 right now. But yeah, there's not much of an adjustment to be made with a put spread that's in the money, deep in the money, because you're going to pay a debit to roll it out. But there's still 50 days left, so I'm not touching it. Can we get back into Apple post earnings for September strangle 220-185?
September 220. 5. Yeah, you're right at one standard deviation, a little bit inside that.
Mm-hmm.
Yeah, I like that. I think you might, maybe you do. Oh, put spread here. Well, what was the low? I mean, it got into like the 170, 180, but really kind of 195, 190, the lower end of the trading range.
Yep.
$1.68. I love it. Passing.
Fair.
Maybe a
like
diagonal spread like October.
Yeah, I don't know.
You could do like an October, September. 205, 215, 220. I could do that.
Yeah, I'm still in the 215, 225.
Okay. This is essentially a roll for me because I closed out of my crab trade. I took a couple bucks out of that. So this is basically a roll into a new further out expiration.
Mm-hmm.
October the 205, selling the September 220 at $7.40 for 15-point wide.
Mm-hmm. But yeah, I've got a $6.65 debit on my diagonal spread with the long option at 215 in September. So I need a 10-point rally. It'll be a small winner.
Mm-hmm.
Nothing to sell against it.
Shot.
Yeah. If there's a small rally, maybe I'll look at moving that short option, but the short option is already in the 14-day and it's worthless. Let's see. Any adjustment to core weave?
You still got that on that butterfly thing?
Yeah, it's flat. It's down 13 cents. It's at 110, 125, 140.
Are you in August?
Yeah. August monthly.
What are you, 110?
110, 125, 140.
On the call side?
Hmm.
this isn't going to move all that much.
Yeah.
Because it's within the expected move. I mean, you have a 140% implied volatility, $21 expected move for the next 14 days. So that puts you basically right at your short strike, right where you need it to be.
Are you leaving your cat spread alone for now? When would you roll the August short put since the stock has stayed up?
This move has certainly helped. So I'm up about 40 cents on the trade. I'm long the September 210 against it. I'm going to hold this one a little bit longer. We'll see if we get a little bit more of a down move into earnings next week. It has earnings on the 5th, but this is what I need. I mean, the stock is still 10 points off highs. I think it's okay, or I'm okay with leaning a little bit of short delta here, and it fits with the fact that I took off some of my hedges today, bought in a lot of upside risk.
Lovely. 225, 230 short call spread in IWM. For a hedge,
220, what was it?
225, 230.
September?
Mm-hmm.
Yeah, it's a cheapie. I might do both sides with a $5 wide and just make it an iron condor, because when you're looking at hedges, you want the delta exposure, of course, but having some gamma as well helps. But here you're only really picking up a handful of deltas. It's a 9 delta spread here, so it's just very small
hedge.
It's a small hedge. Like adding the put spread, although you're adding some long delta, if you do it further out of the money here, it's not going to change the position all that much. You go from 9 deltas to 5 deltas, but you're doubling the amount of credit you're getting here. That's what I would do.
Hmm.
This is like a wide iron fly here. How does that sound?
It's a little spicy.
210.
Yeah, I think with the short call spread, I think definitely adding the 200, 195 makes sense. Or something like that.
15 point wide with the shorts at like a 30 delta.
Mm-hmm.
Getting a nice little move in vol here. Ivy rank at 24 and change. Maybe I do that.
Experimenting with more short puts than usual in the 49-day. Please tell me I'll be okay. You could be okay if your size is correct.
Yes.
And eventually the stocks are above your short put strike. As long as you can perpetually hold the risk, you basically just need the stock to not go under. Especially if it's like SPY or QQQ.
Oh.
Like historically, they've always recovered. So that's why sizing is so important. You want to be able to hold through the craziness and continuously roll and reduce basis. And eventually, there's a high probability that the put in, especially in an index, is out of the money.
Yeah.
Amazon and Hood and Google down makes no sense.
Well,
yeah, it's crazy.
Hood's rallied like $6 from the low. I thought I was finally going to get bailed out on this strangle that I have where I'm still short the 75 strike call. I've been just rolling up puts and rolling at the money and rolling out in time. And I thought this was my moment. We were at 95 this morning. It got even lower than that. Let's see. 93 was the low.
93.
I needed that. I needed that for like 2 weeks. Chop for 2 weeks, and then I'd be perfect.
Yeah.
Like, no cigar.
That's the end of the chat.
Wow.
Do we have any other questions? What earnings are next week? A lot.
Yeah, but I think this week we got through like 40% or something of the market cap.
Palantir?
PLTR, that's a big one.
That's on the 4th, which is Monday. Yep. Monday after the close, Palantir.
That's a random one.
Caterpillar, Tuesday before the market opens.
Hims.
Ugh.
My position getting a little bit better today.
AMD.
Cat is there, yes. You said AMD.
Definitely trading AMD. That's Tuesday after the close.
Mm-hmm.
SMCI, remember that stock?
Yeah, it's had a nice little rally. I think it was trading at 60. Yeah.
Disney.
Down a little bit there.
Disney Wednesday before the open. McDonald's.
Snapchat, which I have that 1x3 on. Uber. Shop.
Uber. Shop. Yeah.
AppLovin, APP.
Ooh.
INQ.
Smack Lovin' Special.
Yeah, they're taking out a little bit of the, or at least a little bit of a down move in some of the kind of frothier names like your INQs, and SMR was, your kind of nuclear stocks. Oklo is in there too. But yeah.
Will the UNH selling ever stop?
Never.
No.
Never.
Stock's dead.
Stock's down 10. Wow.
Everything's dead.
Awful.
Yeah, it's a tough pill to swallow. Tough one.
Mm-hmm.
Yeah, craziness.
Yeah.
How to play?
Yeah, my spread is now. It's a big scroll. I know there's 2.5 point wide strikes, but I mean 290, 280. We're fully in the money here.
We're at the point where like the leaps, like the Jan 2027 leaps, aren't even moving.
Yeah, they're dead.
Because they're worth like $2 and change, and now that's where they'll stay. This is Max Payne.
Yeah.
In these out of the money leaps to where the stock used to trade.
Yes.
How to play silver. I believe silver will be lower than today's closing price in 8 days.
8 days, damn. You got a crystal ball?
Yeah.
Shorts and
so
futures. The futures are big.
Yeah. So silver, we really almost exclusively trade zebras in here.
Yeah.
So if you believe that silver will be lower in 8 days, 7 days, or August 8th.
You don't even have to do the zebra. You just buy the.
You just buy the call, buy the put.
Yeah, in the money put.
Yeah.
Zebra is more for like a 30 or 40 day where you want a little bit of a buffer. But if you really think it's happening in the next, week, just buy the in the money puts, the 35 strike.
Yeah.
If you're short the shares here, which, you want that delta exposure, it uses $1,600 in buying power. You get that same exact position by buying the 36 strike in the money put. You can see the delta exposure, 97.22. You're paying a penny or two in extrinsic value. It's basically nothing. You're short the stock with this option here, and, obviously you have far less capital being used.
Mm-hmm. RC?
RC?
No. RC mindset in the chat.
Oh, RCL.
Loving the content. We love you. Thanks for tuning in.
Thank you. Needed the love today.
Yes.
We appreciate you, peeps.
What about your position in Lulu?
Ooh.
So I have a 210.
Look at this pig. All right.
Yeah, I told you this thing's going to zero.
Yeah, I can't be
it's all
this.
Viore. Yeah, I have the 200 210 short put spread. So there's nothing for me to do here. It's down $200 or so, but it's in the earnings cycle. So theoretically could get potentially bailed out in a rally, but we're still within the expected move, and it's trading for about half of the max loss right now. So it's basically a 50-50 situation. So I'm not doing anything here.
I did a little put spread. Solidarity. 175, 165. About a 30 delta.
And LUV, I've got the 32.5, 35, really small call spread, down 70 cents. That's in September though, so if anything, if you wanted to, you could buy back. Actually, I might do that. I'm going to buy back the 35 call for 20 cents. because this trade was so small to begin with that it was really a binary situation. Like if LUV is above 35, you close it for a small win. But now, because it was such a narrow spread and LUV is tanking, I can buy back that short call for 20 cents that I sold for 90 cents and basically have a long call on for a net debit of $1.30, let's call it. Which means if we get a 2.5 point rally from here, it'll be a small profit as opposed to having to hold it all the way to September and be at 35.
Mm-hmm.
So I'm going to buy back this short call, 22 cents. So my net debit now is $1.32. And if you look at September, the 30 strike is trading for $1.40. So if we get a 2.5 point rally from where we are right now, this will be a profitable trade. We need to talk about copper.
Yeah. What an insane move that was. I have an in the money put spread, and we've gotten a couple emails. I'm sure everybody is, or a lot of people are in this boat. I did an iron condor when we were, up around here, far out of the money. My put spread was around the 5 handle. Call spread, obviously far out of the money. I just closed that out. But these spreads have been moved. Oh, I just got filled on that IBM position. What did I do there? Put spread, 235, 225. The options here are very, very wide and have been, flapping around. So you just got to be careful with your pricing here. It's obviously a trade that has gone completely astray here. I mean, there's not much I can do with it. I'm just going to hold it for now, but just really watch your pricing here because the bid-ask spread's flapping around.
Joe, closed the same SPY diagonal today. First diagonal I've done. Why do you do them over outright puts when vol is low, as it was last week when the trade was placed? You could totally do it. It's just a larger position that has no offsetting short premium if the market were to have continued to rally. So like right now, if you were to set up a new trade, 15 points wide, let's just say like the 620 September put and the 605 short put in August. That's $400 almost of short premium that goes to zero in 2 weeks.
Mm-hmm.
So it really helps hedge if the market were to drift higher. And we kind of saw that. So like my position in SPY was only really like $150 or $200 loser as opposed to a $400 or $500 loser if I just bought the put, because the market was grinding higher until it sold off today. So it's just a way to reduce the size of the hedge. It's a way to give yourself a slight positive theta with the short option decaying much faster than the long option. And it's a way to take advantage of the near-term implied volatility that's always higher than further dated cycles. And you can see that here. So like the 14-day premium in SPY is reflecting a 16-point expected move right now. The 50-day premium in September, which is more than 3 times the amount of time, is only reflecting a 30-point expected move. So you have half of the expected move with 3 times the amount of time. So you'll always get the near-term implied volatility boost. So we always have a short premium on, just to help reduce the costs and still a fine trade. SoFi, good place to go long.
I am long. Not enough.
Yeah, I closed.
I need to stay at 20.
Yeah,
right here.
I closed mine. Coin 373.80 put spread. Anything to do in September? Not really.
Stuck
for now. But you're in September. A lot can happen.
Yeah.
The implied move in September is 50 points, so could work out for you. Last one, made $200 on Etsy yesterday simply by sleeping in. I just mentioned it because I see these lads made or lost $50. The power of sleeping in wins again. Hey,
sometimes
if it works, it works.
Yeah, you get that. Sometimes that works.
Yep. All right, we're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We got more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central on Monday. Have a great weekend. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. Been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No, that's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We're back. It's Friday, August 1st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we've come to the end of acronym week, and what have we learned?
Ooh, man, the markets really want those rate cuts.
Do they want the rate cuts? Rate cut odds are up today, and the market's taking a little bit of a bath. Ilya, there's only one conclusion that we can come to after seeing the jobs data. It's that President Trump was right.
I mean, the markets have agreed with him. This is we've talked about this for months now. The markets have not wanted the Fed to dither. The Fed is dithering because the Fed is on a different timeline than the markets. But I mean, not to sound like a broken record, but to sound like a broken record. We've been talking about, and I've been just pounding the table on this, the emerging weakness in U.S. economic growth. And the idea that if that is extrapolated, there is no plan B, there is no other major engine of global growth like a China or a Eurozone that's there to catch the slack. And so if you looked at what Fed funds futures have been screaming about all year long, it is that they want these rate cuts, and that they want them because they're not concerned about tariff-based inflation. They're concerned about the pain that that tariff-based inflation will produce. They're looking through that. Now, I don't know how that comports with President Trump being right, because, of course, it is that economic pain why the markets want the cuts, because they are looking through the tariff inflation and saying tariffs are going to be disinflationary because they're going to hurt growth. And boy, did we learn a lot about that this week. And this very disappointing set of jobs numbers is just yet another thing.
Well, I think President Trump was right in calling for rate cuts, because why does an economy need rate cuts? Maybe you need to tinker with things for maintenance reasons, or it's a recession reason.
Yes.
It could be an emergency. And given what we've seen today, we should say that President Trump was right. We need rate cuts, but we don't need them for the good reason.
No, both of those things.
Why not the good reason? Well, let's take a look at today's jobs data. The jobs data this morning, why are we seeing such a significant move? Jobs change, 73K, whatever. Unemployment rate up 0.1%. Who cares? Hello. Prior 2 months revised lower by 258,000 jobs.
Right.
Fed rate cut odds here today. When you take a look at the SR3 U5 Z5 contract spread, we're now pricing in an additional rate cut through the end of this year. Odds for a September cut have shot up dramatically in recent sessions, from yesterday when we were sitting in the 30% neighborhood to where we're now back above 80% today. 2-year yields are down, 10s and 30 yields are down. We're seeing gold explode to the upside. Ilya, I'm reminded of that spreadsheet that we've been sharing again this week about what happens with the market when rate cuts arrive. And when rate cuts arrive for maintenance reasons, stocks tend to enjoy it. And for the past 10 months, 11 months now, we've basically been in a rate cuts are here and have arrived for maintenance reasons. Today's data, alongside the shift in odds, tells us that we're no longer in maintenance cut mode. We're now shifting
those of us that have been on this beat for a while, including this week's second quarter GDP data, have been pointing precisely at this and saying, just look at the break-even rates in the bond market. They are not afraid of inflation. And the reason they're not afraid of inflation is they see a growth downturn ahead. The bond markets have been front and center on this.
They have been, and growth has been coming off. We saw that second quarter headline GDP was 3%. There's a lot of funny things going on with first quarter GDP.
Imports going all kinds of haywire, inventories, all kinds of front running of tariff give back, if you will.
So we've been paying more attention in recent months to core GDP. And core GDP in the fourth quarter was 2.9%, just basically consumption and investment. Okay, we strip out government spending, get rid of the exports.
And even with the investment thing, there's a funny thing that happens, because obviously when you build up inventories by front-running tariffs, by seeing imports surge 40% in a given quarter, which is bonkers, that never happens until it did. You have now in the last set of numbers a swing in that investment component. In the first quarter, it was up. In the second quarter, down, as you get shifts in those inventories. First, you load up those inventories. Now you're seeing those inventories get spent down. But at least at least we get the trade side out of the equation, and we get all the shenanigans with Doge and government spending out of the picture.
The core GDP figure is only 1.2% for the second quarter, and relative to where inflation was at the end of last year compared to where it is at the midpoint of this year, it's also higher. So have the effects of the trade policies over the past few months had an effect that has raised inflation? Has it lowered growth? Yes, because that's what the textbooks say would happen.
Yes.
Even if it's a one-off price hike. But we still have a market now that's saying, oh God, we need rate cuts for the wrong reasons. Today's a day, Ilya, where I feel particularly vindicated in the view that good news is good news and bad news is bad news, right? We have a surge in rate cut odds today and the stock market's taking a bath. We're not happy with why we need these rate cuts coming. And for me, it feels a lot like deja vu.
Mm-hmm.
You know, this feels a lot like last summer.
Yes, it does.
To late July.
Yes, it does. I mean, we were talking about this. We were talking about this, that the entire story from mid-April or so of last year until when the Fed finally issued the cuts in September was they're dragging their feet. They won't go fast enough, so we need more rate cuts in the subsequent year. And against that backdrop, bonds rallied, the dollar got shellacked. It's very different here, by the way, although the dollar, of course, takes a bath on this, but it's a very different kind of a bath than last year. That's a difference now. But bonds are certainly on the march. And to your point, just as it was with the growth scare last year and the idea that the Fed's behind the curve and they're going to have to rush rate cuts next year, stocks don't like it. Which, again, this is what we talked about yesterday as we were looking at this. We said, for this to be straightforward, you need a really disappointing set of numbers or a really blowout set of numbers. Otherwise, it's more death by 1,000 cuts. This was a blowout set of numbers in the revisions, which is a very different scenario than I think anybody had on their bingo card, because the actual headline number is pretty close.
The headline number, the difference between 70K and
110,
110 is statistically insignificant when
it's whatever
BLS, right? Like the error term in the non-farm payrolls report is around 100,000 jobs still.
Yeah.
So missing by 40K, it's a marginal miss, but statistically we can't say for certain it matters.
I mean, the 12-month average, right? Not including this crazy revision that we just saw.
Mm-hmm.
The 12-month average for the 2-month revision in NFP is 16K as of June. With this crazy thing, it's 35K. So obviously that it's tilting the 12-month average a lot. It's a huge revision. But let's take it at face value. If the average revision now on a 12-month rolling basis is 35K, the difference between 70 odd and 110 is nothing. It's at the average revision's worth of difference. It's not a big deal. Over the next 2 months, that easily gets evened out, even at this clip of revision. At the former clip, maybe it takes 2 months to even out. Not a big deal. That we get 258,000 jobs shed from the previous 2 months, and we end up with NFP results in the low double digits there suddenly, that's a huge deal.
It's a dramatic shift here, and it really feels a lot like last summer where the Fed didn't cut in July, and then we get the bad data, the PMIs on the Thursday, August 1st. You get your non-farm payrolls report on Friday, August 2nd, 2024. The carry trade starts to unwind. Obviously, that August 5th Monday session was spectacular with the markets bottoming out. But it's the same type of mindset right now, where we're back into the throes of a growth concern. Dollar down, yen and gold are your top two performers. Bonds going through the roof, yields off, and stocks getting clobbered, led lower by the Russell. I think that's a pretty compelling narrative here. And Ilya, it is August 1st, which means it's the time of the year that the VIX starts to rise. Just like clockwork, seasonality here. End of
It really
July,
is.
going into August, September, October, volatility has typically seen the squeeze to the upside for whatever rhyme or reason. We now have the tariffs in play today across the board. And now we're adrift. We're adrift now for the next few weeks because we have a Congress that's in recess for some reason or other. We have a Federal Reserve now that's not having a meeting.
They went on recess early, right?
They did go on recess early this
Yeah,
year.
well, I wonder what that's about. Anyway, go on.
I see an S&P 500 here that's coming into support now, right? Volatility's had a nice little healthy bit of expansion here today. VIX futures here in the front month up over 20 again, and VIX itself is back to 21, which is a really interesting area because we're starting to get into the teeth of a place where, outside this move in early April, this would be a relatively high state of volatility. 21, 22, it becomes a place where you start to think, okay, should I fade this off? But we're on the edge, technically speaking, right now. And I think this is what should be concerning to us here. I don't have any long deltas on in stocks. Those end of July, I'm out the window. I'm not going to be long stocks in August. Why would I do that? We have support here at 6240 or so in the S&P. In the NASDAQ, likewise, we're getting close to the range lows near 22,800, which previously carved out that range throughout the early portion of July. You lose these levels, Ilya, and then it basically, technically speaking, you have to think that the floor is another few percent away. For the NASDAQ, that could be 21,600 or so. For the S&P 500, that becomes a pullback perhaps to the lows that we were at towards 6K right now. The uptrend that's defined the market since May is still intact for now, but that comes in closer to 62. Then there's really not much by way of support right now.
We're at a critical juncture here.
I mean, I didn't see the imperative to do anything new today because I've been sitting on these dastardly S&P 500 puts. I mean, another 50 points here would be wonderful for me because I had my August 1st. Maybe the market crashes back in because of tariffs and whatnot. So that could become something a little bit better today. But I'm very comfortable holding on to this put spread that was put on a few weeks ago as like a hedge, if you will, while I was still chasing the NASDAQ higher. It's 28 DTE. The only concern is that I don't have enough time on my side right now to watch this market correction play out. Maybe kicking it out to 42 would be the best bet. But other than that, I have no desire to stand in front of this right now. I'm not going to be buying the dip here. I don't have a reason to buy the dip here.
It'd be silly to buy the dip here.
And it's almost been, I would feel much worse today if the market was up than down, purely as a function of me stepping aside because of the seasonality. And the seasonality is enough for me to say, let's just see how this all plays out and be a little bit more careful with when we want to try to buy this little dipperoo.
I mean, I obviously have bearish exposure. I've been loud about that. I've been holding bearish exposure in the Russell for about 21, and I'm reading my platform right now, for 21 days. I have 49 days DTE left in there because as I've talked about, one of the ways that I've managed to kind of take pot shots at the stock market without exposing myself to too much risk and controlling that risk, because obviously you're fighting a market that wants to go higher. Stock markets, especially in the US, are biased to go higher. Unlike some two-way markets like the dollar, like crude oil, like gold, like a lot of other things. Tom likes to talk about some of these other assets are a one-trick pony. Well, that also means they're clean two-way markets. They go up, they go down, whatever is the thing that the markets are thinking. Equity markets actually have a directional bias. They're biased higher. And so if you have a bearish view, you have to be very careful about expressing that view and how you express it. So the way that I've been doing it is keeping size small and building in more duration so that you dilute your sensitivity to underlying delta. And so what that's meant is I still have the longest position I've held so far in this cycle is the Russell, and I've got 49 days left in that. about 10 days ago, I added NASDAQ and S&P to the shorts vertical list. And I'm because vol is cheap, I'm just buying put verticals in all three. There, I've still got 60 days of duration. So I'm going to sit on this and wait. I don't think the risk reward makes sense here to lean into shorts if you're not there already. I've obviously been there for a week and a half to 2.5 weeks, depending on which thing. Russell longer, S&P and NASDAQ less so. It seems like with Russell, we're maybe getting to a place where you have something that looks like a breakout. So maybe there is something to do. In the S&P and in the NASDAQ, you've landed on the lows carved out, let's call it early July. So those range bottoms from early July, we're talking, let's call it 6250 on the S&P and 22,800-ish, maybe just under on NASDAQ, something like that. We're basically landed right there. So the risk reward to sell those things here is awful because you're right on support. You probably get some kind of a reaction bounce just on thin event risk next week and kind of less opportunities for the markets to lose their mind. Perhaps. Although, of course, there's the flip side argument that you take event risk off the table more so and the markets have more room to extrapolate, so maybe they keep running. In any case, either you get a break or you get a bounce. That gives you a trigger that you don't have right here. The Russell is a different story. There, maybe you have an actionable short. The other thing is, and I'm sure we'll get to this in a moment, a major impact of this data has been a pullback in the dollar, which very pointedly has crossed 0 trend-defining Rubicons, but stopped right there. And so to me, this looks like an opportunity to be a buyer of dollars. And that may be the most interesting trade on the board today because you have a very attractive discount.
So keeping in mind the Russell range here, we had this sideways shuffle that was being carved out yesterday. Man, I'm really one of the things I should be less of an observer sometimes and jump in. Told Nick yesterday at 10:12, if the Russell doesn't clear 2245, then it was going to, we're going to close red for the rest of the day. And if I had acted on that intuition, even just laid in like a short call spread against the remaining lingering NASDAQ longs I still had on, it would have been a lot better of a session. So the signs of the technical breakdown, they are, I think, prevalent, and we shouldn't ignore them here. We had this flag that was persisting yesterday during the breakdown. We never really could quite get back through the former resistance, and that triggered the next wave of selling. So using that same type of framework here, that would mean that the recent swing low from July 16th, 2198 becomes a bit of a place to work around. And at that level, we could go just to the other side of it. If I was looking for fresh bearish exposure, Ilya, you mentioned that the risk reward isn't great. I digress, if only because I could look at taking a short call spread right now in the Russell here, which isn't a volatility, contraction play. It's more directional. I think this thing keeps falling. But 61% probability of profit, risking, a little over 7 to make 5. It's not a bad risk to reward at all.
No,
as it were. There is the alternative, which is if I wanted to be a little bit more aggressive, right? And let's say I wanted to go out and think, our S&P 500 here, this is actually going to clear 6250. We're going to start to break down into recent swing levels like 6140 or so. Maybe I go out to 42 days and I think about the 6150, 6100. I can start to size up, even still chasing this a little bit lower if I have that kind of conviction, right? I think this is going to break. I want to get more than just the market not rallying out of this, like the Russell short call spread would be. You can get a 3-to-1 neighborhood type of trade right now, which is a decent bet on further erosion from here. But you mentioned selling at support. Okay, maybe 6245, 6240 in ES, and then you get that confidence. But I don't think we should shy away from it. If there is a window during the year for bears to make hay, the stars are now aligned. They're all here. It's time to do it. Give us a 5% pullback. We can make that happen.
Yeah. I mean, I think for me, if I was not already short, I wouldn't be adding, and I'm not adding, but I am already short. And I think all of the price action we saw this week was the most validating for that view that we've seen in a while. Obviously, we've talked about how one of the major problems with having a macro perspective on anything is the timing.
And so Tom hates it.
Well, somebody's got to be the villain. And listen, say hi to the bad guy because I remain an unrepentant macro type of trader, but you have to be anchored in the price action because the timing is impossible unless you're looking at the price action and managing risk. And as ever, to quote the great Ira Harris, if again and again and again and again, if you're right at the wrong time, you're wrong. So the way that I've approached it in the first half of the year was I had basically two big ideas: short stocks and short the dollar. One worked, the other didn't. Both started as small positions. When a position works, I add because it suggests that the timing is right. The market is following in. If it's not, then I don't add. I stay small. What happened in the first half of the year is the dollar fell 13% and stocks rose about 6%, if you average the major indexes. And the position in the dollar was much bigger because it was working, so I was adding, and the one in stocks wasn't getting bigger because it wasn't working. It was losing money. And so managing how you do this is just as important, if not more important, than being right or being wrong. It does look like the price action is rolling over here. And it's very possible that what this is a much bigger sell-off. We're very stretched. And the growth risk is very real. But that doesn't mean that you get to sell, I don't think, directly at support. Close your eyes and hope for the best. You still have to manage risk and stay small because you're fighting a market that doesn't want to go down. So
if it goes down though from here, I mean, like this is it for the NASDAQ. I can't believe how quickly we went from the high to low.
You break this and you have
that's it. The 3-month trend is over. The trend that's carried us here, we ran this exercise actually this week when you came back to overtime on Wednesday. We talked about how we reset, just working through a counterfactual. Let's say April never happens. The market just meanders sideways, right? We get to April 2nd. You get by the end of the month, Liberation Day is basically just a memory, like is a fever dream. And so if you reconstitute the trend that we've been trading in over recent months, Chinese US meeting in Geneva, Switzerland onwards effectively, it's been a really stable, sturdy uptrend here.
Yes.
So if you really like the market back on June 22nd, I suppose you're a dip buyer here. But my qualm is that given the seasonal window that we're in, with no Congress in session, with no Federal Reserve meeting this month, I just saw headlines that President Trump just deployed 2 nuclear subs in ratcheting up the war of words with Dmitry Medvedev over in Russia.
Oh, great.
Maybe this is a weekend where people say, you know what, I just want to go on vacation, and I'm just not going to take that kind of risk right now. And we'll let the market wash us out, get rid of some of the overbought readings. 92nd percentile now for CTA positioning I just saw today in terms of equity longs. That's really cooked. Okay, yes, we know that the COT report shows that hedge funds are the most short that they've been all year long, but that's just one segment of the market. If you're going to buy, this is the place to buy, but if it breaks here, you better have a parachute and get ready to cut your position very, very quickly.
Well, and this is exactly what I'm saying, is however you proceed here, if you decide, you know what, this bearish Russian has been wrong on this market not holding up for the first 6 months of the year, it's not going to change now. We're at support, and there's a little bit more vol to sell here. That's a fair argument. But were I to be pursuing that argument, I would be using risk-defined verticals.
Yeah.
And I would be keeping duration long because I would be preparing myself for the possibility that finally it is the bullish argument that's wrong. And I think this week,
finally,
I mean, those of us on the bearish side of the argument have been wrong for 6 months. Maybe it's time to switch things around. And we weren't totally wrong, in fairness. February to April was a bath. But I think the strength of the recovery surprised all around. Hence the strength of the recovery. If the markets already had the recovery priced in, it wouldn't have been as potent as it was. Obviously, lots of people were wrong and had to change exposure, or you wouldn't have the rally that you had. So clearly, whatever happened in early April surprised a bunch of people, and they had to reposition by a mile. But the price action this week starts to tell you. You can't make hay of Microsoft and Meta having great earnings. You can't make hay of Amazon having very solid results. You can't make hay of an EU-US deal on trade.
Yeah, you got everything you want. Price perfection.
Everything was there for the markets this week. Everything. And
can I point out the sectors here before we go to bonds, though?
Because of course.
I think this underscores your point.
Yeah.
What has been the carrot rate? Technical analysis is more art than science. I am not married to any set of indicators. I'm a momentum person, so I use momentum indicators. I purely care about observing how the price action behaves and the characteristics of the indicators during the trend.
Yes.
Okay. I'm not one for the signals of MACD crossover, time to sell. But what I will note here is that since late April, we've been holding above our 1 month moving average in tech, buying dips into the 1 month moving average. We've seen the same thing with semiconductors. I've marked those off here with the little boxes where we've been purchasing up shares prior to the 1 month moving average. Today, we're below it. We haven't seen a move below it in some time, going back to late April. Same thing here in tech. Two sides of the same coin, but the leadership groups in the market are now breaking down a little bit. Same thing in XLF here.
Well, right? This is hardly voodoo, right? If you were looking at any variable of anything, doesn't have to be like, forget that we're looking at asset prices. If you were looking at the population of bees in a particular area and suddenly it fell through its trend average, you'd go, what's happening with the bees? So it's just a statistical thing where something drops through its trend average suddenly and you go, something different is going on.
And the different thing here for me is when we look at the, like this is XLY, consumer discretionary. No matter how you slice it, it tried breaking back above the area where it was prior to all the tariffs kicking off. And then our PMI fears.
Yeah.
That was February 21st, that Friday.
Yeah.
We've now lost that again. We're back below the 50-day. We haven't been below the 50-day going back to early May.
And Fed rate cut odds fell to their lowest since their mid-February thing this week. Same turning point.
There's a lot of things have been broken here. So in terms of returning back to the highs, there's going to be some wood to chop now. It feels like positions were cleared out today. People panicked. The leadership groups, a lot of profit taking. You're seeing the characteristics of the trend that have carried us here over the past 2+ months. 3 months, really, they're eroding. So I'm less of a dip buyer here. I'm not going to put long deltas on in equities today. It feels like deja vu because end of July, beginning of August last year had its own growth scare flavor, which of course meant the market, once it got a little bit of good news, it knew the Fed was going to think it was late and we might get 50 in September. So dare I say, Ilya Spivak, might we get 50 basis points of cuts in September?
Maybe.
There's been a dramatic swing here today in the SR3 Z5 contract pricing, which
which looks just like the 2-year, by the way.
It looks just like the 2-year. Every 25 basis point increments in this. So when you go from 96, that's a 4% implied year-end Fed funds rate, to 96.25, that's a 375. You go to 96.50, it's 350. We've done one full cut added on to the board here today. as a result of today's data. So if Ilya and I sound like we're being dramatic talking about the market shifting from maintenance cut mode to recession cut mode, this is pretty exemplary of that price action. You can see it in the notes. You can see it in, that's beans, but you can see it in the notes here. Big bullish engulfing bar breaking out of its triangle. Same thing in ZB here, big bullish engulfing bar breaking out of the downtrend. I pretend that early April didn't happen, but the downtrend here breaking. What's been the best place to hide during recession? Since 1980, 2 spots, long into the curve, gold. And the way that the market's looking like that
what have we been saying for weeks here? That it looks like the long end is trying to build a sequence of higher highs and higher lows. It looks like finally the long end is ready to turn. And I'm happy we stuck to our guns through this pullback. I actually added to the position, and it's working. I'm at the long end, and it's working. I think we have to look at the bottom line here. Yesterday, Fed funds futures had 29 basis points for this year. Today, they have 52. So we've added a cut. Now, we're in line currently with what the Fed was saying in June. And so this is not anything crazy at this point. It's not like the market is saying the economy is falling off a cliff tomorrow. But clearly, the markets think that more rate cuts are likely as a consequence of this. And we've got a bunch more data before the Fed has a chance to do anything. We're at 2 cuts today. We could end up at more later. What's really interesting today, though, we mentioned that there's an exchange rate between rate cuts sooner and rate cuts later because the markets want later. So, or want sooner, but are thinking they're going to get later. So what you end up with is for every rate cut you miss this year, the markets go, yeah, okay, it's about 1.5 that we have to add for next year. So if we look at the changing in the sequencing, today we added about a cut for this year. In fact, we moved a total of 24 basis points. But for next year, we've only come off the extreme dovish reading by 7 basis points. We're still at 68 basis points in cuts for next year. So the markets are saying more now, not exactly less later. The markets are still way more dovish than the Fed is for next year.
Yeah, I think that's the key point, though. Like the market is of the assessment that we're going to be getting somewhere in the neighborhood of 5 to 6 cuts by the end of next year.
Yes,
and we were getting into the mindset that with Powell, being too late, Jerome Powell, as some might call him, that we would see fewer rate cuts, like in terms of the dispersion of rate cuts when they would occur between now and the end of 2026. They were going to come more at the end of 2026 after Powell leaves office. So you get 1 or 2 now, you get 3 after May. And it's really shifted now where it's like, okay, we're probably going to get 2 before the end of this year. We may get another one in March. It's not going to be, the rate cuts aren't going to be dependent anymore on whether or not Powell is the chair. There's now organic reason for them to occur because President Trump doesn't have his guy there. The rate cuts aren't happening.
Well, and in fairness, market pricing, I've been looking at this thing where you sort of subdivide, and Fed funds futures let you do that because they're 30-day monthly contracts. So you can go, okay, how many over next year's rate cuts are expected to happen from January to May, which is the end of Powell's term, versus from June then through the end of next through the end of the year through December. There wasn't that big of a tilt for the post-Powell period.
No, it was like 1 to 2 versus 3. Now it's like 3 versus 1 to 2.
Yeah, like it wasn't like the markets thought the Fed was going to realize sometime by the end of 2025 that they were late. Yes. And that now they have to press the gas. And the gas would be firmly hit all through 2026, much more so than the Fed acknowledged in June. And that's been the market's default for a while. And by the way, that hasn't stopped the dollar from rallying. And so we're kind of seeing that dynamic today. Yields are off significantly. The dollar had a bad initial reaction. You look at some of these dollar crosses now, in particular the Aussie, the most risk sensitive of the kind of the immediate top four, it's almost erased all of its gains.
The question that's ahead of us right now is, are our prior assessments about the way the bond market will behave over the next few weeks, are those misguided, given recent data? Because my view has been we'd probably see a lot of chop. The company line, my company line, as I would say, has been, directionally neutral with a slight upside kicker. Yeah. And that's still working because we're back to the midpoint in ZB, right? ZB midpoint is basically 115.5. ZN is a little bit north of there, but you're starting to see some signs that we may be getting ready to break out. This is a really difficult candle to ignore and suggest that we're not in a more bullish mindset now for the long end of the curve. Sure. Whatever's going on with inflation is going to be subsumed by the slowdown in growth, is the market's consensus view at this point in time.
Yes.
Would you prefer, because it's only 11.9 IVR, and I think this is ultimately, let's turn narrative into, action here.
Mm-hmm.
Are you more comfortable expressing a bullish view vis-a-vis short put spreads, or trying to get something like a long at the money call spread, buying the futures? How would you express your bullish view in notes and bonds right now, given what we've seen play out today?
I think it depends on your level of confidence and on the position sizing relative to your account sizing. Because these ZB and ZN contracts, they're large. I think you have to use verticals either way, because you want to have buying power, but you also want to have very careful risk control. You want to be sizing up positions such that you're not risking. The way I do it is no more than, let's call it 1 to 2% of account equity. I'm typically aiming for 1.5% of account equity on any given position, because I'm trying to stay alive, not be a hero. And I'm trying to make money over a longer term on a smooth curve, not try to hit a home run on every swing. So what I think you do in this kind of a situation is you look at vol, you look at it being relatively cheap. ZN vol is cheap, ZB vol is cheap. And you look at it from a just buying call verticals perspective. And then you go down the list and you say, what is an attainable way to do that? Do you do that by saying, I'm going to use, let's say, the rates futures, 10Y or 2YY, in this case, 10Y, 30Y? Do you use those because they're smaller and you trade them upside down? You trade a decline in yields as expressed there? Or, now obviously this is a futures show, but there's ETFs. You can do things like TLT and, again, reduce size to manage risk, to make the bet more manageable. And at that point, you might be looking at the futures as your indicator, because there's a lot of fuzz in the ETFs that isn't necessarily bonds related, because it is somewhat kind of shaded by stock market stuff. But it is exposure to that narrative, and it does let you get a little smaller. The other thing, of course, is you can get implicit exposure to all of this through currencies, because currencies are creatures of interest rates. And if you're going to bet on this, and again, it's a futures show, but spot dollar yen, we obviously now offer spot right on the Tasty platform, you might as well be looking at a 10-year yield. That's the kind of a vehicle that this is. So if you're expecting 10-year yields to come down, you might expect a stronger yen relative to the dollar. That's another way to express this idea. I don't think it's the cleanest because I think the dollar is showing itself to be stronger than what these shenanigans are. And we can see that.
Well, we're going to get there.
Price action today. We'll get there. But I think you should be open-minded to looking at the ETFs and saying, you know what? I'm looking at ZB and ZN as indicators, but I'm going to be careful with my sizing here. I don't want to be upside down on a thing that's very volatile and where the dust is still settling. I want to have risk. I want to take a bet. I want to participate, but not irresponsibly.
Oh, I'm participating irresponsibly in ZB because while we typically have our 45 and 21 day out cycle, I have been sitting on these 117, 120 call spread here in the follow account for some time, just to, again, what if something happens in early August because of vol in the markets, my seasonal voice in my head. And so at 115 and a half, this has made up a lot of ground over the past few weeks. This was a position on near 111 and it was basically at max loss. I'm going to go beyond the typical tasty because this is not a sell vol type of trade. This is a break glass in case of emergency.
Yeah.
It feels like it's a little bit more appropriate now to keep in the pockets. It's only 21. We'll reassess in a few days. We'll see if the price action can continue. But we do need to hit metals here, which is it gold's time to shine? That's a pretty interesting looking triplet of candlesticks here. As our producer and friend Josh Fabian would like to say, that's a Morningstar candlestick cluster.
Right.
Above 3,400.
Big candlesticks guy, Josh.
Yes. In GCZ5, that would mean that we've gotten above our 1 week, 1 month, and our 50-day moving average in today's session. Likewise, it's a bounce off the halfway point of the Liberation Day trading range, if you will. And it could potentially see us back into the uptrend from the December, April, and then late June swing lows, which is to only point out that while we're rebounding here, gold volatility has started to creep up. We hit a low IVR of 13.2 a few days ago. We're now back up to a high of 23.1 as prices firming up. And what's that long-standing research show? Since 1980, the best two places to hide during a recession scare in the market, long end of the curve, and gold. So for all the warts of the gold trading recently, Ilya, which I certainly have my own, am I going to be sticking with the gold position that I currently have as this continues to squeeze up here? Yes, there are 25 days to expiration. The volatility moving up is bringing some life back into this position. Will I need to roll it or change how I approach it moving forward? Probably. But again, there's enough action here for the right reasons for me to hang on to long delta exposure in gold, in silver, which has taken a bath itself, but those are still 88 days to expiration. Silver would do less well than gold in this kind of environment. But yes, I digress. Volatility is starting to peak back up. We had negative IVRs in silver a few days ago. We're finding support at the 50, where we found support before we broke out in early June. Recession.
I have a slightly different take here. I'm actually short gold at this point. I don't have any exposure in silver. I'm short gold, not in terms of buying puts, of course. I'm short it in terms of selling calls when it seemed to breach the trend. If we look at the sequence of higher lows going all the way back to February, we took that out. We're retesting right around 33, let's call it 66 or so. That's an important horizontal level and where the trend would be retested as former support turn resistance. So I'm unrepentant in this short. I don't love it because I don't think ultimately there's been follow through on the downside, but I have a small bet, risk defined, lots of duration in it. I'm willing to let this kind of resolve itself. I think the strength of the dollar today suggests gold might have a hard time, and the fact that it's not breaking out, like for example the yen is, or attempting to, tells you a little bit of that story. We'll see. I'm certainly very open-minded to getting back long gold. I've been mostly long it this year, but it does seem like with this dollar strength, something might be fuzzy now. I'm not married to this exposure. It's not high conviction, but I'm not ready to quite get on the other side.
Over to energy quickly before we hop into currency, which I think we both want to talk about. The energy market does not like today's jobs data, which is understandable. We haven't referenced the stat in a while, but if you were to look at the past 30 years of global GDP data and demand for oil and oil products, petroleum products, you'd see a rolling correlation on a quarterly basis of about 0.92 per the most recently readily available data, which is to say that when there's more demand in the economy, demand for energy goes up, which I don't think is a shocker. So when you see that the jobs market is struggling and there are a lot fewer jobs out there than previously anticipated, less aggregate demand in the economy, less demand for energy. And we already have the first half GDP data to show that consumption actually fell in the first half of the year. So while we have this saber rattling going on, this is what makes this crude oil market so interesting. We're finally getting the rise in volatility here, even as prices are coming back in. The geopolitics add a distinct flavor to this because, as we learned today, we have just apparently deployed 2 nuclear subs as part of this war of words with Russia and this August 8th deadline that Trump has set for a ceasefire truce between Russia and Ukraine. I'm still leaning in my short iron condor position, and that helps today as we get closer to the center point. But energy is a little bit more touch and go right now, even in something like natural gas, bouncing off the low that we had on election day last year. There's really not a lot of conviction here. So oil goes up and we've basically erased the gains this week. Natural gas is meandering. I'm not sure if there's an interesting story there to be told other than let's keep doing what we're doing. But
probably not yet.
You and I want to talk about currency here because the dollar's been sucker punched today. I think that's the more interesting story. Which
and is already on a path to recovery, which is equally important.
Yes. So thinking about what has happened here in the dollar, this is obviously a nasty little reversal because 2-year yields fall apart on this exceptional rise in rate cut odds. But yet, where did the dollar bottom today?
And the euro, by the way, looks exactly like that.
Yeah, the 50-day moving average is something that we've been struggling a lot with the dollar index in recent months on the way back, trying to climb through it. We never quite could. We failed again here in July, and then we did here. And what did we do here today?
I mean, if you're a fan of horizontal lines, this is what you want to see.
You're a horizontal line, man. Yeah.
There you go. This is what you want to see. You want to see that you had a breakout and the market came back to retest former resistance as support, held that support, and basically said, oh, did you miss the breakout? Here goes your mulligan.
It feels like it. The yen is obviously at the top of the heap today, which suggests bigger problems. But in terms
of what we just said about rates, the yen is particularly sensitive to long end rates.
Yeah. So do we think, okay, so if the U.S. economy is, in a place of trouble, what does that mean for a place like Europe? If we're going to have to start cutting rates, the ECB is currently on a meeting-to-meeting basis. Will they be able to stay afloat? We learned in the global financial crisis that that's not how the world works. We're too globalized right now. So if the U.S. is catching a cold, then Europe will cough at some point in time.
And then some.
I'm not looking at these technicals today as a Morningstar candlestick cluster, and perhaps this is my bias. But outside of the yen, the euro rebound, the pound is only up by 0.07%, folks.
Look at the Aussie. I mean,
the Aussie has given all of this up here.
It's given it back. Look at the Canadian dollar. I mean, it's all of it.
And failing.
Back. I mean, I added to this position. So yesterday, I sold Canadian dollar because it broke the neckline. Today, I added into that position because I got a mulligan to get bigger. I, on the spot side of things, bought some dollar Swiss today in lieu of adding to my euro position, which I've had since the beginning of July, which is still very much in the black. My pound position, which despite this pullback is still very much in the black from early July, where it looked like the dollar was starting to turn, and where I basically flipped my first half book completely over and said, okay, for first half, I was very short dollars. Now I am very long dollars. And the price action today suggests this was an opportunity to get on that boat rather than an opportunity to once again bet short. And we probably have legs now for another big leg here in the euro, in lower euro, lower yen, lower across the board against the dollar. This probably is one of the better opportunities to get on this boat. Here, the risk reward is actually about as good as it gets.
I'm trying to lay out new short call spreads in the Canadian dollar and British pound here. British pound volatility is low enough that the more prudent thing might be to just look at 63 days and go to something like that out of the
Plus,
money.
it's kind of at a swing low support, so you want to be careful. It basically stopped right at the mid-May swing low, so you got to be a little bit more careful here. It's not as clean as euro or the Canadian dollar, certainly.
The vol here is also in the Canadian dollar and the euro, like 43.1. Selling a call spread in 117, 118, the Canadian dollar. I just try to put something on here north of 73 and a half, 74, right? This is a really important retest. I really like the fact that the dollar bounces back, or rather, all these currencies bounce back today into former support turn resistance.
And stops right there.
And stopping there, right?
I mean, in the euro, it's like to the pip almost.
So I think we should take advantage of the vol, right? I know vol is expanding right now in stocks. Do we want to try to catch a falling knife right now? Not this time of year.
No.
But everything else.
Buying dollars feels like the cleanest thing on the board here, but for the bond market where gold is up but kind of mid-range, and crude oil is down but kind of mid-range, and stocks, but for the Russell, are at support. So maybe this is not the time to go and try to be a hero in a move that's already hitting some important levels that might be a place to bounce from next week. I can't wait for all the bullish comments at the start of next week that are going to scream, see, it bounced. Okay. Just wait till the end of next week before you make that determination, because I think it might bounce here too. And that doesn't change anything. But with the dollar, especially in the euro, in the Canadian dollar, maybe in the Aussie, there's some real clean setups.
I think it's worth the swing here today, right? It's just the risk to reward. If we cross those thresholds, if we get above the necklines, then you just cut and run. And it was the chance to get back onto the dollar trade, and it doesn't work out. The yen, for me, I'm going to use this opportunity to get new short yen exposure. Not too worried about the Japanese yen. Let's take a look at what's going on here on the calendar. Monday, quiet factory orders are the only thing. So I included Tuesday as well if people want to think ahead, because there is a tariff-related data release coming out that will spark a whole news cycle no matter what. Balance of trade figures Tuesday morning for the US and for Canada, and then ISM services PMI at 10 a.m. Eastern. So we're through acronym week, if you will, but there are some things just around the corner that will raise people's eyebrows. And as we saw in February, Elliot, it was a PMI report on February 21st that kicked off the growth scare and made everyone say, well, if the economy is already declining prior to the tariffs coming in,
Well, and manufacturing ISM, by the way, today was very disappointing.
48 versus 49.5 expected from 49. That's a PMI, which is a diffusion index. Below 50 means it's in contraction. So we were expecting the contraction to continue, but at a slower pace, right?
The slowest, in fact, since we had the last expansion in February, and we went the other way completely.
Right. So factory orders on Monday. I don't know if the tariffs are revitalizing American manufacturing. So President Trump was right. Maybe we're too late on the rate cuts, Ilya, but he's right for a bad reason.
This was the weakest manufacturing ISM reading since November last year.
You know who's not going to talk about this? Dr. J. He's not going to talk about macro or technicals here on the network. No, but he's coming up next. So let's let the people have what they want. They want a quick break. They want to go get a cup of coffee or a bite to eat. Dr. Jim Schultz is here next on Tasty Live with From Theory to Practice. Good luck trading. See you Sunday for first call.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the beginning, or possibly the end. The apocalypse is indeed here. So, Josh, bring us right into the market, man. We got to see, man, do we have a market? Like, are we still here? Let's take a look real quick. Yeah, so we got, baby, look at this. EME S&P is down 125 on the day. You've got the risk-free instrument down 530 on the day. Not exactly doing what a risk-free instrument is supposed to do. You got the boomers down 710. You got the Russell 2000 Futures Index down 52. And so, man, whether it was non-farm payrolls, whether it was PMIs, whether it was inflation expectations, man, the market just does not like any of it. Got a huge down day. Obviously, volatility ripping to the upside. Got volatility futures up 2.25. You got the old spot volatility. Let's get to that guy. If I scroll down on the screen here, yeah, you got the VIX. The old VIX, oh man, up 481 on the day, up to 21.5. Man, if you guys remember, or if you've already so quickly forgotten, it wasn't that long ago that we were in the 14 handle. Like, we were under 15 when it came to volatility. But I think it was earlier this week. Was it not earlier this week? Hang on a second. And oh, by the way, if you have a question for me, I will drop it in the chat box. But I will not be taking any questions about my Amazon trades at this time. But if you have other questions, drop them in the chat box. But you know what's funny about that? So, I mean, I don't know what more I can do for you guys. Like, really, like, I'm going to scrap, I'm going to search, I'm going to see what we can, scrape together. But man, if you took the opposite of all 4 of my earnings trades, you would be 3 out of 4 and probably 4 out of 4, depending on how Apple plays out in the next couple of weeks. And so, once again, it doesn't matter how I sound, doesn't matter what kind of confidence or conviction or chutzpah I might bring to the show. You need to have a sticky note on your screen. Do the opposite of Dr. Jim. But let's take a look at the VIX here really quick. So if I go to, hang on, let me get into the VIX chart. And we go to the chart of the VIX. Yeah, so just the other day, man, that's a candle right there. That is the final boss candle right there. That's like, you've done the smaller levels, like you've gone through the smaller, castles or whatever. You finally get to Bowser, and boom, there he is, man. Like, there it is. Super green, super solid. And man, that's really something. But look at this. So down here, we just had volatility down. This guy was, let's see. Yeah, he had 1474, 1470. Yeah, so that was only 3 days ago. Like, markets moving, things change, and things have changed significantly here in the old market, which is pretty interesting. Pretty interesting indeed. Of course, the metals are performing extremely well today. You've got gold up almost 50. It was actually up over 3,400 a little while ago, so we'll see where it closes in the next couple of hours. You got silver even up, 20 cents. But today is a safe haven day, man. I'm looking for quality. Like, I'm looking to hide behind something that I think is going to be there when the dust settles. Like, when we get to the other side of this, what is still going to be left standing? Like, what is still going to be, kind of on the old horizon there? And it looks like gold and bonds, of course, are going to be the two big winners. You got bonds up about 1.5 and gold up about 50. Surprisingly, the euro is up, and so the dollar is actually down, which is a little bit surprising, just given the flight to quality and the flight to safety. But again, you never know, and they're all living and breathing things. So, all right, let's go into so let's talk about a couple of things happening in the portfolio, and then I want to get to you guys, man, because on a day like today, let's cut through some of the funny business, not all the funny business, because you guys expect a certain level, a certain amount, a quantity of B- humor, and I do not want to let you down. But let's try to cut through, maybe 60% of it, and let me get to what's going on in your world, so maybe I can help you out with whatever you might have going on. But yeah, so Amazon. I mean, I don't think you could have done a worse trade, honestly, or I guess it'd be a pair of trades, because we did two trades, of course. We did an upside butterfly, and it didn't work. I mean, Amazon crashed, boom, banged. I mean, you can see it right here. You got the stock down 20. And so, yeah, stock down 20, down to 213. And so the butterfly to the upside, 235, 250, 265, we can basically just put a nice little X through that guy. It's not even marking for anything. Scott Sheridan and the boys are not even giving us a mark price over there at Tasty Trade. And so it's going to go out the pasture. Like, it's going to be done, and it'll disappear. And then come Monday, it'll be like it never happened, other than the fact that we might be a couple dollars lighter. And so the other trade that we have on the short put at the 210 strike, I mean, it's not working now, of course. I mean, if you look at, let me grab some magenta here. If you look at the mark price of $7, and we put the put on for 248. And so, hang on a second. One of you guys pointed this out in the chat the other day, and I don't think I saw it on the show, but I saw it after the show. I got to get back to grouping by chains. Yeah, there we go. Man, it's like a breath of fresh air. Man, it is like, yeah, it's like the VIX back over 20. It's like, man, we are back. Like, it was so over there for a second, but man, we are so back. And so grouping by order chains here is nice, because now you can see the individual positions, which is what I want. And it kind of helps me more clearly kind of organize what might be happening, with a given stock. If you have multiple positions in that stock, this is kind of what can be super helpful. So for Amazon, the butterfly's gone. There's nothing you can do. The short put, though, interestingly, there's nothing to do right now. Like, believe it or not, but we sit tight. Like, believe it or not, this is when you kind of lean on doing nothing as your default setting. Like, this is when you kind of lean on, like, all right, like, I'm going to do nothing. I'm going to go ahead and I'm going to exercise my right to do nothing. It's still out of the money. And so let's not start, burning up different adjustment protocols that we could potentially use later on down the road. Now, of course, it's gimmies and gotchas, right? I mean, if I'm waiting to like sell a call next, let's say, selling the call now is going to be more favorable than if I wait for Amazon to be 207 or 205 or 202 or whatever. It's going to be a much, much more unfavorable position if I do indeed wait. But inside the gimmies and gotchas are more gimmies and gotchas, right? So if I sell a call right now I'm exposing myself to upside risk. Now I'm exposing myself to, if this whole thing reverses course on Monday, which it, oftentimes does. I mean, I don't know if it's going to or not, of course, nobody knows. But if it does kind of start heading back higher Monday, it's kind of nice that I don't have any upside risk right now. Like, I'm totally wide open to the upside. If the stock rips on Monday, Tuesday, Wednesday, whatever, we're going to be in a pretty good spot. So we're going to sit tight on Amazon with the short put, at least. And the butterfly just didn't work. For Apple, it's a similar situation actually with what we just saw with the short put in Amazon. We've got the 195 short put. You've got the stock at 202, right? You can see, I mean, we're coming under fire a little bit here with the trade price and the mark price. But again, like as long as it's out of the money, you do nothing. Like this is the way I like to trade. This is the way that I like to kind of view these positions. I respect my own brethren on the network, my own brethren in the tasty sphere out there that might want to more aggressively adjust and neutralize delta and things like that. I think that's 100% fine. I'm going to sit tight though. I'm going to sit tight and I'm not going to do anything. And let's just see if this thing doesn't settle down come, next week. NASDAQ down 550 now though. Man, like, are they going to squash them today? Man, are they going to send this thing down like 800 on the close? Like that would really be, man, that would really be something. That would be something indeed. And so, and oh, by the way, if you saw the non-farm payrolls numbers, I don't know what more evidence you need that it's all made up and imaginary, because they went back and they revised the numbers from the previous months to where they basically didn't mean anything. And they do that every single month. Like this month was not like an outlier. This month was not like an exception to the rule. Like, yeah, usually we're actually pretty close, but we're actually off our game the last couple months. It's like, no, every single month, like they missed the mark by wide margins. And so the number they presented today doesn't even really mean anything. We've got to wait and see how it gets revised in the coming months. But anyway, I digress. Happy month anniversary to you all, by the way. I forgot that. I meant to lead the show with that, but it's been a crazy day here. Crazy day indeed. And so, all right, let's go. So that's Apple. That's Amazon. What else do we want to talk about? Let's see. Man, I see you guys in the chat though. Look at you guys, man. You guys are amazing. Man, Andrew Cortado's in the house. Sam L's in the house. Daniel Perkins in the house. Joe's in the house. Emmett Morrison. Man, look at you guys. Mark's in the house. Ed Bickford in the house. Man, I appreciate you guys. And there's so many more of you guys that I didn't get to there. But let's see here. So the Best Buy, the P&L Open Bros, man, y'all are impacting me significantly. I mean, not enough for me to actually change course, but we might be getting close. So for now, let's sit tight on Best Buy. Let's do nothing. Chipotle, I mean, man, it's got to be coming close to the end here, right? I mean, whatever the end is, I don't know. I know it's not going to be fresh chips. I can assure you that ain't going to be the end. And so I think somehow they're going to get more stale, which I think, we're pretty much at the bottom of the barrel in that regard as well. But Chipotle, we're short of 50 strike. Again, I'm okay taking the shares if that's what it comes to. For right now, I'm just going to hold the in the money short put. Just as honestly, if nothing else, it's a nice teachable moment for you guys. If you have a deep in the money short put, and you're okay holding the shares, just remember, you don't have to do anything right now. Like you can just sit tight. Like right now, we basically have long stock anyway, right? Like basically, I mean, we've got 94 delta, whereas if we held the shares, it would be 100 delta. And so we're basically holding long shares to begin with. And so some of you might be saying, well, I kind of want the shares now. It's like, well, okay, you could go through all of that if you wanted to. But for me, I'm like, let me just sit tight. It's basically a long stock synthetic at this point, and I'm totally fine with that. And not to mention, if the stock does rally, the deltas are actually going to drop, which if you think about it from like a short-term contrarian standpoint, I kind of like that trade-off. Like when things go up, I like to be less bullish, and when things go down, I like to be more bullish, just generally speaking. And so, don't send the momentum bros after me on the internet because they're not going to like that either. But for Chipotle, we're going to sit tight, and we're gonna do nothing. And so, other than that, though, you've got Google. All right, so Google, this is our strangle. We're basically right there at 50% of max profit. Oh wait, are we? No. We still got a ways to go. We still got we still got like another 40 cents to go. So I'm not going to close that trade. But so Google, we sit tight and do nothing. Man, we're moving through it with a quickness today. This is like, man, there's nothing like a little 560 in the NASDAQ to clear the sinuses. Like just a little something to get that tickle out of your throat where it's like, man, I thought I was getting a little sick, but I can't focus on that now. Got the NASDAQ down 600. And so Google, let's sit tight, do nothing. Meta, Microsoft, these guys are both going to, well, not Meta, I should say. I mean, Meta, oh, this is nice. Wow, look at that. Yeah, so Meta down 27 today. That's really, really nice for this short call spread. That is 720, 730. You've got the stock at 746. And so you can see that now we're only down a couple bucks on the trade. And I mean, just given the action today, it's just another great reminder that markets move and things change. It's just another great reminder that anything can happen on any given Sunday for all my Willie Beeman fans that might be watching the show. And so for Meta here, we're going to sit tight, do nothing, simply because we have 49 days to go. Like I mean, this is the classic setup. This is the classic kind of strategy with a defined risk position where you sit tight, you give it all the time it needs, and you kind of control your size on order entry. You know, you like the risk return trade off, whatever you signed up for when you put the trade on, and then you sit tight. Like you let that guy work and just give it time. Like there's no reason to get in there and zig and zag and try to dance between raindrops necessarily. You know, just kind of just cut it loose and let it go. And so that's what we're gonna do here with Meta. And let's go to Microsoft just quickly because this guy's going to go out to pasture too. I don't want to spend too much time on this. Yeah, sadly, you know, we don't have enough time. It's not going to come back. We've got 0 days to go. It's not marking for anything. I mean, apparently Scott Sheridan and the boys are giving me a penny on you know, the 5-10 put, but that's not real. I can assure you that's not real. It's very similar to the NFP numbers this morning. Like this penny that you see right here, this is basically equal to NFP. Right, in terms of its imaginary status. Like it's there, like it's a number on the screen, but does it mean anything? I don't think so. And so NFP, you know, random marks on puts, they don't mean anything because this guy is well, maybe that does mean a little something with the stock down 10. Either way, it's gonna go away, and that's fine. Procter and Gamble, of course. Guys, this is it. Again, we weren't wrong. We were just early. Right? You're not wrong, you're just early. Procter & Gamble up 70 cents today. Of course it would be up 70 cents today. This is exactly what we predicted earlier this week, right? We put this trade on Monday, I think, right? And so, yeah, I mean, Procter & Gamble, man, the vertical spread unfortunately did not work because we mistimed the 4 horsemen of the apocalypse showing up. We thought it was going to be Tuesday. It ended up being Friday. It's like, man, we were a few days off. And unfortunately, this time, being early was indeed being wrong because we don't have any time left on this vertical spread. And so there's just nothing that we can do. And so I'm not going to pay a debit to roll it. Like I'm not that in love with this position. It's just going to be whatever it's going to be. And so we kind of let it go. But the strangle's looking pretty good. You know, you've got the stock at 151. We've got a 145, 165 strangle that is now up about 70 cents. And so that's solid. We'll sit tight. We'll let the guy cook on the back burner and, you know, just kind of obviously pay attention to it over the coming, you know, days and weeks and all those things. But yeah, Procter and Gamble is actually looking okay. The strangle is, at least. I mean, we kind of knew that the vertical spread was gone. Starbucks getting smashed today. And so again, the butterfly's gone. We knew that the other day. We have our 100 shares, but again, this is intended to be a longer term project. It's not like the Best Buy that was never really intended to be a longer term project, but kind of, you know, it kind of backed itself into a longer term project. And so this one is going to be here to stay. I would say we're probably going to keep this to the end of the year, I would say. Like, I think we're probably going to go ahead and just hang on to this guy until at least 2026. Now I reserve the right to change my mind, you know, on Monday. But right now we're going to sit tight and do nothing. And then TLT, you know, this is the one winner on the board. Right? You've got a flight to quality. You've got a flight to safety. Like everybody's afraid. Everybody's scared. What do? They buy bonds. They buy bonds. They buy gold. Right? They buy some bonds. Right? They follow Peter Schiff on Twitter and they just scoop up a bunch of bullion and they just call it a day. And so right here, you've got your short to 86 put. You've got TLT up to almost 88 now. Our short put is up over 50% of max profit now. So I think that it is time to go ahead and take this guy off. And so I don't really think we need to belabor this point too much more. And then this will be good because I'll be able to get to you guys a little earlier than I would have otherwise. And then we can see where you guys are at. Man, I see you guys. I see DK's in the house. Chris Anderson's in the house. Man, look at you guys. Look at you guys. All right, let's go ahead and let's close out of this TLT position for 95 cents. That's fine. All right, so we're at 96 cents, whatever. So we're out of TLT. That was actually the one winner that we did have on the board. And unfortunately, it's very much kind of a, you know, a wait and see situation. Oh, one more thing I wanted to say. So if you saw the show yesterday, because of the huge SPX butterfly we had on for FOMC, we actually did okay this week. I mean, we made like $20 on that trade. So that obviously that covers Amazon's, that covers Meta's. Like it's, you know, obviously good. I mean, you know, the losses are maybe a bit more than the $20 this week, but it certainly helps. And so, but if you saw the show yesterday, you saw that at the end of the show, I was like, man, I kind of want to get a trade on for NFP. Like, let's get a little something on for NFP. I probably would have played it to the downside, of course, since we were predicting the apocalypse, but it would not have worked. Like, this move today is so significant. Like, this move today is so significant to the downside that we would have almost certainly overshot the downside on the butterfly. So that's one thing to keep in mind with the butterfly. They're great trades when they work, just like every other strategy. But when they don't work, you need to be mindful of, all right, well, not when they don't work, you're obviously very mindful, but you need to be mindful of what is going to classify not working. And when you have a strategy like a butterfly, an expected move butterfly specifically, you need to remember that you essentially have to get two things right. Number one, you have to get the directional move, but that is not it. Number two, you have to get at least some degree of the magnitude of the directional move correct. Like if you only get the direction move, it's not going to be enough. If you overshoot it, if you undershoot it, it's not going to be enough. And so this morning was actually a great example, or today I should say, is a great example that, had we done an expected move butterfly for SPX for NFP this morning, which almost certainly that's the strategy we would have selected, it would not have worked. We'd be sitting on max loss on that, even though we got the direction right. So again, it's always gimmies and gotchas. It's always gimmies and gotchas. Rarely are you going to find something that's optimized. Rarely are you going to find, some point of optimization. It's almost always certainly going to be, here are the gimmies, here are the gotchas. Do you like the setup? Does that fit with what you're going for? That's essentially what this game is, just over and over and over again. Rinse and repeat until you retire. And so that is that is some NFP. I want to bring that up though, because I was like, this is actually a great teachable moment. And it's a teachable moment that didn't even cost us any money. Like a lot of our teachable moments cost us a little something. Like you got to pay a little something to the man, to kind of conjure up a teachable moment, but not this time. This time we actually were able to do it without losing any money. All right. So let's see. Man, I want to surprise and delight somebody. Man, let's surprise and delight somebody in the chat. Man, look at DK in the house. Man, I'm a surprise and delight. DK's near the end. Man, look at DK. DK put this in there thinking there's no way he's going to get to this, and here we go. We're doing it first, DK. So thank you so much for being here. DK says, Dr. Jim, I have a call butterfly on NVIDIA for 175, 180, 190. Okay, so it's unbalanced. It's a little skewed there. I like it. For a credit, broken wing butterfly, I imagine. For a credit of 33 cents, $33, expiring on August 15th. I assumed it'll be at maximum profit if NVIDIA hits 180 at expiry. That's correct. Anything between 175 and 180 is profit, correct? I think that's right. Let me go ahead. Let me set this up because I don't do broken wings as often as some of my own brethren on the network. And so you said August 15th, right? So you said you've got a 175, 180, 190. So I'm assuming that you're talking about calls, of course. I don't think oh no, you did say a call butterfly. Yeah, that makes sense. So you buy the 170, you're going to sell a couple 180s, you buy a 190, go back in, double up. Yeah, right now it's actually a tiny debit. You got it on for a credit. Okay, so that's good. Let's go to the curve view to help us answer your question. I think you are correct. Yeah, maximum value. So there you go. Let me minimize that. Can we zoom in a little bit? Yeah, just a titch. All right, so there you go. So you are correct, right? Your maximum value is going to be right at about 180. Right, like 180 on the nose, of course. And so that is going to be because remember, like with a, well, let's not go down that pathway. I actually saw a tangent that I rejected. That's never happened before. Right, it's almost 10 years on the network. That has never happened before. You heard it here first, only on the Tasty Network. But yeah, I was like, that tangent is not going to help us. And so 175, 180, 190. Max profit is 180. You can see that if it slips below about the 175 mark, so you're correct. This is where you kind of slip into, a small loss. Most of your risk is to the upside, which makes sense because that's where you're holding the wider vertical spread. And so where you choose to kind of widen out the wings is typically the side of the strategy where you're going to be holding more risk. And so, yes, you are correct. I mean, this is this is not the best price for you. You need up a little bit, of course. If you could get NVIDIA up, basically just to a race today and be up around 177, 178, that would be a very good outcome for you. And so that is essentially what you are playing for. And so, well, actually, wait a minute. Hold on. Yeah. Okay. The reason why this is red for me is because I'm paying a debit. If I switch that to a credit, yeah, that's going to be, I knew that looked weird. So this is going to more closely resemble what your curve looks like. I'm glad I made that switch and kind of caught that there at the last second. And so if the stock goes down below the bottom strike of 175, you're going to pick up whatever you collect on entry. That's essentially how a broken wing butterfly works. And so you can make more money in the middle, but again, you've got to be prepared to hold that guy potentially all the way up until expiration, almost certainly at least expiration week and potentially the final days of expiration week. So that's what you're signing up for. And so I just want to make sure that you are clearly aware of what you are indeed signing up for. And so, so that is NVIDIA. So thank you, DK. That's really great question. I hope that helped a couple of people. And so let's see, where are we at? Oscar Martinez. What's going on there, Oscar? Says, Dr. Jim, thank you for good humor. I don't know if you would call B- good. I mean, I wouldn't call it good. I'd call it, basically below average or slightly right around average. And so I appreciate you, Oscar. Thank you for putting that in the chat. So I will send you that cast that we talked about for you planting that comment right here. But man, I appreciate you so much, man. Let me go to the beginning, man. Look at you guys. Wow. You guys came to play, man. The YouTube algorithm is going to think this is something when it is indeed not too much of anything. So Daniel Perkins in the house. What's going on there, Daniel Perkins? Oh, I see you guys before I put my comment in there. I see Mark. I see Brian Dowdy talking about some banana daiquiris. I mean, after a day like today, man, you can bet your bottom biscuit we're going to be having some banana daiquiris. The AC is actually not working in the house. And so hopefully we can get somebody to come out to the house and kind of fix it. The thermostat's all messed up. And so, I mean, on August 1st in Florida, like we can't stay here. It's like a life hazard if we stay here like overnight. So we're going to find a little bar or a little hotel. I'll be down at the bar having some banana daiquiris. Like it'll be all good, man. I'm like, we'll turn this into a positive. This doesn't have to be a negative at all. And so, but Sam L, I see you. Mount Go Rail, I see you. I appreciate you guys. Daniel Perkins, hey, Dr. Jim. If you are down about your earnings trades, just remember you got the Red Sox deadline to cheer you up. Yes. No, nothing says, man, just kick me right in the kidneys like watching another Boston Red Sox trade deadline absolute disaster, right? They basically picked up Tony Batista and Tom Sosnoff. Like that's who we got. Like we had our sights set on like the stars. Like we were like, ooh, I might be able to get a little Liz, might be able to get a little Jenny. Maybe I can get a little Chris Vecchio on the team. But no, we ended up at the last minute, like, all right, give me Sosnoff and Batista. I'm like, this is brutal, man. This is 100% brutal. I was like, oh man, that's just not gonna cut it, man. But that's okay. I'll feel better tonight at about 7:10. So Brian Dowdy, hey Dr. J, I'm starting to believe I should do the opposite of you. I mean, hey man, I don't know what more you need. Like again, I don't know how much more you need. Like I don't know what's more consistent, the B- humor or the fading Dr. Jim clearing the way to financial independence for you. I'm not sure. It's close, man. Like it's very, very close. But again, I'm doing all I can do. Brian says your confidence on Amazon Fresh was through the roof. It's an amazing thing, man. Like it's an amazing, amazing thing. On the Tasty platform, can we see your total realized P&L since opening the account? Since opening the account? No, I don't have that. I mean, I have the number for this year, of course. And I will show you guys whenever you guys want to see. You can see today we're taking it on the chin, but we're hanging in there for the year, having a decent year. Again, I only trade live on the show. So should you use this as a representation of what you yourself can do? I mean, maybe as a reference point, I guess, but don't come at me when I have a down year because again, we're only trading live on the show because the instruction and the education that we get from that, I think is really, really valuable. And so that's why I'm not zigging and zagging around, NFPs and market opens and things like that. But I don't know the number. I don't know the number from the beginning of the account. It's probably around even. I honestly don't know. I mean, we've had some ups, we've had some downs, and so again, just don't come at me when in 2026 we're way down. And so let's see. But Joe's in the house, and Joe says, "Hey, Dr. Jim, what's going on there, Joe? I appreciate you, my friend." Andrew Cortado says he should literally just get a Starbucks drink for the show, sip on it, and slurp it. Do you slurp Starbucks? I mean, because I'm a hot latte guy. I'm a hot latte guy in August. I'm a hot latte guy in December. Like I'm a hot latte guy basically all year round. And so I'm not much of a slurping hot latte guy because it's too hot. And so I'm kind of sipping on that scissor a little bit. And so, but to get one for the show, yeah, I mean, that would not be a bad idea, especially on a month anniversary. And so happy month anniversary again to you all. But Autumn and I are going to celebrate. We're probably going to be sweating it out in the house, celebrating. And so, but I appreciate you there, Andrew. Emmett says, the short will need to cover before the close. Oh, Andrew Cortado, don't want to carry the risk into the weekend. Yeah, that makes some sense. But Sam says, Doc, our homeboy Bezos did not deliver. No, he did not. And we ain't getting any younger. No, we are not, especially our joints. That is correct. So when are we getting that for educational purposes only? His TRT prescription? Yeah, I don't know, man. We got to get the inside scoop, though. We got to get something, man, because, yeah, the old man joints. I mean, I don't know how old you are, Sam L. I'm guessing you're a little younger than me. I'm going to say you're 37, 38. If I could just get, just based on your commentary, I'm thinking you're right around 37, 38, maybe 39. I'm not sure that you've kind of slipped over into the, the four handle there on the old age. But yeah, the old man joints, man, they're creaking and cracking. We did some legs this morning, and we're going to pay for it tomorrow. We're going to pay for it tonight, actually. And so, yeah. Mark's in the house. Dr. J, what's going on there, Mark? Appreciate you. Grumpy Mike says, Dr. Jim, what did you order at Starbucks today? I haven't gotten it yet. And so, but my drink of choice is it's either Venti or Grande, depending on, kind of where I'm at in life. Venti, Grande, hot latte with oat milk, and 3 Splenda. That's how I do it. And Autumn thinks, how can you put so much Splenda in there? Because it's way too sweet. It's way over sweet. It's way over this. It's way over that. I'm like, listen, you're just not taking advantage of modern technology. Like Splenda is the best invention of the last 50, 60 years. You've got the internet, Splenda. That's a pretty clear one too, in my opinion. Like, I don't really know that can even be argued, actually. I'm pretty sure that's objective knowledge. Andrew Cortado says, yeah, I don't want to be short over the weekend. I also don't really want to be long, but I refuse to get out of any of my positions. Hey, doing nothing, if your position size, so both Andrew and Emmett, you guys got your own thing going on there, which is awesome. You guys should be buddying up and pairing off in these YouTube chats. Look, you got 700 people watching, and they're all wanting to do what you want to do in some capacity. You guys should be making friends. You guys should be forming communities. You guys should be doing whatever it is you guys can do. And then, take the conversations offline, man. Like, have the conversations online because I need them and the YouTube algorithm needs them. But then also continue those conversations, right? Because again, and this might be a little bit of a tangent, but it might actually be a valuable one. One of the things about trading that sometimes surprises a lot of people is how lonely it can feel. Like, it can feel very lonely. It can feel very isolating if you're the only one, like, in your network or in your group of friends, family that's doing this. And that's where and why I think Tasty is so valuable. But even still, like, if you meet up with somebody like online, if they happen to be near you, like geographically, then you just hit the jackpot because now y'all can get together and like do whatever. But even still, like getting on Zoom calls with each other, like, just sharing ideas back and forth, like you guys can go even further, like Emmett, Andrew, like whoever else. I just think that there's, such an opportunity for you guys because you're in a room, a YouTube chat with 700 other people that are trying to do exactly what you're trying to do. And some people are trying to do it one way and some people are trying to do it the other way, but you guys can all learn from each other. You can learn, you can grow, and you can hopefully get better. So I'll get off my soapbox now. But I'll find another tangent in the next 12 minutes. Don't you worry about that. And so let's see, Brian, I did the opposite of Dr. G on Amazon. His confidence was way too high on Amazon Fresh. On Amazon Fresh, yes. Emmett is in the house. Yes, Andrew Cortado. Let's see, Brian. I went long on Apple. Not doing well for me anymore. Yeah, you and me both, my friend. Miko's in the house. Dr. Jim, we said NFP was going to be the end of time. And I don't know what you would call this, but this is pretty end of time-ish, in my opinion. It nearly has been. I'm not sure we can survive whatever reports come out next week. I think we've got like balance of goods on Monday. I think we have the balance of goods forecast revision estimate coming out on Monday. And listen, guys, I've been trading. 2007 is when I started. I've seen a lot of economic data points. This balance of goods number that's coming out on Monday has never been a more important one. There has never been a more critical and imaginary economic number coming on down the chutes than the balance of goods that comes out on Monday. It's either Monday or Tuesday or maybe the following week, but whenever it drops, it's going to be unlike anything you've ever seen before. And so you've got the weekend, you've got 72 hours, like wills, estates, like, obviously, lineage lines and heirs and all those things. I would get all that stuff tidied up in the next 72 hours because you may not get another chance. But Mark says, break down or break back up? The $1 million question. Again, yes, it is the $1 million question. And if I knew, I wouldn't tell y'all. I would just ghost y'all and go trade that information myself in some, remote location. And so Brian Dowdy, long Reddit, did well for me on my short put. There you go. Let's see. The marching band guy next is smiling. Marching band guy. Yeah, I don't know about that one. YJ says robot apocalypse is upon us. Yes, I think it is. I think it 100% is. Mark says, Mark's taking it. Ed Bickford says, Dr. J, you called it. Did I call it though? Am I allowed to take a victory lap? Allow me to proceed with said victory lap. So, so you didn't hear it anywhere else. Everyone else is bullish. Everywhere else in the whole wide world, even Tom was bullish. Even Tom's like, he's got all kinds of long shares. He's got all kinds of long futures now. I'm like, that's how you know we're getting close, man. Like, that's how you know. They flipped the grand poobah. Oh, yeah. We're getting real close now. And so, yeah, I mean, this is a pretty big move lower. I didn't really think, 500 points in the NASDAQ was kind of necessarily on the docket. But markets moving, things change, man. And again, it's one of those things where like take this morning's NFP print. This is, I joke about it, whatever, but this is not the first time that we've had an NFP print very similar to this one, right? Where the previous revisions were like significant. This has happened many times in the last 12 months. And the actual jobs number this month looked okay. Like it missed consensus, but it wasn't like that crazy. It wasn't like the market was expecting 150,000 jobs and it lost 100,000 jobs or something like way off the mark, right? Now, again, with the revisions, you can make the case that that's exactly what happened, whatever. But my point is, this type of report has happened many times in the last 12 to 13 months. And many times, what does the market do? It just shrugs it off. It just proceeds like nothing ever happened. Maybe a couple of blips on the radar, like around the drop or whatever, around the actual economic data point print. But then it just resumes its upward trajectory. It just shrugs it off like nobody cares. Not a care in the world, right? And so today it finally latched onto that. And so what's the story? The story is the NFP sent it down. The story is it was the jobs number that sent the market lower. And the point I'm trying to make is it's always obvious after the fact. Like it's story and direction, right? It's always story and direction. But here's the funny thing. The story isn't clear until after the directional move has been made, which doesn't help anybody, not a lick, not an iota, right? But that's where most of financial media goes. You can ask Dylan. He had to do it for his career for however many years he was at, he was at CNBC. It's like the story and the direction. It's like you find the story to attach to the move after said move. And that's the narrative. That's kind of what gets people all drummed up. And that's what gets everybody all fired up. So anyway, I digress. Again, we're digressing off of digressions at this point. But let's see. Scramble Everything says, whoa, we are still alive after the NFP print. Good to see you all and Dr. Jim. I give credit to the LMT hydration that saved us. So I'm on about a 2 LMNT ration per week now. Autumn said, listen, I'll give you 2 per week. I said, I'll take it because I thought I was getting 0, so I'll take it. I actually went ahead and burned 1 today. And so and this just started today because it's August 1st. It's a new month and stuff, right? And so like budgets and like whatever, it's a brand new month, right? And so I was like, man, I'm going to burn the first one today. And so I actually already burned a citrus earlier today. I didn't even save for the show. I meant to take some of it with me to the show, but it's so good. It's so amazingly delicious that it found a way to make itself empty in like 30 minutes. And I'm like, I got nothing left. And so we've already burned 1 LMNT, but sometime next week, I'm going to get a second LMNT, and I might even smuggle in a third one, as long as you guys don't tell Autumn, and it can be our little secret. And so let's see. Scramble Everything says, here come the P&L Open Bros. Yeah, I'm trying to beat them off, man, but they're vicious, and they're relentless. Like, I get screenshots, get emails, get people coming by the house. Like, bro, let's pull up that P&L Open. I'm like, dude, it's a Saturday. But let's do it. Let's take a look at this together. And so, yeah, they're really something, man. Let's see. Emmett Bryan. Brian says, I think your SPX butterfly makes up for all your earnings trades, though, Dr. J. Yeah, I guess so, at least this week. And the SPX butterfly is, I'm just laughing about the P&L Open Bros coming by on Saturday. But it's the SPX trade, that's kind of like an earnings trade, right? Like if you do an SPX trade for a binary number, right? Whether it be FOMC, whether it be NFP, whatever. Like I think that, that is treated very similarly to an earnings trade. So even though it's not an individual stock, it's kind of the market writ large, it's the same type of thing. And so let's see, Samuel, watching the doc with smart popcorn sprinkled with Splenda. Yes, that's what I'm saying. Trading gains, 0. Calories, also 0. Yes. Earnings gains, that's correct. Although Splenda does have calories. Google it, man. It's got like 3/4 of a carb. Like, per Splenda packet. So you got to get the liquid Splenda. If you want to get like true 0 calorie, I don't know how they're doing it. But when they made the Splenda into liquid form, I mean, you could just drink it if you're really that hungry, but I've never gotten to that point. But the liquid Splenda is 0 calorie, I think, but the packets, you got about half a carb per packet. And so let's see. Mark is at home trying to pass a kidney stone. Oh man, I'm sorry to hear that. Man, I'm really sorry to hear that, Mark. I really hope that it finds its way out sometime soon so you can find some relief. Man, that's tough. That's really tough. Lincoln says, great. Now you tell me. Opposite of the follow page trade. Now you tell me. Well, Lincoln, welcome to the show, man. I'm so glad that you are here. I'm so glad that you are here. I don't remember you popping into the chat before. So, man, you are in a good spot. Like the network, my show, all the other amazing shows. Like, man, if you want to actively, take a stab at your portfolio, like you're in the right spot using derivatives. Okay. But guys, back me up in the chat. I need the core position to show up. I need you guys to show up big time right now. I've been saying this for months, maybe years, that you need to be doing the opposite of me. And so when you see it on the follow page, there should just be like an opposite button that you can click. There should just be like a mirror image button that you can click. And so that you guys see it through the lens of the opposite so you don't have to do the conversion in your head. And so just know, Lincoln, and everybody else for that matter, whatever you see on the follow page, do the opposite. Whatever you see on the follow page, do the opposite. Now, if I do something neutral like a strangle, that's actually strategic. So, okay, that might make some sense to tail along or whatever. But if I'm directional and if I'm feeling super good about it on the show, that's your cue. Like, that's your sign and your signal that, all right, I need to be on the other side of this trade if I'm serious about making money. And so, but thank you, Lincoln. Thank you for being here, my friend. Scramble Everything says, has that candle been confirmed? As a real print. This is what I'm saying. Or are we still blaming the VIX interns? I mean, I'm not blaming them. They're interns, man. They're supposed to make mistakes, right? But we need to get the official tweet out of VIX HQ. Like, does this print count? Like, I don't know yet. Because sometimes they go back and retroactively say, well, that one didn't really count, right? And so like the one last August, which was about a year ago, almost to the day actually, that didn't count. But let's see. Mark says his back started hurting yesterday, and then morning dropped to my knees. Oof, man, I'm really sorry. I really hope that you find some relief here pretty soon. Yeah. Let's see. Stanislav says civilization is done. Yes, I think it is, especially if it can't handle a 450-point drop in the NASDAQ off of all-time highs. Like, this is almost 200 basis points off of all-time highs. And so I would have to assume that we are pretty close to the end here. Let's see. Oh, we got some people chiming in to help Mark out. That's good. Rancher, Emmett, appreciate you guys. Let's see. Soul Train popping in with an Omaha. Yeah, maybe. But we're helping out, man. This is good, clean assistance that we're offering up here. So I don't know that the Omaha is needed. Margin Walker, what's going on there, Margin Walker? What up, Dr. J? My neighbor left the gate open and my dog got out, but I was able to lure him back in with a tasty treat and only missed 5 minutes of your show. I think I'll put the dip on the spoos. I think I'll buy the dip on the spoos. Yeah, famous last words right there. But it looks like it may have worked. And so nice job there, Margin Walker. Chris Anderson getting absolutely crushed this week. Lost on 5 out of 5 earnings trades. And the vol expansion today is just killer. Woof. Yeah, it is, man. And I mean, you see it here on the show. Like when it comes to earnings trades, they can be very, very, very streaky. And for myself, I mean, back me up in the chat. If you guys have seen the show for a long time, you know that this has happened. I'll go on streaks where I hit like 7, 8, 9, 10 in a row, right? And that raises my career batting average from like 170 to like 185. So it's obviously, much needed. But it can be really streaky with earnings. Very, very streaky. And so just remember, Chris, earnings, they're fun and it's engagement and it's, all this stuff. But it's like, man, is this going to be the meat and potatoes? Like, is this going to be the oatmeal and peanut butter? Like the foundation? I don't think it should be. Right? I think it should be around the edges. I don't think it should be, especially not now that we have market volatility that is so, it's picked back up significantly now. And so remember that, if you get caught selling a bunch of volatility when the VIX is 14, 15, then you get caught with your hand in the cookie jar. And it's like, well, when it expands, you can kind of be caught in the lurch, which is kind of the situation that you find yourself in right now. And so just use this as a bit of a teachable moment for yourself. That's like, all right, this is why I need to be patient when volatility is low. It doesn't mean don't do anything. Like, I respect the fact that you want to do some things. And so maybe that's where earnings come into play. Maybe that's where some other strategies come into play. But you want to keep a lot of capital ready to go. So when the volatility does spike like it is today, then you have a chance to put on some new positions. And so just a couple of thoughts that might help you out a little bit. Let's see. Sparky Dog, now I can't go to Best Buy or eat at Chipotle, order from Amazon, or even use my iPhone. What to do? You're going to have to talk to a person, is what it sounds like to me. You have to bring another human into your life. I know, it's brutal. Like, I hate to be the bearer of bad news, and I'm not sure I could have given you worse news today, but you're going to have to actually socialize with another human, right? You don't want to do it. I don't want to do it. But based on your own comment, it's the only strategy. It's the only thing left. And so that's what you got to do there, Sparky Dog. Andrew asking about the year-to-date P&L. There you go. Boom. There you go. So we're up a little bit. And then, man, I got to go. I got to get you guys to Jamal. I'm already done. Man, it's crazy. We got a couple extra long shows coming up at the end of next week, though. 8, 7, 8, 8, we're going to be extra long, so definitely come back for that. But Ash, I see you, man. I see you guys in the house. Man, I appreciate you. Wanderaz in the house. I'm just scrolling now, just randomly. Man, I appreciate you guys. Weiss in the house, man. You guys are amazing. And so if I missed you, please come back on Monday if we have a market on Monday. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, train them heavy, and stay generous. We'll see you guys on Monday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Oh boy, it is a scary, scary market. And I tell you, we are not sure where things are going. But you know who's here to help me? Former techno disc jockey, Julia Spina. Julia, how you doing today?
I'm surviving, man. I was on the morning show. My brain is not used to being up that early. Always fun, though. So I'm just hanging out. How are you?
I'm good. I'm good. You know, chilling as usual, watching markets just be set on fire, which actually is fine with me. I really, until I just added a couple of trades in the last hour or so, but I was like 90% in cash, bro. Like,
Yeah, you mentioned that this morning. Yeah. I'm like, on a day like
yeah,
today. Oh, man. Haven't checked back in, though. Anything in particular that you're watching other than just the whole market?
I'm watching Twitter. I'm watching all this stuff fly around about Trump firing the head of the BLS. I am watching stocks just drop.
No, but I mean, other than that, no. I mean, actually, we'll get to it in a little bit. I did put on a couple of trades, and I'll talk about it. But other than that, I mean, what it's been. I was out for like 2 weeks. Things were a little, well, in a personal note, I mean, my mom had a surgery. I went there to check her out. Told the people who were watching yesterday, appreciate all the kind words from you people and emails. Thanks a lot. And so usually when I'm out, I just kind of close a bunch of stuff, and that way I don't have to think about it or worry about it too
The
much.
peace of mind.
Um,
You don't have to be freaking out on an airplane trying to connect to
Yeah, you
United
know what I
Wi-Fi
mean?
and not being able to do it. Not that I'm speaking from experience, but
Yeah, that's a rough position to be in for sure. Yeah, I mean, it worked out fine, but I also wasn't really interested in putting on anything really substantial prior to today. I mean,
prior to
markets.
today, yeah, now all bets are off. Actually, they're on,
Yeah.
but
Yes, actually, they're on. It was just a little, I don't know, the markets were continuing to go higher, which is fine. I mean, I think that's great. But I guess for a medium term a volatility portfolio, there really wasn't anything to trade. You know what I'm saying? Like there was no IV ranks, substantial ones. I'm certainly not the type to sell earnings. Matter of fact, if anything, I buy earnings. So, and that actually a couple of trades worked out in that regard. Reddit and for solar for earnings, those were nice. But yeah, there just really wasn't much interesting. And I think today is the first day of a couple of days going forward where things just might get really interesting.
yeah, interesting's a word.
I like using it a lot. I use it all the time. Do you want me to use a different word?
I use it like too much actually. I think I need to swap it out with something.
Fascinating.
Intriguing.
Well, I mean, yeah, I guess that works. Let's pull up the platform. Take a look
Take a
around.
look,
See what's
y'all.
going on.
Sorry, I'm distracted with my own platform as well as we're talking. I'm pulling a Tom actually.
You are pulling a Tom actually, and it's really weird. It makes me I don't know what to do. I don't know what to think about it. I've never seen anybody who just looks at their own platform while you're talking and then comes back. Yeah, but that really doesn't make sense what you said.
Calling me out, bro?
No, not you. That's just
Call me out like that? You can call out Tom, but you're gonna call me out like that?
I call him out about it all the time. I love to do it.
I feel very attacked right now.
If you
Tom
notice,
attacked me. Man, he was being cranky on the morning. Not cranky, but he was attacking me. He didn't like my SMA indicators that I use.
that
Very
was
upset about that.
that was too funny. By the way, when we were all on, and you said, "Yeah, I'm looking at the general macro market." He almost lost his shit.
On my last nerve this morning, on my very last nerve.
Yeah, that was such a knee slapper. Oh, too funny. Oh man.
God forbid we're talking about interest rate risk. There is a Greek for it. It's worth talking about. Whatever.
You asked, what am I looking at?
Yeah,
You know
what
what
you
I
looking
did?
at that's not the whole market, which is mostly what I'm looking at.
I just decided to. What I love to do in times like this is sort of flip things on their head and go to like a FinBiz and look around and look at the names that are down the most on the year, and then maybe put on a couple of trades. I'm usually interested in that and see if there's going to be a bounce back effect. I did a couple of zebras, so I did one in UNH. UNH has been getting rocked. It's obviously we've seen the drop off. I'm well aware we could have a little bit more carnage this week or over the next few weeks, maybe, because I think I mentioned this today on This Week in Stocks. I know there's a situation where Trump is trying to get a lot of the medical companies to cut prices. Um, I don't exactly know the full effect of how this is going to affect this company. I don't really care. I just look at this stock. I'm an options trader and I see this thing's gotten rocked and I'm making a play to see if it's going to bounce back.
What I found very funny because I remember seeing that come up. It's like this is the scenario where we're gonna like ask nicely, like, hey, could you please drop drug prices instead of doing something like maybe heavy-handed.
Yeah.
All the
Well, why
things.
would you? I mean, you don't think that's that's going to be heavy-handed though. He's asking them now, but come on, you know what this is going. It's the same deal with the tariff stuff, right? Like potentially going, saying you're going heavy-handed at first and then coming back in a different way. I mean, that's just how he works. That's the art of the deal, Julia.
The art of the deal. I am uninformed on the art of the deal. And with some of these companies really being on their butts the last, honestly, couple of years, in some cases since COVID, I'm curious how price controls are going to impact them. Lilly though has surprised me, to be honest.
That was one of them that got mentioned too. I wouldn't be surprised to see this thing take a little bit more of a haircut down to 500 or something.
It's had some chop the last the last year, basically year and a couple months. But if you look at it long term, it's actually held levels better than a lot of its competitors.
Yeah, but none of these things are safe, man. I mean, at this point in time,
nothing is safe, just point blank, period. Yeah.
No, these guys aren't safe, especially he's going to ask them to cut prices. I mean, dude, $700 for a healthcare stock, means you're making some cash. You're making a lot of money. And let's just face it. It's not out of the question for them to take a little bit more of a haircut if they're going to end up having to cut prices. So, yeah, this is not one of the ones on the list. Is obviously an expensive stock, but you're right. This stock has kind of held its own.
Had some chop. It does have earnings coming up next Thursday, so potentially a little bit of spice in there. Pfizer as well on Tuesday if we're talking about pharma names. We got Novo Nordisk is on Wednesday.
Also mentioned, yeah. This one also was mentioned, yeah.
Oof, yeah. Because
this was my big play going into early 2024.
Was it really?
This was actually a play that I was long, yeah. With the mentioning of, with all those drugs or whatever, Wegovy and all of those, and this was just on the horizon, and it was just on the roll, and I got long it for a while. It worked out great, and then towards the end of last year, things were not that great. Let me see, 3 years. Let's go weekly. I was interested in around here, December of 2023. And I think that's when the fever pitch was happening, where it was you were starting to see more of the commercials. People were talking about it more coming out of the pandemic. People might have put on a little bit too much pounds. And so people were a lot more interested in these drugs. And this stock was taking off. And I think I got long it somewhere in January in my long-term account, held on to it for a while. And then, literally the top was June last year. Then it dropped with the rest of the market in July. And then it was a slow downturn. I think I pitched it definitely at a loss somewhere in November last year, I think.
I see your SMA. I see your SMA indicators on this chart.
Yeah, I use them all the time. What?
I'm not going to say that again. I already got yelled.
Look, the thing about SMAs is that they do identify areas. I've seen this so many times. Again, I worked on a prop trading desk. I worked when we were looking at volume, and you could see certain areas where the market just completely freaked out, either up or down after something hit certain levels. You just see it. And I think they just identify greed and fear pockets. Do I pin my whole entire hopes to a trade based on SMA? No, but I use it for sure. It's a nice little market.
I look at it as well. Yeah, because I'm like,
but you can't. You were trained not to. You can't.
I know. I was a baby bird that betrayed. What? My whole thing is for me personally, making directional assumptions is pretty much a crapshoot, right? You're kind of reading the tea leaves, trying to make the most informed decision that you can, but it is a crapshoot. So any piece of information that can help you make that decision, you have to make a directional assumption. There's no way around it. Even neutrals also, right? You just have to make a directional assumption. So for me, the SMA indicators, especially over 45 to 60 day time frames, I'm not gonna say it because I'm not gonna get yelled at. Pop us into the studio and be like, "What did you say?"
No, but that's a good point. Let's talk about that. Making a directional assumption is definitely a crapshoot. The best you can do is give yourself a little time. Even here, I know people have seen and heard about zebras and whatnot. I typically would not do a zebra this far out. It would probably be better to do maybe September, let's just say, for example. But this thing is been absolutely rocked. And I just feel in order for me to get any traction on the trade and for it to potentially work is to put it on a day where the market is down. People are going to eventually come in to buy. I actually don't think it's going to happen on Monday or Tuesday. I think we're still going to be kind of shaken from this. And I think if you give yourself some time on the horizon just for this thing to work, then the crapshoot is a little bit better for you, right? 77 days. For you to tell me that this can't be up
25% over the next 77 days, I feel like that's possible. At least I'm giving myself time, right, for the sentiment to change. Because right now the sentiment is really negative around UNH.
Yeah. I just always go neutral.
Glad you agree. Great.
What?
That was simple. I said, I'm glad you agree. It's great.
Of course I agree. I definitely wasn't checking my position.
FI is one that I saw. This is one I also saw. Pfizer, it's down pretty big as far as like names on the S&P 500. Ooh, look at that. I didn't even realize that. On a 3-year weekly, it's touching the 200-day moving average. Huh. Nice. That works. This is one I did in October. Zebra as well. The 130, 135.
Yeah.
Playing some bounces.
77 days and a little bit long term. What about what is Amazon doing?
I looked at that one too. It's still getting rocked. I did look at that one. You can see I even have it queued up.
I saw it was down like 8% pre-market. It's down a lot pre-market, like 7-8%. And I'm like, oh, this could be an interesting post-earnings play. Was kind of expecting that. But like, yeah, Tom's like, no, Vol just gets crushed in this underlying just pretty consistently. And he was right. Apple, though. Apple, I think, still has a little juice left.
Yeah, I'm interested in doing one in Amazon. I'm holding up. I did like, this is what happens a lot. I'll do like, especially if I have cash and I get on a sort of trade that I like, I'll do it like 3 or 4 times and I don't want to overdo it. So I've already done like 3 of these, I think today, maybe 4. I'm stopping here, but this is definitely next to my list in case we have more down days coming up Monday, Tuesday, or something next week. This is the next one on the list for sure. You mentioned who else for earnings at Apple?
Apple.
This stock, I'm interested in this one too, but
oh my God, the reversal was I thought earnings would be enough to prop it up. I was very surprised. It reversed like right after the market opened pretty much. I was very surprised by that.
Yeah, I didn't really think it was going to on earnings. I just didn't see how it was possible. There's just no new product stuff. Nothing's interesting about Apple. And if we're still talking about tariffs, they're still in the crosshairs, right? Because they still produce a lot of stuff overseas. So I don't know, Julia. I'm not sure this thing is going to move for some time.
It had a strong earnings report though.
Did it?
It was up a pretty penny pre-market. I don't remember how many pennies, but it was up pre-market. It's been a long day. I have actually been up since 3 o'clock in the morning.
Why?
I haven't time adjusted from Portugal, so like I'm just.
Oh yeah, wait. How long were you there?
A week. Well,
how was
more
that?
like 8 days.
I hear it's beautiful there.
It was gorgeous. Yeah, so much seafood. I was talking about this on air, like during the show with Vanetta, but I'm like, I wore athletic gear, which was a mistake. It was like way too hot, and I'm like, I need to get some of this nice Portuguese linen. You know, it's breathable, it's light, it covers you up from the sun a little bit. Great. I couldn't find black linen anywhere. It's beige, it's white, and black linen. The only stuff that I at least found, and I went in a ton of stores. It was not like 100% linen or wasn't made in Portland. I'm like, what? So I just kept the athletic gear on and dealt with like a heat rash instead of wearing white. That was my line.
Where latitude wise, what like U.S. states is it equivalent to? I'm just trying to figure out weather.
Probably DC.
DC. Oh, okay, so you were like, okay, so yeah, you were definitely heat wave-ish.
It was heat wavy, yeah. Sun there is very intense. The sun there does not play. I didn't even have my base tan on. It was not good.
What was your was it mostly seafood? That was your favorite? What was
I
your
ate
favorite
seafood
spot?
for every meal. I had sardines,
For real?
a lot of cod, oysters, mussels. The mussels were too big. I've never had mussels that were too big before, but these were like uncomfortable to eat. Not my mussels. I love being swole.
Uncomfortable? Why?
So like, there's an art to eating a mussel. Mussels are like, they got a lot of pieces. Like it's all kind of, there's a lot going on in a mussel. So it's really, what?
No, go ahead.
Okay. So the mussel is really the vessel for the sauce. You get a nice like chorizo broth or like a white wine garlic situation with lemon. And so there's an art to eating a mussel with like a nice scoop of sauce. But if the sauce to mussel ratio is off, if it's off, you're doing a lot of work to eat this mussel and it's not fun.
Meaning like there wasn't enough sauce?
there wasn't enough sauce and there was just too much muscle. I'm like, I don't want to feel
muscle,
this
yeah.
much muscle texture. It's a lot.
I knew I was gonna regret thinking more about that. That's I get it. Yeah, I mean,
Too
it sounds
big.
like they were big muscles and sauce. See, now you see when you hear it, it sounds funny, right? Like it's
I have very, very fully realized thoughts on this. I've thought about this more than probably most people. Think about food just too much. I think that's my problem.
Were you in? Damn, I used to be so great with geography. What's the capital again? It's like Porto or something. What's the capital?
Lisbon.
Lisbon.
If
Jeez.
Lisbon's not the capital, actually, I just assumed that.
What's the capital?
If it's not, it's Lisbon, yeah. And
Oh
Lisbon's
yeah,
a
it's
cool
Lisbon,
city,
right?
man.
Yeah, I think
I
it's
really like Lisbon.
Is that where you were? Is that where you were?
I was in
Yeah, most, like,
Lisbon,
the whole time or
Porto, Cascais.
Porto. See, I knew there was a Porto. I was
Porto.
thinking about that, but that's not the capital. Lisbon is the
Porto.
capital.
We climbed 85 flights in Porto, which is not
What?
that many, but it was a
Like the
lot.
wine? Oh,
Like what?
no, I get it.
Dude, if I drank that much, I'd get silly.
You would, yeah.
I would get very silly.
Yeah, you would.
No silly goosing around here.
Yeah, yeah, I know. Um, yeah, I said this morning I wasn't going to step in front of this sell off, and I mean technically I haven't. Like I haven't bought anything, spoos, or I haven't bought any futures or anything like that. But I figured, like I said, those names that I decided to do, like those Sebers on, I figured like those things are kind of at a low baseline anyway. If we do go lower, they'll probably go lower, but they might bounce back quicker because they've been oversold, right? Like, so
Yeah.
that's kind of my
But that's part of my problem with it, with like stuff like this happening on a Friday. It's a Friday. There's so much that can happen over the weekend. If it was like a Wednesday, Thursday, like fine, okay, cool, a little bouncy bounce, maybe a little contrarian play on a big move like this, but it's a weekend that we're coming up against. That for me makes it kind of difficult, more difficult.
Yeah, no, I agree. That's that's why I still am. I think I might have whatever the trades I added. I think I'm up to like, I think I'm up to like 25% buying power now being used. I am still
That is a
largely
healthy
out.
amount. That's a healthy
Yeah,
amount.
yeah. It's a good first stab at what's gonna happen. God, I gotta tell you, bonds are really moving today. I'm
Bonds
actually a
have
little.
been moving. Oh my God, bonds.
I mean, I had a call spread in here that really would have been killing it today, but I took it off the other day. Whatever. Wow. That's
Why,
bond
this
trade.
is why bonds give me trust issues. This is why it's on days like today. You're trading bonds, and oh man, yeah, bonds give me trust
Yeah,
issues, and it's because of stuff like this.
it's been hard at times. This is a big move, man. I mean, I don't know the last time we saw a big up move like this. Was it this day, maybe? Guess. It's a really big up move. Wow.
And it happened like quickly too. Like these like the move stabilized, but a lot of that was in like 15 minutes, 20 minutes, if I remember correctly.
Yeah, I mean, this is realistically, this is kind of somewhat of a scary day. I mean, this is a big down bar here on S&P 500, and then you see volatility going back to 20 right here, 20 in the front month on August futures, 21 on the next month. I mean, these are obviously big up bars, and then like we said, you got that coupled with bonds, big up bar. Yeah, this is not good. And then you see the dollar, obviously big down bar today. It is really confusing. I mean, it really is because like at one point this year, bonds and dollar were getting smoked. Sell America, also along with stocks. Now bonds is up, dollars down, but stocks are getting smoked. This has been a wild. This has been like 3 trading years all in 1 year so far. We're not done yet.
Well, and we had major earnings on top of it. We were already moving before these shenanigans, yeah. And then there were shenanigans on top of it. Twice.
Yeah, you're
One
right.
with a tweet and then with the report this morning, yeah.
So speaking of earnings, there's been Apple, there's been Microsoft, obviously Nvidia's quite a ways away.
Amazon was this morning. Amazon I think was yesterday, right?
Yeah, there's been Google, there's been Meta,
The ones
Tesla
this
already.
morning were like Chevron, Exxon. There were like a couple of those names.
Yeah, I didn't even look at these guys. Nobody cares about them. I mean,
what else? There were a bunch.
that was
Riot and
Coin.
MicroStrategies as well.
Coin and
Coinbase,
MicroStrategies, yeah, Coin rocked.
Wow.
Their earnings really were not that good. I don't know. I saw the number, not good. It was like 12. It was like something like the EPS was like 12 cents versus an expected like 120 or something. I mean, it was not good.
Not good. No bueno.
MicroStrategy, I didn't even look at them. What are they doing today?
MicroStrategy took a dump too.
These stocks are like the same now. So weird.
Right?
Same price, kind of. Well, that's not confusing. Yeah, this is quite the strange market, Julie. I mean, what do you do at times like this?
During these trying times, I think you have the right idea, keeping buying power restricted. So buying power, like, I think mechanically, right? Like we just scale up with the VIX, generally speaking. And cap it at 50% is generally the rule, although it depends a lot on account size. But the VIX levels themselves, like the raw actual VIX levels are a good, like the reason why we use those is because the relative volatility, right? Like implied volatility rank, implied volatility percentage, right? Like any of those percentile. They're very, very volatile quantities, but the VIX gives a good representation of like just where market volatility at a whole is at, obviously. So even though relative volatility might be high, market volatility might be low, and that's when expected ranges are tight, premiums are low, and you could have a big move, a big vol spike, a big move in like the equities, for example, like a black swan event that hits a lot of positions at once, which is why we generally have like lower capital allocations to short premium when volatility is low. And the VIX, even though we've had a pop today, 20.9 is right about its long-term average. It's at average, even after these pops, because we're coming out of a low volatility environment already. So I think, yeah, the move is like keeping capital conservatively allocated to short premium, being mindful that we are going into a weekend and a lot can happen in a short period, in that period of time. And like I'm kind of approaching it the same way, just kind of keeping conservative. I'm not comfortable kind of going directionally at this point, especially where we're at with like 49-day contracts. Like I'm not a little uncertain about that. So I was do like my wide condors, just throw on in a couple equities. Yeah.
If you had to sell a put spread or a call spread and SPY right now, which one would you want to do?
Put.
What was that?
I think I do a put spread.
You do a put spread?
What would you do, put or call?
I'd do a call spread. No, I'm just kidding.
Call spread?
No. I'd probably do a put spread. I'd probably do a
You
put
do a
spread.
call spread?
I was just messing with you.
Who's the silly goose now?
I mean, it's definitely more advantageous, I would say, to do a put spread. I'm just waiting. I do this at times, especially times like this. Like I want to say, I don't want to see the market go down more. My bias is always more long than anything, but for self-preservation services, for self-preservation, I would say that I'm just kind of waiting to see if it does do what I think would be the worst thing to do. And then I can put on more trades. Then I can feel better about it.
I get that, yeah.
I try to save myself. I mean, tell me, this is something that I had to learn for a long time. Like days like this, I used to be like, yes, I knew the market was going to drop. And before I know it, I just load up on like,
Did we lose Jamal?
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to University
of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh. I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean? I don't know. Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious?
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Well, hello everybody. Happy Friday to you. Tim Knight here. Very good day. This is the best week I've had in months and months and months. And that is from a shameless bear with lifetime highs just yesterday. Pretty cool stuff. This was a fantastic day. As I said yesterday, I was so short I could jump off a nickel. And I did that in the face of the highest levels in human history, 13 billion years of Earth. And this was the highest, never more expensive of a market. And of course, every analyst on Wall Street, from Jim Cramer on up, was saying buy, 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 and this is the beginning of a great bull market and so forth. No. No. When we finally bottom out a couple of years from now, then the likes of Cramer will say, gosh, stock should not be touched. But for now, the shills are still strong. We're also at the end of the earnings season. The party's over. This was an incredible week. There's so much happened this week. I literally forgot there was even a jobs report this morning. And that's a red letter day, the jobs report. But it was just like Meta, Microsoft, Apple, Amazon, FOMC, the August 1 deadline. And then it's like, oh yeah, this other major thing coming along. Next week is going to be a total snooze fest. There's like hardly any economic reports. The earnings is going to be companies you don't care about. So this was the big one. So we'll all need to rest up this weekend. I have my charts loaded and ready to look at. So I'm just a normal close today for you. So let's jump in and see what's what. I'm delighted to say that the words lifetime highs will not be crossing these lips today at all. We're having gaps all over the place, plunge-a-rooney. We may well, as of just today, entered a whole new era of this market because we've gapped down real hard. And so I have spent the day just tightening up stops. And spiders are a good example. Lifetime high yesterday, bearish engulfing pattern, a big gap down today. And yeah, that's what I like to see. Sock'em, rock'em robots. Actually, switch that. The diamonds here too, we were at lifetime highs way back last week. And you can kind of see, even before today happened, something was amiss all week long. Red on Monday, red on Tuesday, red on Wednesday, red on Thursday, and red today. 5 reds in a row. So I'm feeling chipper today. And we've got a nice gap down, and these gaps are very helpful, I think. And the other cool thing is it's being a very chart-friendly market right now. On my NQ and RTY charts, I have this long red line. And the NQ in particular, that was an easy one to explain. That red line was as simple as could be. It was the high from last December. And as we were plunging, I had my eye on that red line, and wouldn't you know it, it nailed it like almost to the penny. And then I covered like 60% of my cube short. And so for the moment, we have found stability there. We have sold off really hard. And they're, the bulls, God bless them, they're trying to bid things up again. But yeah, we fell off really hard, but we found stability. So I trimmed back the really big positions to some degree, but I've still got 30 shorts. It's just that I took some profits on the monster cube short and the IWM short. Speaking of IWM, here it is down about 2%. Gaps all around. I wouldn't mind a little bit of a rally next week to get close to that gap again and get really aggressive again. Although I'm pretty aggressive right now still, around 140% or so. But this is well off the lows. The emerging markets, EEM, have been falling pretty steadily here. It peaked last week, been slipping every day. Amazingly, the tariff, August 1 came and the tariffs pretty much went into place. There are some exceptions, like yesterday, there was yet again a 90-day extension for Mexico. So I haven't been keeping track, it's too bewildering, but I think China has a 90-day extension. Mexico has a 90-day extension. I'm not sure who else does. I mean, these are huge countries. Like who did we button down the tariffs with? Like Myanmar, we do $12 a trade a year with them, but the Mexico and China, a little more important than Myanmar, those have gotten multi-month extensions out. But we'll see if he tacos yet again. He has every time. He's got 100% taco power so far. We'll see if this modest dip in the market freaks him out or not, because he's not exactly a man of unshaking principle. Here's China. This has been going really well, down about 2% also. Shorted this one some days ago, have covered partly on this. Longer term, I think it's got plenty more to go, like 2 months from now, a lot lower than this. But baby steps. But this was a very, very good trade. So yay. The big events, of course, yesterday were we had the M's on Wednesday afternoon and the A's on Thursday afternoon. Amazon, Jeff Bezos, Lauren Sanchez's lucky husband. This was a big tumble. We're down over 8% on this, down about $20. The lifetime high was established in February, back here. And so that was around 240. We're around 215 now. Kind of a boring stock, no position at all. But the fact it's down is nice. It helps. Apple was up yesterday rather strongly. Not anymore. We're down 4.5 on this. I had covered that short. Shame on me, but not really. It's not that big a deal. I'd taken profits on that, but we've got a bearish engulfing pattern on Apple. And for those of you who read Slope, I did a long post about why I shorted this some days ago. And it was all kinds of reasons, not the least of which is that their best days are behind them. I mean, the momentum from Steve Jobs' genius persisted for years. But Tim Cook is a wonderful manager, like a logistical planner, but he's no visionary. And so what do you have? Things like Apple Vision Pro, total flop. No AI efforts to speak of. It's just like the iPhone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I guess they're just 17 now or something. That's it. It's just endless iterations. It's like, Sherwood Schwartz coming out with new sitcoms based on the Brady Bunch. So, yeah. What else is cooking? So, yeah, with all that, the cubes are down about 2%. People went crazy after Meta and Microsoft on Wednesday. I took advantage of that by shorting the bejesus out of the cubes yesterday morning. And, so lifetime high yesterday, but bearish engulfing pattern yesterday will continue to fall today. It may well rally, but that gap is our friend. If there's any bears beside me out there, I doubt it. But the gap is my friend because that's what I look to as resistance. That's the cubes. Microsoft did indeed have fantastic results on Wednesday, but look what's happened. People were falling all over themselves to buy it at the open on yesterday morning, Thursday. Look at what's happened since then. The entire gap is virtually demolished. It's almost entirely gone. So we've gone from, over 555 down to about 524. Huge red bar here, huge red bar here. I don't know what they're thinking. You know, yesterday morning, like, gee, Microsoft is a great thing to buy. Here are my dollar bills. Please give me a Microsoft share. Why? You know, this is not a hot new idea. It was a great idea in 1987, but it ain't that anymore. Bitcoin has been getting hit pretty hard. The pandering in Washington met with great results and terminated with a $123,000 valuation. Since then, you know, there's only so much legislation David Sachs can hurl at the world to prop this thing up. But we've gone from 123,000 to a $10,000 drop from there. You know, I say again, it's not like now it's over, it's doomed. No, but it sure is looking shaky. And if this thing cracks, I would say, to be generous, 109,000, and I've said that level many times, you've got a serious problem on your hands. In fact, just as I eyeball this trend line is looking kind of shaky. Yeah, frankly, we've broken out already because this automatic trend line, if we anchor it here, has already broken it just a skosh. So that's worth keeping an eye on. Yeah, we have broken that small uptrend, but if we break 109,000, it's a little bit of a bigger deal. Ethereum, on the one hand, I have been watching this trend line and it did hold it back for a few days, then it burst above it. But since then, we've definitely been selling off some of that because this line here turned out to be more important. We had this top and then a matching top and then a lower high. Okay, are we hung here? What's going on? I hope you can still see me. Okay, my mouse has stopped mousing. Well, that sucks. I can't zoom anymore. Okay, well, you'll just have to use your imagination. I can't zoom. Hopefully nothing else has gone wrong. Hello, I hope you're still with me. Suffice it to say that dashed line that you see, if you use your binoculars, is a triple top. See, I've been using computers since 1980, and they still don't have them right. You know, 45 years later, can't even count on a mouse. Relatedly, SBET, which is SharpLink Gaming, this was a company that went, as I've said a week or so ago, they decided that we are going to be the strategy of Ethereum. So Michael Saylor's got Bitcoin, we've got Ethereum. And that works great. What's interesting is the volume on this. The price ascended sharply, as did the volume, as it rallied. And then it's been withering away ever since. So kind of interesting phenomenon there that the market really gobbled up this idea, but it sold off most of that rally. I cannot believe this. Jiminy Cricket. Okay, Coinbase. It's got both hands now, okay? Can't do anything with them. Coinbase is falling pretty hard, almost 17%. It was it was very high a few weeks ago, but it's really been selling off hard. So that, I believe, was another earnings report last night. So yeah, all kinds of mayhem going on with tech stocks. Ooh-wee, I've got 2.5 minutes left. Pick up the pace, Tim. All right. Gold is doing great today on the heels of this jobs report, which was a shocking jobs report. Not only was it weak, but they revised the past 2 months by like 90% down. So the job gains they reported for 2 months in a row, they were really like 10% that much. So people's jaws are on the floor about this one. So gold's doing very, very well. The front month's up $54. So GLD doing great. Oil not doing so great, which is great by me because I got a lot of energy shorts. USO's down 2.71%. I wish I could zoom in to show you a little more closely, but take my word for it. XOP down hard 3.5%. And at this great distance, we can see the reversal top there in pink on the right side of the screen. And XLE, which I'm also short, also down about 2%, slipping lower. So yeah, all in all, a couple of individual ones here, which I also have positions on. There's ConocoPhillips, COP, which is down about 2.5%, and then Halliburton, Dick Cheney's old company, down even harder, about 3 2/3%. So energy quite weak there. Now here is the real shocker. I've got 7 symbols left, but I got to just spend a moment on this, and we'll probably just run out of time. Things are so crazy this morning that I didn't even notice this. This is FLR, Fluor Corporation, down about 30% today. I was short this. It plunged today. And I didn't even notice this until 35 minutes into the trading day because there's just so much going on. But I based this trade on that simple blue line you see at the top of the chart. My perception was that represented resistance, and with a huge rally we'd gotten, it was an opportune time to short it. It isn't often that I short something like the next day it collapses, but yay, once in a lifetime, right? So that was a nice one. How should I wrap this? Because I have no time left at all. We'll just jump to the bottom. There's a Russell 2000. So this is kind of the last man standing as far as having anything that's even a semblance of a decent pattern left. Everything else is a big fat mess. I'm still short the IWM. This is down about 2%. And as I say, we're past the cool part of the earnings season. We're past the heavy economic data. It's going to get kind of light, but people are going to have to figure out what's going on. We're not at lifetime highs every single day. It would make a certain amount of sense to have a bit of a counter-swing rally on Monday. Maybe Trump will drop Myanmar's tariff or something. But if that happens, watch those gaps, because I think that we may have well seen with this turn a shift in the market that we can enjoy for a month or two. Well, Mouseless Tim will say goodbye now. I don't think I'll be able to click leave this, but hopefully they'll kick me out manually. So anyway, thanks for your time and attention, and I'll see you on Monday. Have a good weekend. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room? Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called, oh my gosh, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tom versus Tony. Round one. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
We just ripped higher up to 50 points, and I just thought we would stay there, but
the thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and it has been a bloodbath of a day today. We've got E-mini S&P 500 futures currently down 110. We were down as low as 62.39, so about another 20 or 30 handles from where we sit right now. Been very weak for the entire session of the day here. NASDAQ down 484. You got some big moves underneath the surface. Meta down 25 and change, reversing about half of that move that it had. Microsoft as well, down $9 and change. NVIDIA down $4. You got Tesla down a handful too. Apple has reversed the entire up move that it had on earnings. It's now down $4.50. Amazon as well, near the lows of the session. The big name tech stocks really taking it on the chin today. Amazon down 18 here, a little over 8%. The Dow and the Russell, no different there. The Dow down 597. The Russell down 45. The Russell and the NASDAQ, the weakest of the group today. The Russell weakness, kind of a surprise with bonds. Bonds up over a full point, almost a point, or a little over a point and a half now, would suggest maybe helping a little bit the Russell, given that rates would be coming down, but that is not the case today. Oil selling off, Ford/CL down $2, 67.24. You have volatility futures at the high of the session, or just about 2020 up over 2 points here. $2.15, a little over 11%. The VIX itself, 21 and change. When was the last time we saw that? It's been a little while there. Gold and silver both at the high of the session. Gold's up $63, silver up 33 cents. Bitcoin at the lows of the session as well, down 3,200 on the futures. Spot is down 1,600. Risk off, vol up. Scary, bonds up.
Scary.
Gold, silver, precious metals, flight to safety, maybe. What say you?
I think it's interesting. I mean, the most interesting thing today was really the interest rate probabilities.
Yes.
Completely flipping. I was calling for no rate cuts. And I was looking good. I was looking really good on that. The probability of staying.
We're moving in your favor.
Rising. And now, just like that,
yes,
there's an 82% chance we get a 25 basis point cut in September now. A 60% chance we get another 25 basis point cut, which would bring us to 37540. And then December, the highest probability, 47%, that we get yet another 25 basis point cut. So now all of a sudden they're pricing in 3 cuts.
Yeah.
So those of you out there looking to refi your mortgage, maybe you get a little opportunity. But yeah, market's selling off. You had some weak earnings in Apple and Amazon.
Yeah, those were the
Coinbase down bad.
Coinbase was another huge move, down $60 on what looked like good numbers relative to expectations, down 15%, a little bit more than that. Roku as well was another one that had earnings. It's down 14. You haven't been able to hide even like XOM and CVX, which are, we don't trade a ton of. They're both down as well. In terms of stuff that's moving, I like to use the S&P 100 watch list here. To the upside, it's kind of like these piggy biotech type companies, like pharmaceutical companies, healthcare companies, Eli Lilly, ABBV, you have Biogen. Most of these are kind of not the most frequently traded in our wheelhouse, but you got Costco in there, you have Home Depot, Lowe's is in there, Pepsi, making a little bit of a comeback here, McDonald's, we're all going to be poor in the recession, so McDonald's going to be benefiting there. On the downside, it's all the big name tech stocks. Amazon, I guess UNH in there as well. It's been a frequent addition to this side of the watch list. Oracle in there, Meta down a handful, CRM, PayPal. Been a painful day.
Yeah.
But a little bit of a pop in volatility, which is good.
Yeah. We've
been waiting for this. We've wanted higher volatility. We had the opportunity to put on a number of trades today. That's kind of the benefit of keeping some capital dry. You get a little bit of a down move, take off some of the hedges that we had today, and then you redeploy.
Yeah.
A lot of the money put spreads, maybe some call diagonals, naked puts, if that's your flavor.
Yeah, I had a bunch of trades that I took off today. So speaking of hedges, I had a downside put diagonal in SPY.
Yes.
So that was a 630, 615 long put diagonal, long September, short August. Closed that for a $200 net winner as a hedge. And those are the kind of trades that I like to put on, we like to put on when you can, because volatility was so cheap prior to this move, you could put on a 15-point wide diagonal for $8. So threw it on, got fortunate with this move to the downside today for that one. Someone in the YouTube chat calling out Costco, one of the only stocks up today in a decent way. That one I had a 1,000 strike call calendar. So I was long September, short August. That was a $215 winner. M6E, that was a beautiful trade posted by Katie yesterday from Trade Ideas. One contract in M6E, that was a $170 winner. So that was a huge move.
And those are only $1.25 a tick.
Yeah.
Is how they move. So, this is a huge move. You got 140 some odd ticks. You didn't close it at the exact top. But, that's a hell of a move right there.
Yeah. And then just removing risk, continuing that kind of sentiment, I had a gold iron condor in the V contract. Short options at 3,200, 35.55, and that was 15 points wide. So, that was a $255 winner.
There you go.
And onto the losing trades, I bought back. So I had a love call vertical spread.
Yeah, that stock has gotten myrtleized, as the creator would say.
Destructo beamed.
Yeah, it's down about $10 from the high, 38 to 29 in 2 weeks.
Yeah. So I had a 32.5, 35 call vertical spread in September. I paid like $1 for it. So that was just a really small trade playing for an upside move. But now that LUV Southwest has gotten obliterated, I was able to buy back that short call at 35 for 20 cents, which now just leaves me with a long call with a net cost basis of $1.30 in September. So if we get a $2 rally here, it'll be a small winner, considering the 30 strike is currently trading for $1.40 in September. And I would assume that 32.5 would appreciate to that value if you got a $2 rally. Apple and Amazon, I both played to the upside. Those are losers. Coinbase, I played to the upside with butterflies. One of them was a 0-day. That's going to expire worthless. I had a 14-day one. That one is basically worthless right now, but there's no reason to take it off. So maybe there's a huge reversal there. But yeah, Amazon and Apple both call diagonals in September, and I'll see what the market brings us next week. But as of right now, I'm not doing anything with the short options.
I just scoopied my Reddit call spread that we put on this morning. Reddit had earnings after the close yesterday. Stock opened up well past the expected move. It got as high as today. The high of the session was 196, so it's about $10 off the high. We sold, or I sold the call spread during our show today. Just took that off for about $50. That was a nice little win there, but we got some big movers. Next week, we do still have some earnings. We did get the bulk of the earnings this week. I think like 35 or 40% of the weighting of the S&P 500 was reported this week. And then obviously you had some earnings last week as well. But next week, some interesting ones. You have Palantir, which is on Monday after the close. You also have HIMS. I know a lot of people have been trading that. That stock is currently 62 and change is down $4 or so today, about 6%. So you got HIMS. Those are on Monday after the close. On Tuesday, before the market opens, you have Pfizer, Caterpillar. After the market closes, AMD, SMCI. A lot of people are trading that. ANET is in there, Snapchat. Uber is on Wednesday before the market opens, along with Shopify and Disney. Those are some big names over there. You got AppLovin on Wednesday after the close. INQ is there. Duolingo is there. I know some people trading that thing. And then Thursday, it's kind of over with. Eli Lilly is in the morning there. VST, another kind of hot stock. TTD, Rocket Labs, SMR, which we've been trading a little bit. So there's certainly going to be some earnings to take advantage of next week as well.
But yeah, some big moves here. I also have the Reddit Iron Condor, I forgot to mention, the 170, 180 short call spread that's in the money, coming down from the highs today.
Yeah.
But that's just another one where that's why I go to the monthly cycle or the next monthly cycle from earnings. I've got 2 weeks left.
A little bit
Currently,
of a
it's
buffer.
a loser, but if we get a 10-point sell-off next week or the week after, it'll be a profitable trade. So we'll see what happens there. Still have the SPX Iron Condor that's now out of the money. It was 100 points in the money 2 days ago. But yeah, we'll see. We'll see if we can get some continued moves here in our favor. But yeah, love to see the vol pop for some two-sided action. It was getting a little boring seeing the market just grind continuously higher.
Yes, I would hope this isn't a straight V bottom. You could have Taco this weekend though.
Good.
It could be a Taco, although I see he's going after now some of the labor statistic peeps, because that I think was some of the reasoning, I use in quotes, for why the markets were down today. But yeah, there's always that part of the equation of getting a little bit of a taco over the weekend.
Yeah. There was a resignation in the Fed Reserve Board, Adriana Kugler.
Ooh, oh no. They will be missed.
So that was today. Maybe that's tied into it too. Who knows? Either way, two-sided action today.
Yes.
For those of you that were looking for it, you finally got it.
Yes. Do you have anything on in oil?
I do not.
The oil volatility, if you type in the symbol, it's OVX:CGI in the platform. Volatility spiked up above the 40 handle here. So it's up about 10% today. I know it's been a big down move, but it's been kind of choppy between the low 60s to 70 for the better part of the last month or so. So if you're looking for something that's not equity related, oil volatility is relatively heightened here. Anything happening on your IBIT front? Bitcoin down 2%, spots down 2%. IBIT, most liquid of the ETFs, 36 IV rank, so you are seeing a little bit of juice get pumped in there. Does that interest you? If you didn't have a position on it, it should interest you.
Yeah, for sure. I'm already in there. I've got the 65.75 strangle in September. Short call. I sold it or rolled into it for $284 in premium. It's now trading for 80 cents. Could roll it down, but I would rather be bullish here still.
Okay.
And I don't want to have short delta ever in here. So I'm just going to leave it, see where we're at. But I have the ability to roll the 75 down to the 70 or even move it to a straddle. I've got $2,161 collected so far. So break even down at 45 in IBIT and up to 95 as it stands. So we're looking good in terms of the ability to really do anything I want in here. I can be as aggressive as I want to hedge. I can be as aggressive as I want to give myself delta because it's behaved so well so far this year. With really it hasn't moved outside of this like 10-15 point range, and we've been collecting premium that reflects 25-30 point range
via implied volatility.
Yes.
I mean, that's what implied volatility tells you exactly. So your realized volatility coming well inside it expected or the implied volatility, and so You take some tendies out of that.
Yeah. Question from the YouTube chat. Are you holding your TEM trade through earnings?
Yes, I have that short put. I did that in my Johnny Trader account as well. Here I'm short the September 50 strike put. Stock has come down pretty significantly from the time I put this on. I actually put this on when the stock was at 58 and change. So not just this move, but the prior day's session was also quite painful. If anybody's ever looked at or is looking for the, I know the Tom and Tony had mentioned on like last week, and E-minis are only down 100. I see some people calling for an SPX 6250, which is right where you're at right now. So I hope it sits there. Tom and Tony weren't sure of this feature, or at least didn't know that it existed, but you can see all the metrics of all of your adjustments on your trades. So like if you go back to the, I could look at, let me find one here. So I had this DraftKings position. So I'll pull up the platform here. On the right side panel, when you pull up your order chains here, it's this little button on the side. If you right click on any of the orders, you'll get this view market snapshot button. And when you click this view market snapshot button, and for those of you that have watched the anatomy of a trade videos that we do during our segments, we'll put these in there as well. But it'll tell you the underlying price at the time of that of each transaction that's on that order chain, as well as the IV rank. You can see the IV index, the delta of the position, theta, all that good stuff. So that's where that feature is. I know that they stumbled around that last week, so figured I would just put it out there for the peeps.
Yeah, it's a nice feature.
It is a great feature.
Do we trade differently in our IRAs? Not really.
Yeah.
I mean,
it's a little harder to trade in general.
Yeah, there's not really a reason to sell undefined risk in an IRA. You
can always buy a wing.
Because you can always buy a wing in an IRA. If you're selling a put, for example, you're putting up the same cash value as the stock going to zero, which is impractical. You can buy a wing for 5 cents. Even if it's like way out of the money, you can buy it for 5-10 cents and cut your buying power requirement dramatically and your risk, of course. So I would say that's the only change. From a diagonal spread perspective or calendar spread, it's the same thing.
Yes.
The buying power requirement is the debit paid, so there's no difference there. But yeah, I think you can, with an IRA, you can do a lot of the same stuff as a margin account or any other non-retirement account.
Yes, and to show that feature again, I see if people are like, oh, show me that. On the right side, so your right side gutter here on the order chain, so typically you have the overview section, you go to the order chains button, and then you just right click on any of these, any of the transactions within the order chains. If you have more of them, they'll be shown here as well. So you can see I have other trades that come through. I go 180 days, you can see them all there. So you right click and go to view market snapshots here. It'll pop out this window here so you can see everything for that stock in that order chain, and it lines up to each of the transactions. So the IV rank of the 48 strangle that I had was 42.5. When I made my roll out to September, it went down to 37.5. And then when I closed it, it was at a 30 and change there. And so you can do that for all of the different metrics that we have available there for your look back.
And the order chains do work for futures options.
Yes.
It's not straight up futures.
Yes.
So if you're trading futures options, you'll see it there.
E-minis down 108. More of the same here. It looked like they were going to catch a little bit of a bid or maybe a short covering into the close, but not so much here. NASDAQ down 480. You got the Dow down 600 and the Russell down 47. Everything else remaining pretty much the same. Volatility futures pinned at 20 here. You have bonds at over 115 here, up over 1.5 ticks here. 1.5 points, I should say. Anything else in your portfolio sticking out to you? It's been a broad base, just kind of bludgeoning.
Yeah.
Even the memes and the pig stocks and all the other, and the pig stocks, I mean, like, you know, these core weaves and Fig and Open Door. Only one that I saw really moving was Rocket Labs, which our very own Mr. Thomas from the research team, our research intern, is YOLOing calls in that.
Naturally. As the young guns do.
He's got to learn somehow, right? You know, I told him, I'm like, yeah, he's like, I'm going to lose, my account on this. I was like, well, you learned a valuable lesson. He's like, well, I've blown up 3 accounts doing this. And I said, well, third time's the charm. Third time's the charm. Hopefully this one will be it. He'll do someone a little more conservative there.
Yeah, I think the only one that could be a close next week is TLT. So I've got a call Zebra there, long the 85 twice, short the 88 once in August.
Nice.
So that's a scratch after today's move. So if we get a continuation, take it off for a small winner. But everything else is kind of in September, needs some movement or needs some decay. We'll see.
Yeah. What do you think for next week? You see more weakness? I mean, we're kind of approaching, as violent as this move is today, we are giving up, maybe 2-3 weeks of price action.
Yeah.
We'll take it. Yeah, no, we'll take it. I was trying to highlight that the sky isn't falling.
No.
It's painful.
Yeah.
If you've been leaning long. Especially if you started getting long recently, but it's not like the sky is falling. Do you think we get more of it?
I think so. Someone asked us on the YouTube chat, like, how do you gauge where you think the market's going to go? And yesterday we were saying, based on current implied volatility, there's about a 100-point move priced into August. Now there's a 160-point move priced into August because of the vol pop. So going forward, I would say if you're looking for a continued sell-off over the next 2 weeks, a practical sell-off that would result in a higher VIX, I think is
over 100 points.
Over 100 points, over closer to 200 points, I would say.
Yeah. Because once volatility expands, the expectation for price movements in both directions gets wider. And so you have to, for volatility to continue to expand, you need those prices, those realized moves to be outside that.
Yeah. So right now, August 15th, cycle in SPX, 160 points. So I would say if we get down to 6,000, you'll see the VIX pop even more. Maybe you'll see the VIX futures curve flatten out a little bit. But anything within there will be expected.
Yes.
So I would say, as it stands, if you're bearish, I would say I'm looking for sub 6,000.
Okay, there we go. And that doesn't mean, even if you have downside moves, it doesn't mean if it's inside the expected move that you're going to get vol to contract. It just means that, it's not going to have that big effect on volatility. If you have that kind of stair step lower, vol probably stays bid, but doesn't explode. It's not like those big vol events.
Yeah.
Going into the close here, I would say limping, but we've been limping all day today. E-minis down 104. You've got the NASDAQ down 460, Dow down 568, and the Russell down 45. Oil down $2 and change here. Volatility futures 1985. We got below the 20 handle. Maybe that's a good sign. Bonds up over 1.5 here. You got gold up 61, silver up 32 cents, Bitcoin down $2,000. Little volatility into the weekend. I'd like to see it.
Yeah, I saw Ryan buying some ETH.
Nice.
To the dip.
Yes.
But yeah,
that's a big move. I didn't mention that. 3,500. That's a big move. 10% in a couple days.
Yeah, and we're seeing a lot on the TastyFX platform. I'm seeing a lot of net change close to or at 1% or greater than 1% for some of these currency pairs. So lots of opportunity there as well if you're looking to trade some 2-week extremes.
Yeah, I forgot to mention the currencies. If you pull up DXY, the dollar index here, dollar giving up a lot of its move that it had over the last week or so here. Obviously, the euro was a big mover to the upside. You also had the Japanese yen, 6J, which is up a little over 2%, 2.25%, so big move there. Going into the close here, we got a minute left. E-minis down 107. I think we get a little bit more next week. That's
Feels like it.
that's my vibe on here. I think the 6,000 handle would be more than I would expect. I think maybe another 100 points or so.
Yeah.
Not all on Monday. It doesn't have to be all Monday, but I think you're going to see a little bit more weakness, especially if there's no taco over the weekend. You get the taco, then all bets are off.
Yeah. And I think, we've been talking about like what's really going to sell this market off. I think you need you needed a catalyst. And
you got one.
You got it.
Yeah.
So,
yeah.
Especially with the interest rate flip so drastically. Some people in the YouTube chat saying rate cuts for the wrong reasons, which historically have not been good for the market. So yeah, maybe we get the two-side action. I would love to see 100-point moves in either direction every day.
I agree. And that's the bell. E-minis down 110 going into the close. NASDAQ down 480. Everything down between 1.5% and 2%. Very, very weak session today. We'll see if that continues into next week, but thank you all for hanging with us. We're going to take a quick little 90-second break. We'll come back and do this all over again next week as we always do. So we'll see you then. Peace.
Peace.